Watch Bloomberg Tech every weekday.
Only
in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were gonna probably just hit it, and so far we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is gonna get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that that by itself was good enough to beat the quarter, but it's bad for the product, it's not good. After that, I'm never doing that again.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's the countdown to the market open as we bring you the first trades across Europe.
we'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
We have a global phenomenon of pretty challenging fiscal situations.
We have to keep our eyes on the economic reality of the global economy.
The bigger macro picture is getting more confused.
There is already a giant question mark around what data should we be using. Growth has been pretty solid, and actually there's scope for it to reaccelerate in 2026.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning to you all. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now, and your scores look like this. All-time highs on the S&P 500. 7-day winning streak, the longest daily winning run going back to May of this year. Let's see if we can make it day 8 on the S&P. On the Nasdaq 100, just about unchanged this morning. Likewise on the Russell, small caps also at a record. In the bond market, yields have been bleeding higher over the last 24 hours, led by developments in France and Japan. It continues this morning, up by a basis point or two on 10s and 30s, going into an auction tomorrow for 10-year government bonds, and the day after we'll get 30s. The main event this morning in the pre-market, just this monster move we're seeing in a very small name, but an important one. Trilogy Metals up by more than 200% in the pre-market as the government takes a stake.
Knock, knock, knock. U.S. government on the door looking to take a 10% stake in yet another company. Obviously, it's very clear what this administration is going after companies where they can get access to these critical raw materials in a way to compete with China. The way they're doing it has some people unnerved, whether they want to say it out loud or not, especially Republicans in Washington, D.C. You could say this is national security, or you could say this is state capitalism. And there have been a number of instances already we've seen from this administration, and Trilogy is just the latest.
When you make deals as a private investor, you are described as being an entrepreneur, a deal maker. When you make those same deals when you're a government official, you will be accused of conducting central planning. And that's the criticism that will come with these kind of deals.
Absolutely. And the question mark is, besides this competition with China and getting access on these rare materials, whether you need it for supply chain, steel build out, the AI data centers, and everything the stock market is pinning their hopes and dreams on, is this question of what happens in 4 years' time, 8 years' time? And is there really going to be competition in this space if the U.S. government continues to just make all of these acquisitions in it? And does it mean that, are we going to get a sovereign wealth fund or not? And is it really fair that the administration is not being upfront with what they actually are doing? Are they going to make a sovereign wealth fund? Because they're not being explicit about it.
What a move on that stock, up 220%.
5 employees.
Wowza. In a pre-market right now. We'll stay on top of that for you. Coming up this hour, Dan Skelly of Morgan Stanley with Wall Street hitting new highs. Libby Cantrell of PIMCO as the US makes a push to win the AI arms race, and Kip DeVere of Aras with massive investments feeding the tech boom. We begin this hour with stocks hovering near record highs. Dan Skelly of Morgan Stanley saying tech bubble talk may be misplaced. He writes the following: when abandoning basic investing principles of diversification and risk management is never a good idea, the market's longer-term tailwinds remain intact. Dan joins us now for more. Dan, good morning. Good to see you.
Great to see you, John.
What are those longer-term tailwinds? What are they?
We're definitely seeing momentum in the economy. So the services sectors continue to hum along really strongly. The high-end consumer continues to push forward as well. And then, of course, the AI economy, right? We estimate that AI spending equated to about 100 basis points of second quarter GDP. So call it over a quarter of the economic growth is coming from this AI supercycle.
Is it just a handful of companies, or is it more than that? Because at the moment, for some people at least, the criticism I've heard from analysts that have come on this programme too, is that this is very circular. It's the same money just changing hands and going round and round. Is it more than that?
There's part of that, no doubt. I mean, you're starting to see leverage starting to be used as well to fund some of the investments. Prior to that, it had been strictly cash flow. So that's something we're keeping an eye on, John. But we're definitely seeing no end in sight in terms of the spending increases going into next year.
When John says circular, in my mind, I'm thinking of what's going on with OpenAI and NVIDIA and now AMD. But is it also circular to the point of the U.S. government, given the fact that they're taking stakes in a number of companies? And you talked about how AI spend is basically 100 basis points of GDP.
Yeah, and so it's an excellent question, Anne-Marie, and I guess the way to look at it, it's also the absence of a negative. Do you want the government to over-regulate things as well? And I think for prior years, prior administrations, we heard a lot about regulation across not just tech, but energy, financials, et cetera. And so, it's a question of which path do you take? And I think in many ways, looking at all the leadership and management teams of the leading tech companies partnering with the administration, it's probably not a bad thing.
If you want to have a hedge, and maybe you're just kind of getting over the gold rally and you had enough, what are you looking at?
Excellent. Another excellent question. So the one thing gold does not provide is income. And when you look at factors year to date in the equity market, it's been a momentum market. In many ways, it's been a beta and realized vol market, so a little bit lower quality. So what we're advising clients right now, particularly on the individual investor side, is look at some dividend yield and dividend growers. They've been out of favor, but if we get a little bit of a consolidation in the near term, they should be a decent hedge.
Let's stay on track of that. Let's just stay on that theme. What's the relationship at the moment between government bond yields and what's happening with gold? Because yesterday was an interesting moment. We had developments in France and Japan pushing government bond yields higher globally. And at the same time, the rally in gold continued because of the concerns of the governance issues in those countries. What's the traditional relationship and what is it now?
Yeah, typically rising rates should have been, I think, pretty solid for gold, should have been a positive correlation. I think in many ways, though, John, gold is taking on a lot new attributes and there's other inputs going into that calculation. Let's keep in mind that certain members of the Treasury Department and certain members of the private sector who went to Washington, famous robotics and car makers, were supposed to be fiscal hawks. And you've seen quite the opposite. Right, so there's this other big driver going on in terms of the deficit widening still on the back of the tax deal, and this is bullish for gold.
These are some things that typically central banks might want to slow down. It feels like it's very different this time. Mary Daly, the San Francisco Fed president, talking to Axios today, saying that ultimately the stock market would not threaten broader financial stability and that the AI bubble isn't a financial stability threat, even if there was one. Do you share that sentiment at the moment?
We don't see AI as a bubble, and frankly, one of the reasons for which is the earnings power of the leading companies continues to increase. So the Mag 7, as an important example, wears this interesting duality hat. as the biggest spenders, but also at the moment, the biggest initial beneficiaries. Mag 7 earnings growth year over year in the second quarter was up 28%. Rest of market was up only 4%. We think that nominal GDP did about 7% in the second quarter. So what that means is a lot of other companies are either taking it on the chin from tariffs and profitability hit, or they're just not monetizing AI enough as they adopt. And so at the moment, the earnings power is so strong still in Mag 7 in the leading AI companies that we don't see a bubble.
You like the banks. That's one of your top sector picks. Why is that?
We do. So we've liked the banks for well over a year, and that's been a winning theme for a while. But first off, we still think there's tariff P&L risk on the horizon for lower quality businesses that have supply chain risk. As a domestic industry, banks don't share that risk. Number two, capital markets have been recovering really strongly in the last 3 to 6 months. And lastly, I would just say deregulation, right? This is a sector that had been, per my comment earlier, pretty onerously regulated for 10 plus years, and we're seeing those fetters come off.
A lot of people like the banks now because of the Trump administration. Do you expect more consolidation as well when it comes to financials?
No doubt, Anne-Marie. So when you look at the history, anytime you go through big structural shifts, whether it be 1980 savings and loan, whether it be 2000, the tech crash. So we've just continued to see this narrowing of the regional bank sphere in particular. We had something like 8,500 banks going back 30 or 40 years ago. Today, that's 4,500 banks. When you look at other developed markets, major developed markets like Canada, as an example, many fewer leading banks there. So we definitely continue to see consolidation in the regional banking sphere.
When investors say they like the deregulation push from the Trump administration, can you pinpoint exactly what that is?
Sure. One of the biggest levers is capital constraints. Right, so I think in the coming months and quarters, you're going to see more and more alleviation around capital, and that's going to flow back into what banks can do on the M&A front, no doubt, returning shareholder capital or just loan growth. I think, ironically, one of the things people have looked at is this winner-take-all AI spending environment and lost sight of the fact that overall loan growth is actually also improving across the rest of the economy.
Dan, just to finish on that,
sure,
where this growth has come from and what's funded it, I think is a really important piece of this conversation, particularly with regards to the CapEx spend. Where is the cash coming from? And what's the difference between previous infrastructure cycles of decades gone by, how debt-financed it was before, relative to what we're seeing now?
Sure. Not only was there debt and equity issuance in the late 90s, but many of the leading tech spenders themselves did not have as proven business models. So let's just not forget for a minute that Mag 7 is really FANG plus 3. And so this has been a winning cohort for 15 plus years. It's super hard to bet against this group of leading companies because they typically have the capital and the talent and the foresight to just go into whatever the next big theme is, whether it was consumer-related technology in the 2010 period, whether it was certainly cloud 2016 onward, whether it's AI today, it'll be robotics next and quantum in the future.
They're pivoting hard, that's for sure. Dan, it's good to see you. Thanks for dropping by. Thank you, sir. Appreciate it. Dan Skelly there of Morgan Stanley. Equities at the moment recovering on the S&P 500, very close to all-time highs. We are on a 7-day winning run on the benchmark stateside. With an update on stories worldwide with your Bloomberg Brief, let's cross over to Lizzie Burden. Hey, Lizzie.
Hey, John. French President Emmanuel Macron gave outgoing Prime Minister Sébastien Lecornu 48 hours to negotiate with the country's political parties to prevent the country from falling deeper into crisis. Lecornu's task is to define a platform for action and stability for the country by Wednesday evening, after which Macron will decide his next steps. Elsewhere, the Trump administration is exploring options to sell some of the federal government's student loan portfolio. Politico reporting that discussions have taken place among senior education and Treasury Department officials to sell parts of its $1.6 trillion debt to the private market. And the Air Traffic Controllers Union's reminding workers that failure to show up for the job could lead to termination. The warning coming after Transportation Secretary Sean Duffy pointed out a rise in sick calls since the government shutdown. Air traffic controllers and TSA officers are expected to work until they receive back pay once funding is restored. And that should be my brief. John.
Lizzie, thank you. More from Lizzie in about 30 minutes' time. Up next on the programme, Mind, Baby Mind.
President Trump, when he said drill, baby, drill, he also was mine, baby, mine. And this mine area up there, we got copper, lead, zinc, gold, silver, gallium, germanium. So rich in all of the minerals that we need to win the AI arms race against China.
That conversation up next with Libby Cantrell of PIMCO, live from New York City this morning. Good morning.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Live from New York City, welcome back to the program. Equity futures on the S&P 500 doing okay. A couple of things to look out for. Some programming notes. Later on this morning, about 15 minutes from now, Lisa's sitting down with Kip DeVere, the Aris Management co-president on the AI boom. Look out for that and look out for this. Jamie Dimon, the CEO and chairman of JP Morgan Chase, joining Tom McKenzie over in London, 11:40 Eastern Time. That's a few hours from now. I mentioned the broader market, 7-day winning run on the S&P 500, pulling back just a touch, not even by 0.1%, virtually unchanged. Also on the Nasdaq 100, likewise on the Russell. There's a big mover out there. Let's talk about it. Under surveillance this morning, mine, baby mine.
President Trump, when he said drill, baby, drill, he also was mine, baby, mine. We've got to get back in the mining business. China controls 85 to 100% of all the mining and refining of the top 20 critical minerals. And in this mine area up there, we got copper, lead, zinc, gold, silver, gallium, germanium. So rich in all of the minerals that we need to win the AI arms race against China.
So here's the latest this morning. The White House taking a 10% stake in Trilogy Metals, securing energy and mining projects in Alaska. With the latest, here's Bloomberg's Tyler Kendall. Hey, Tyler.
Yeah, hey, John. So this company has these mining claims in a remote area of Alaska. And importantly, the deal comes in tangent with President Trump reversing a Biden-era decision which blocked something known as the Ambler Road project. This is a controversial project that would build an access road to this mineral-rich mining district in Alaska. And as part of the deal, the Trump administration is going to invest $35 million for Trilogy to conduct exploration in this area in exchange for a 10% stake in the company. Now, the White House says that this is a bid to try to loosen China's grip on the critical mineral supply chain. And if we look at the data from last year, China was responsible for about 70% of global output when it came to rare earths. But this really does continue a more hands-on approach when it comes to industrial policy. Just look at the deals made so far this year by the Trump administration: a 15% stake in MP Materials, a 10% stake in Intel, a 5% stake in Lithium Americas announced last week, not to mention the so-called golden share when it came to the Nippon acquisition, plus that agreement where NVIDIA and AMD were going to give the U.S. government part of its China chip sales. Now, the White House says the common theme here is that this all has to do with national security interests, even as critics say that this could hurt competition and give an unfair advantage. John, importantly here, Trilogy is a Vancouver-based company. The Canadian Prime Minister, Mark Carney, is set to visit the White House for his second Oval Office meeting today, and no doubt this is going to be on the agenda.
He might have some thoughts about that, I'm sure. Tyler, thank you. Tyler Kendall in Washington, D.C. Here in New York, Libby Cantrell of PIMCO. Libby, good morning.
Good morning.
MP Materials, Lithium Americas. Here's another one. Some of these names I've never heard of until this morning. Trilogy Metals up by more than 200%. What is the overall objective here? What are we trying to do?
Well, I think that a couple of things here. One is that this does exemplify that this president really does support industrial policy. He has no problem, obviously, picking winners and losers. That is very much a divergence traditionally from the Republican Party, who have always preferred for the private market to function and to pick winners and losers. I think second is just that this underscores the importance from a national security perspective for the president, right? He is doing all these things in the name of the AI race, in the name of competition with China. And third, I think, just importantly, is that there is a limit to all of this, right? I think that, we find that our clients get confused with these, sums of money being kind of bandied around. And Congress, usually has to actually allocate the money for these types of investments. They're sort of dipping into other reserves or what have you. But for big, significant investments, you'd have to go to Congress. So these things are sort of nibbling around the edges, right? $35 million. But I do think it obviously underscores that this president's very comfortable with, again, picking winners and losers.
Do you think this is the road to a sovereign wealth fund?
Again, I mean, not to get sort of process oriented here, but you would actually need Congress to really facilitate a sovereign wealth fund, even with tariff revenue, right? I think there's a lot of confusion about this, that even though the tariff revenue is associated with a policy that the president obviously has put forward, how those monies are allocated are in the discretion of Congress. So, if Congress decides with the president that they want to, create a sovereign wealth fund, that might be something. But really, for something to be fulsome, to have it function in the way that sovereign wealth fund does, it would need Congress. Obviously, we're also in a deficit country, so I think just editorializing that may not make the most sense.
Whether it's Trump, whether it's Biden, what are the limits of masking whatever you want to do with national security?
Yeah, I mean, the statute, as you know, is very broad. Obviously, the president has used Section 232 of the 1962 Trade Expansion Act for many of his tariffs. That is in sort of this realm of national security. I think you could, quibble around, maybe the national security importance of, let's say, lumber. So some of these things that he's putting tariffs on are trucks. He's using this statute. But the courts historically have given the president wide discretion. So I do think that we will continue to see him using at least the pretense of national security. Whether some of that gets litigated, I think it's, open question.
I'm uncomfortable with central planning. I'm sympathetic with the objectives, but uncomfortable with central planning. I also think you have to be careful what you normalize when you're in power for when you're not. What happens if someone else is in control of the dials and they have other ideas about what to invest and what to take stakes in?
This is what a lot of conservatives who are a little bit more traditional, I would say Romney Republicans, are concerned about. What happens 2028, for 8 years' time, when you have maybe a Democrat in power that actually likes this idea. Brian Gardner on this program today, when we were debating, is this state capitalism, national security, he said, let's come out and call what it is. It's socialism.
The Trilogy metals up by more than 200%. We joked earlier this morning that the asset management wing of the White House is open. The government is shut down. Let's talk about the government shutdown. A question we've posed continuously over the past week is whether this is different, whether the normal rules apply, whether you hit the inevitable pressure points and ultimately we just reopen. Is it different this time?
Well, it does feel different in that people feel very comfortable with their own political positions right now. So Republicans seem very comfortable sort of digging in, and they're claiming that they've already done their work, right? That the House has passed the sort of straight line funding bill, gets them to November, some time to work out the appropriations bills. On the other hand, Democrats who've historically supported those sort of straight line funding bills are claiming that, this, in addition to funding the government, they need to obviously address ACA subsidies and some other things. So I think that is the thing that feels different about this, is there's not really kind of hair on fire, get all the members back and work to get a resolution. Obviously, the House is not back in session. They may not be back for the foreseeable future. We'll see about what Speaker Johnson does next week. So there seems to be a calm and a comfort that I don't think has really existed in the previous shutdowns. Sadly, I've done this enough, so I've seen enough shutdowns. And usually there is more of a kind of an alarmist sort of flavor and more of a sense of urgency.
Does the alarmist flavor come when people don't get paid?
I do think, so October 15th, that's an inflection point that we pegged for our clients. That's obviously when whole swaths of the government won't get paid, but particularly, active duty members of the military. So is that going to be the inflection point? Potentially. There also could be some wiggle room with the money that Congress has appropriated to the Defense Department. You could see, I think, President Trump trying to dip into that money to pay service people. So that date could come and go, and the government can still be shut down.
And what about the billions the farmers are supposed to get? When do they get them if the government is shut?
Yeah, I mean, that is also an open question. And again, not to be so negative Nancy here, but you really do need to go to Congress in order to allocate that money as well. There's some fungibility in terms of the ag budget, but really for the amount of money that the president is talking about, $50 billion for farmers, you would have to actually have
the money's not there right now in the fund.
The money is not there, and you need Congress to actually allocate that. So I think that, the big question, though, for our clients, for our traders, is this a market event? And of course, I think that, the conventional wisdom, which I think is right, is this is not really until it is, right? This is not going to be if this is just a 2-week shutdown. But once you get kind of past that 2-week period, of course, this is a full shutdown, meaning that they haven't passed any appropriations bills. So, BLS is shut down. Obviously, the Department of Defense is shut, and what have you. And that is when I think there is a risk of you get this sort of non-linear economic effects, right? A tenth of a point being shaved off of GDP a week, not necessarily a big deal. But once you actually have a prolonged shutdown, you sort of have sunk costs in terms of lost GDP activity. So that is, I think, again, maybe a caution to this very bullish market is that if this is prolonged, which it looks like it could be, then you could get into a territory where it is different because we actually haven't had a full shutdown ever past 16 days.
You mentioned the government being comfortable with the situation right now. I think Wall Street is too, because basically, given all the ones you've seen, it's growth delayed, not derailed. Now, key question this time around is whether the furloughs are actually firings. Do you think it is going to be one versus the other?
Yeah, and I think that is obviously, this labor market, as you all very well know, pretty fragile right now. So could this be yet another shock to that labor market and could sort of tip over? Our economists are saying that there are a lot of indicators that look sort of pre-recessionary, not necessarily that we're going into a recession, but if you just look at sort of the fragilities behind some of these labor market statistics, that it's looking sort of similar to 2008 or 2000. Will the furloughs turn into firings? I think that's a sort of an open question. I think there's a political dynamic there. I'm not sure this really reads well for the president. So, is this more bluster and the kind of reality is much different? That's what I would sort of suspect. But again, kind of open question. And if this goes for a long time, then I think that kind of all bets are off, honestly.
That would certainly change how people think about the economic impact, the consequences.
Absolutely. And so far, the threat hasn't worked in terms of, I'm still watching the senators from Virginia and Maryland, and they haven't caved yet. And they're the ones that are going to be hurt the most when it comes to a government shutdown.
Libby Cantrell of PIMCO, it'd be good to see you.
Thanks so much.
Thanks for dropping by. Thank you very much, not just on the government shutdown, but also this major move in the pre-market of a name that many of you, including myself, had never heard of, Trilogy Metals, in a pre-market up by more than 200%. We joked a few times, we mentioned it earlier on this morning, that there's going to be a lot of investors out there going through all
자, 연설로는 연준의 연설 11시에 보스경제 연설 예정되어 있습니다. 11시 5분에는 보우먼 부의장의 연설이 예정되어 있고요. 11시 30분 스티븐 미란 그리고 12시 30분 카시카리 총재 연설이 예정되어 있습니다. 자, 금일은 추가 리스크 방지를 위해서 프리장 대응 이어나가도록 하겠습니다. 본장 대응은 진행하지 않도록 하겠습니다.
Welcome to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg. Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Lizzie Burden outside Windsor Castle, England, and this is Bloomberg.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Not used to this. Over the last week, things have been pretty electric, particularly yesterday morning. This morning, unchanged, bit snoozy. Equities going nowhere on the S&P 500, likewise on the Nasdaq 100. Let's get you an update on some single names, your morning movers. Here's Yahara with more. Hey, Yahara.
Hi, John. NVIDIA has the Midas touch. Shares of Iron are soaring 8% after the data center company said it secured new multi-year cloud contracts to deploy NVIDIA's Blackwell chips. And in a sign of strong demand for those chips, Iron says that customers are signing deals before those chips are even delivered or installed. Meanwhile, moving on to Intercontinental Exchange, this is the owner of the NYSE
자,
shares.
지켜보고 진입 사인 드리도록 하겠습니다. 조금 더 지켜보고 진입 사인 드리도록 하겠습니다.
Into Polymarket, the platform, of course, is known for allowing customers to bet on yes or no questions on everything from sports to pop culture, and famously was known for correctly calling President Trump's 2024 election win. The Wall Street Journal reports a deal could come as soon as today. And Oscar Health shares are rising 6.75%.
자, 3계약, 계약수 3계약 운영하도록 하겠습니다. 자, 매수 진입 사인 드립니다. 매수 진입 사인 드립니다. 주니까 187.75입니다. 187.75입니다.
For the company. So these latest developments offering investors a bit of hope. John?
Yahara, thank you. Thanks for the update. More from Yahara in the next hour. On our radar this morning, President Donald Trump briefly signaling he's open to shut down negotiations before walking that back and saying Democrats must first reopen the government. Both parties remaining at odds over healthcare subsidies. Elsewhere, Trilogy Metals soaring this morning on news that the US will take a 10% stake in the Canadian minerals explorer. It's part of a more than $35 million investment to secure critical energy and mining projects in Alaska. And finally, the Trump administration also planning to unveil new support for US farmers struggling with tariffs and trade disputes. The potential bailout package could be worth more than $10 billion, but it's not yet clear where the money's going to come from.
Libby Cantrell from PIMCO was dead on about this. They could draw from a fund they have, but the reports that only about $3 or $4 billion is left in that fund. So to get the remainder, if you want to give the farmers a $10 to $15 billion bailout, which likely they're going to need, given the fact that China has not signed up for any cargoes, you're going to have to go to
자, 그리고 장전 주요 뉴스미 속보는 올려드린 링크 통해서 확인해 보시면 될 것 같습니다. 자, 공매도 잔고 비율, 기업별 뉴스 등등 여러 가지 업로드해드리고 있으니 해당 부분은 올려드린 링크 통해서 참고하시면 될 것 같습니다.
The transportation secretary saying you are expected to show up for
매수
work.
진입권 실시간
No more
대응
sick days. You have to be
이어나가도록
at work even though the
하겠습니다.
government's shutting down. When you start to have delays on flights, that was the pressure point in 2019.
Do you hit the inevitable pressure points and this story ends? Is it the same story as usual, or is it ultimately somehow different this time? That's the latest on the government shutdown and other stories too down in Washington, D.C. Let's get you the latest on tech. AI investment very much in focus. Lisa joins us now from the Greenwich Economic Forum with a special guest. Good morning, Lisa.
Good morning.
Good morning, John. Yeah, here it is not a government shutdown. It's a beautiful morning in front of a beautiful waterfront, and I'm here with Kip DeVere, who's the co-president of Ares Management, which oversees almost $600 billion. And Kip, thank you so much for being with us.
It's great to be here.
I do want to start where John was talking about this idea of the tech build-out and how much private asset managers have been instrumental in that. I'm just wondering how much you are continuing to accelerate your investments into digital infrastructure, given that everyone is worried about an AI bubble. Are we investing too much? Are we seeing the fruitions of our money?
Sure. So we've sort of transitioned that business to be broader in its scope. Historically, we've been largely a lender to the space, so a senior lender and a mezzanine investor as well through our debt infrastructure business. We did a recent acquisition that you may be aware of a business focused on industrial logistics investing, mostly in Japan, but it's global, and they have real digital infrastructure development capability. So we've started to roll that out. We've done 2 completed projects now in Tokyo. We have a 3rd underway just on the outskirts of London. So we're getting more active on the development front. I think that the measured approach that we've taken getting into the market doesn't, frankly, put our investors at risk, right? Our goal is to generate great returns for our investors. So we think if you stay in tricky markets, i.e. hard to find entitled land, and then you're building really high quality facilities, which we think we are because we have an in-house team that came with the acquisition, it's pretty easy for us to find great leases from investment grade tenants like the hyperscalers.
Are you passing up opportunities that concern you? Do you see things out there that do worry you?
I think we're selective, and I think if you look historically in areas like this over the last 20 or 30 years, typically when this much capacity comes online, some of it at the end of the day is going to have to be marginal, right? These trends tend to lead to overbuilds in certain places, so I think us being selective and being measured in what we build is super, super important.
One thing that we've seen over the past 5 years is an incredible consolidation of market capitalization of the biggest asset managers, the biggest private asset managers. I'm thinking of the ones that you won't name, like Apollo and KKR, and of course Ares.
We'll happily name them. Yeah.
I'm just wondering whether you think this is the sort of path to follow, that you think the biggest are going to only get bigger and dominate the space.
Look, I mean, we've believed since the beginning, frankly, of the company that the more scaled platform, both in terms of diversity of asset classes, but also diversity of geographies, was a huge advantage, right? So we think we get better information, we participate in more markets, we probably do better due diligence because we have better access points. So I think the both investing advantages, but also the capital raising advantages are real, and you see that with the growth of Ares, with the growth of Apollo, and the growth of all the Blackstone, KKR, all these folks that have consolidated share for sure.
You just actually did see another record year for fundraising, and it feels like it's accelerating with respect to how easily it is to really get interest from investors. What's sort of been the tipping point? Where are you seeing that interest really coming from?
Yeah, I mean, we grew up raising most of the capital from the firm from institutions. So it was pensions, sovereign wealth funds, et cetera, and we've really diversified the way that we raise capital today. So I would say an increased focus on the wealth channel, for sure, an increased focus on what our insurance clients are looking for, because they're very challenged in a tight spread, lower rate environment. So it's just become more and more diverse, and I think as we're able to educate and offer access to investors that didn't have access to certain products before, there's just a lot of uptake from a new set of clients that are interested in what we can deliver at Ares.
How much is that going to be turbocharged by some of what's coming out of Washington, D.C. to open up some of the private asset management field to 401k accounts?
Look, I mean, I think our view is that it's probably a ways off for that to really provide.
조금 더 지켜보고 대응 이어나가도록 하겠습니다. 조금 더 천천히 지켜보고 대응 이어나가도록 하겠습니다. 현재 약수익권에 있고요. 조금 더 지켜보고 대응 이어나가도록 하겠습니다.
So right now, one thing that is another theme for the year has been American exceptionalism and this question of, is it still the best place to invest? And I wonder, as the co-president of Ares, whether you see the greatest opportunity in the United States or whether you increasingly are expanding overseas, that you see better investment opportunity there.
Well, I mean, so I think Holistically, we've been looking to expand geographically for a host of different reasons, just to give our investors more access points in terms of geographic diversification and asset class diversification. But to actually answer your question, I do think, despite some of the instability that people may feel here, that most of the investors that we see around the world are most excited still about investing in America.
It's one thing that we've seen sort of this idea that everything was going to fall apart in the first half, and suddenly we're talking about a reacceleration, and suddenly the M&A that everyone had been expecting is coming back online. We're actually seeing those deals come to place. How active has it gotten for you? I mean, how much are you seeing this in your business?
So, I mean, look, the first 3 to 4 months of the year were pretty rocky, particularly up through April, and that really slowed transaction volume everywhere. But I'd say in most of the asset classes that we're in, everything has rallied back to where it was pre-Liberation Day and even through that. So credit spreads are incredibly tight, whether you look at high-grade corporates or high yield or loans. The equity markets are obviously up through highs. The thing that we're most excited about is actually kind of a shift for folks that see maybe some of those markets as expensive into some of our real assets businesses. So the recovery in real estate, which we think is real, is offering a lot of opportunity for us to kind of play into the sectors that we like. We refer to kind of as the new economy real estate. So that's industrial, that's logistics, it's self-storage, it's multifamily. And we're seeing, we talked about it for a moment earlier, a lot of investment in the infrastructure space, whether it's traditional or digital.
How much is that predicated on the idea of Fed rate cuts, or how much is that completely independent and a sort of secular bet on some sort of shift in the economy?
I don't think it's particularly, reliant on rate cuts. I think rate cuts help equity more than it helps credit and lending businesses. So our own view is the yield curve is probably over predicting cuts. I frankly think the economy here is pretty good. And policy, while it's a bit restrictive, doesn't seem to be slowing too much down here in the States. So transaction activity is picking up, and valuations, as I mentioned, have recovered in almost every asset class. So I do think we'll see a slow decrease here in rates to try to provide some relief and keep the economic growth that's slowed growing. But my own view is I don't think rates are going to go down as quickly as maybe you're reading about in the newspaper.
So I have a feeling I know how you're going to answer, but what concerns you more? Some sort of downturn in the next 6 months or some sort of reacceleration in inflation?
The latter. The latter. I mean, I think we see the economy is good, although the growth has slowed. And that's partially as a result of rate increases, by design to obviously try to deal with inflation. But I think that the real scary moment is that if you see a reigniting of inflation and the Fed has to really dramatically rethink their policy, which I think has been one to leave rates where they are / reduce them a bit, which is obviously going to accommodate more growth and more rise in valuation.
Kip DeVere, thank you so much for being
Thanks,
with
Lisa.
us. This is really fun. Let's do it again.
Appreciate it.
This is Kip DeVere, co-president of Ares Management. John, I'll send it back to you.
Lisa, thank you. Great work as always. More from Bramo in just a moment, so stay tuned. Let's get you an update on stories elsewhere this morning. With your Bloomberg Brief, let's cross over to Lizzie Burden for more. Hey, Lizzie.
Hey, John. Representatives for Israel and Hamas have begun discussions over a deal that would free all remaining Israeli hostages in exchange for thousands of Palestinian prisoners. US President Donald Trump is pressing Israel and Hamas to secure an agreement as the war hits the 2-year mark since it began. The talks are set to continue for a second day in Egypt. Elsewhere, Elon Musk has appointed former Morgan Stanley banker Anthony Armstrong as the new CFO at xAI. The Financial Times reporting that he'll head up the finance function for both xAI and social media platform X. Armstrong previously worked for the Trump administration as a senior advisor to the Office to Personnel Management as Musk enacted DOGE cost-cutting efforts. And Ford is facing months of disruptions after a major fire at a New York aluminum plant. The Wall Street Journal reports that the company will likely outline the fallout in its quarterly earnings this month, and a large part of the facility will be out of service until early 2026. And that's your Bloomberg Brief. John?
Aluminium, aluminium. You see Lizzie there? Getting sucked in. It's easy to get sucked in.
It's very
All of a sudden it's aluminum, then it's sidewalk.
It's aluminum for you. You're, you're fully sucked in.
I've been here 10 years. I'm fully bought in. I'm not going anywhere. Lizzie, thank you. Appreciate it. Up next on the programme, neither party is stepping up to the plate.
Neither party is stepping up to the plate to deal with or grapple with the reality that the United States needs to endure a fair amount of fiscal reform to be on a path for long-term sustainability.
Up next, we'll catch up with the Connecticut Governor, Ned Lamont, from New York City this morning. Good morning. You're watching Bloomberg TV.
자, 현재 진입금 손절하겠습니다. 손절 사인 드립니다. 손절하도록 하겠습니다. 손절 후에 재진입 사인 드리도록 하겠습니다.
In case you missed it on Bloomberg Surveillance.
We heard from Restoration Hardware, and the RH CEO was on the earnings call dropping F-bombs. And I imagine a lot of people are having similar issues at the moment trying to sell furniture. You're at a different price point. What's your experience this year?
People have less money. You can say still recovery from the pandemic when it comes to inflationary measures. But then again, our line of business is really about human basic needs. It's about the bunk bed when the kids grow up. It's about the chair and table and so on.
Anne-Marie had one final question.
How are the meatballs? And you're lowering the cost of the meatballs,
so I am myself, I'm an intellectual vegetarian. I normally say down here I struggle. I love the meatballs. We actually are running today about 40% of our sales is actually vegetables and plant balls. And
자, 바로 신입 사인 드리도록 하겠습니다.
But the plant balls is a great exception. But meatballs is part of our legacy, so there you go.
I love your honesty.
Don't miss Bloomberg
자, 매도 진입 사인 드립니다. 진입가 181.00입니다. 181.00. 매도 진입 사인 드립니다.
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound.
자, 매도 진입권 실시간 대응 이어나가도록 하겠습니다. 자, 매도 진입 사인 드렸습니다.
Insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Jackson Hole, Wyoming, and this is Bloomberg.
Spent the whole commercial break taking abuse. You finished now.
There are some British words that I just find so ridiculous that you should just say the American English version, like the word schedule. It's not schedule.
I say
it is
schedule.
I know.
I say
so you're
schedule
fine,
all the
but you're
time.
one of us now.
Okay, thank you. Thanks for adopting
Welcome.
me. All right. Equities on the S&P 500 just about unchanged. Likewise on the Nasdaq. Likewise on the Russell. Unchanged after hitting fresh all-time highs to kick off the brand new trading week. And believe it or not, we've not had a single down day for the month of October. Let's see if that continues.
I think it's called Uptober.
Uptober. Nice.
Yeah.
Is that yours?
No, I think that's people on Twitter.
Okay, I've not seen that one. Okay, that's a new one. All right, record highs coming into Tuesday morning. Under surveillance this morning, neither party is stepping up to the plate.
Neither party is stepping up to the plate to deal with or grapple with the reality that the United States needs to endure a fair amount of fiscal reform to be on a path for long-term sustainability. The shutdown is symbolic of a different problem, which is the dysfunction between the Republican and Democratic Party on resolving issues with respect to the budget of the United States of America.
So here's the latest this morning. Wall Street growing frustrated with Washington, pushing for fiscal reform as the shutdown enters its 7th day. Lisa joins us now from the Greenwich Economic Forum with another special guest. Hey, Bramo.
Hey, John, thanks so much. I am here with Governor Ned Lamont of the great state of Connecticut in this Uptober. Is that what Anne Marie called it? In Connecticut, in the Del Mar Harbor. And Governor, thank you so much for being with us. I want to start with something that's an increasingly hot topic. We're here at a leader of businesses, with the leaders of businesses who oversee huge portfolios of money. How, as governor, do you keep attracting this type of business to a state while providing some of the social services and other expenses that cause taxes to go up?
Well, the folks here at the Greenwich Economic Forum are really important to the state, and the fintech sector, the financial services sector, a big piece of
해당 지휘권은 조금 더 길게 보고 대응 이어나가도록 하겠습니다.
I think what they like here is a little bit of certainty and stability. They sort of know where the state's going to go. Our taxes a little bit less, and it's not a bad lifestyle.
Are you concerned about what would happen if, say, there is a changeover in the leadership in New York City? Let's say mayoral candidate Zohran Mamdani does win and implement some of the policies that he puts out there. Are you concerned about the ramifications for a place like Greenwich, which really relies on the ecosystem of the tri-state region?
A little bit. New York City is the financial capital of the world, and we're a big piece of it here. As evidenced at the Economic Forum. And I want to make sure that the next mayor understands how important New York City is to that system, and that's important to Connecticut.
How concerned are you about who the leader is in the Democratic Party right now? Do you have a sense of where the leadership really is coming from?
Governors. Okay, I'm a little loaded for bear on that. I like governors. Governors have to get stuff done. Governors have to balance a budget. They have to do it on time. Governors can't shut down a government. Governors are sort of the opposite of what you see going on in Washington, I think on both sides of the aisle, but in our case, the Democrats see real leadership coming from the governors. But don't ask me to ask names.
Well, but I'm wondering, though, how does a governor take that leadership when things are shut down in Washington, D.C., and when it seems like there's a real fissure right now in the party in tactics, in approach, in platform?
I can tell you the governor's incredibly frustrated. Democrats are louder about it than Republicans. You know, we balance our budget, but we do it based upon some assumptions in terms of what our relationship is with the federal government. If they pull the rug out from under you every week, seems to be happening right now, it makes it very difficult for that certainty and stability that the people in this room like.
How much have you seen actual ramifications from the government shutdown in the form of funding that isn't coming through?
It's not my first rodeo with these Trump shutdowns. So we went through all of our commissioners. We saw what's most at risk, where do you have reserves, WIC, which is women, infant, and children. Probably only had a week's worth of reserve there, so we figured out how we backstop that. SNAP, which is, you know, food benefits, that's the end of this month. So we're watching very carefully where the risk is. And I can't make up all the shortfall, but I'm trying my best to help out the most vulnerable.
Well, how long do you have reserves to cover things? In other words, when does the funding run out? Should this shutdown continue for a long period of time?
End of this month. You know, SNAP benefits is probably $75 million a month. I can't not make up that shortfall. So if the federal government walks away, that's tough. If we had assurance the federal government's going to backstop, if we had to help it out for a couple months, then we'll get paid back, that's something else. We have none of that assurance.
I guess I want to go back to the idea of leadership right now, because we are beginning the midterm election cycle. And I wonder, as a Democrat in your second term as governor, how much do you feel allegiance to the Democratic Party versus something else, amorphous, that's coming, that doesn't necessarily have a label?
Well, as governor, you feel strong allegiance to your state. I'm a homer for Connecticut. I'm Team Connecticut. And, you know, Republican or Democrat, I try and get stuff done. Personally speaking, as I look at a lot of the Civil War down in Washington, D.C., and I look at L.A., and I look at Chicago, you know, I do think it's important that the Democratic governors stand and speak with one voice, that, you know, what we need from the federal government in terms of a reliable partner.
How much are you concerned about some of the images that we're seeing with the National Guard going into places like Chicago and San Francisco and Portland, and really raising a question about whether it's going to be the states versus the federal government?
Ray Dalio will be speaking again. Remember a year or two ago, he was talking about Civil War. We go, oh, Ray, come on. It's a little bit unnerving if you see those images right now. I talked to General Yvonne, the head of the Connecticut Guard. We're very careful. I said, any inquiries from the federal government? I don't know. We just sent our guard to Djibouti not to Chicago, I feel pretty good about that.
Going forward, what is your plan to try to keep businesses here and attract them to the Northeast, given the exodus that has gone to Florida, to other places that have lower taxes?
We are speeding up our rail system from, say, Greenwich to Grand Central. That'll be 10, 15 minutes faster. Working really hard to make sure you can get the workforce you need. And again, we haven't raised taxes in 7 years. We've balanced the budget. I think that type of stability is pretty helpful.
Do you think that taxes need to come down? Do you think that that's an instrumental part of trying to keep attracting businesses and compete with other states?
Well, I'm a governor, so I can't overpromise. Everybody running against me is always saying they're going to eliminate the income tax in the state of Connecticut. I think what's more important to the folks I talk to is, what's the state going to look like 1 year and 5 years from now? Do I want to be here because I'm making a 5-year bet? We haven't raised taxes at all. I've cut them for middle-class folks. I think that's a good balance.
Going forward, what is your number one hope for the state? What is your number one sort of policy platform that you're hoping to get forward over the next 1 to 5 years?
I need housing. For the first time in a long time, a lot of young people are moving out here, like the lifestyle. We're pretty good as a suburban lifestyle, rebuilding our cities. These are cities were 50% bigger 50 years ago. Now they're growing again, where young people want to be. As I talk to the businesses and say, is this a place where young people, young employees want to be? I'm trying to say yes.
How much are you participating in the reindustrialization of the United States? I mean, that's been a big platform that we've seen overall. Is that something that you're trying to attract to the state as well?
Yeah, I'd like to think of us as the Silicon Valley of manufacturing. We do a lot of complicated stuff like submarines, jet engines, and choppers, and they are growing fast. That's the sort of the heart of our economy in the northern part of the state. But, that's changing too. It's getting increasingly energy intensive, so I'm going to bring down the price of electricity as best I can and make sure they have the workforce. It's all sort of an AI computerized workforce now.
Governor Lamont, thank you so much for being here. Wonderful to speak with you here with Governor Ned Lamont of Connecticut as you hear the seagulls cawing overhead. Back to you.
자, 여기서 하방 압력 안 나와준다고 하면은 손절 후에 재진입 사인 드리도록 하겠습니다.
The Democrat from Connecticut was worried about the Democrat in New York City.
Yeah, Zoran Mamdani. He's worried about potentially what this means because of obviously the driver of business and growth New York City is to all the tri-state area, whether that's Long Island, New Jersey, Westchester, Connecticut, the commuters that come in and out. Also, though, it could be a huge boost for Connecticut in terms of people that maybe want to flock and live somewhere else. That's what people are saying. Potentially, they'd want to leave New York City.
The election weeks away. More from Lisa throughout the day from the Greenwich Economic Forum, so look out for more on that. Special interview also later on this morning. Jamie Dimon sitting down with Bloomberg's Tom McKenzie over in London. That conversation about 3 hours away. Coming up on this programme in the next hour, we'll catch up with Brent Shuley of Northwestern Mutual, William Stein of Truist Securities, Stephanie Roth of Wolfe Research, and Oh-Sung Kwon of Wells Fargo with a new price target on the S&P 500 over at Wells for next year. We'll get into that in the next hour. From New York City, you're watching Bloomberg TV.
Asia's not sitting around waiting for politics to dictate.
자, 손절 사인 드리겠습니다. 손절하겠습니다.
Has already been a leader in his
손절하도록 하겠습니다. 해당 지인권 손절 후에
Trump's been, sort of saying, well, we should be focused on this.
재진입 사인 되도록 하겠습니다.
The world knows that it needs to support this.
Asia's role in global supply chain allows it to influence the transition.
자, 3차 진입권 손절 시에는
All the companies that I've been talking to
트레이딩 중단 후에 심야 트레이딩 이어나가도록 하겠습니다.
With ESG in mind, because that is just where the puck is going.
주문 청산이 완료되었습니다.
Our focus is really to understand what are the technologies that are part of our portfolio for the future and scaling those technologies so that we can meet our demand with clean energy.
Resiliency is just not an operational response to what is happening out there. Resiliency could and will be a strategic advantage that companies we'll start to look at.
There is still hope to actually get back down to something of a livable world if we get our act together.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
We have two crises, two essential crises, and for both it's now or never, democracy and
자,
climate.
현재 뚜렷한 저항이 확인되지 않기 때문에 자, 매수 진입 보도록 하겠습니다. 자, 매수 진입 사인드립니다.
확인 바랍니다.
자, 동일하게 계약서는 3계약 운영하도록 하겠습니다. 자, 매수 진입 사인드립니다.
That is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
The reality is the AI boom is real.
AI has the potential to be very important, but no technology gets adopted in a straight line.
We need to see a heck of a lot more, particularly given the amount of spending that is going to be done over the next couple of years. I don't think the spigot turns off in 26 or 27.
You are seeing it broaden out. Our most preferred way to pay structural growth is through tech.
For the moment, the trajectory is very much towards corporates still being in a relatively better position.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The third hour of Bloomberg Surveillance starts right now, and your scores look like this. All-time highs on the S&P, the Nasdaq, the Russell. Futures positive on the S&P, the Nasdaq, and the Russell.
자, 여기서 끊어가도록 하겠습니다. 자, 수익 청산 사인드립니다. 여기서 끊어가도록 하겠습니다. 자, 수익 청산 사인드립니다. 자, 끊고 바로 이어서 다시 한번 매수 진입 사인드리도록 하겠습니다.
주문 청산이 완료되었습니다.
자, 4차 진입뷰 대기 하고 바로 진입 사인드리도록 하겠습니다. 자, 다시 한번 매수 진입 사인드리겠습니다. 다시 한번 매수 진입 사인드립니다.
체결되었습니다. 확인 바랍니다.
자, 매수 진입 사인드립니다. 진입가 212.75입니다. 212.75. 매수 진입 사인드립니다.
OpenAI, NVIDIA, a circular market. It gets people concerned. At the same time, it is promising to really transform this economy.
There's so much economic activity going on right now. We saw this through the month of September. Lots of debt supply, lots of paper starting to move. We saw the agreement, a bank purchase taking place, some consolidation in the regional bank sector in the last 24 hours, the AI announcements as well. The C-suite's moving on really, really quickly. 6 months ago, we were obsessed, knee-deep in tariffs and what the trade story would mean for corporate America. If you want a flavour of that now, you need to listen to the C-suite. The banks, what they're saying, what they're seeing, because you're not going to get it from the data.
And where they're hiring. They're hiring right now in investment banking because everyone is lining up to get deals done that they felt they couldn't get done for the past 4 years. The deregulation push is actually happening in Washington. So CEOs have really moved on from the tariff story, and in 2026, they want to move on to the M&A story.
Yesterday it was Fifth Third and Co. America. Tomorrow, who knows? Coming up on this program, we'll catch up with Brent Schutte of Northwestern Mutual as stocks trade near record highs. William Stein of Truist, as he calls AMD a real partner in the AI market, and the US Senator Bill Cassidy as the government shutdown enters day 7. We begin this hour with stocks eyeing an 8th straight day of gains as the AI spending spree continues. Brent Schutte of Northwestern Mutual Life Insurance writing the following: while the budget battle led to frozen funds in Washington, an artificial intelligence-fueled deal-making spree has fueled no shortage of investor confidence. Brent joins us now for more. Brent, welcome to the program. Are you starting to question that confidence?
Yeah, I think so. I think there's lots of comments about 98, 99, and people use more anecdotes than anything else. Let's look at some data. The narrowness of the market is the same as it has been since back then. So 98, 99, 28 and 32% of the S&P 500 names beat the index, same as 23 and 24. Small and mid caps traded the same relative valuations they did back then. The CAPE ratio, which is the price that you're paying for the earnings overall, second highest level in 150 years going back to 1870. Price to cash flow. So I hear so much about the cash flow these companies are earning versus back then. You're paying levels of cash flow on the tech sector that you were back in September of 1999. And so if you look at all these different things, I think there are a lot of echoes of 1999, and that's where I have concerns about what happens going forward.
What do you think happens going forward, Brent?
I think investors should focus on the economy broadening back out and the markets broadening back out. And so I hear lots of commentaries about why small and mid-cap stocks can't outperform. I heard the same things way back in 1998, 1999. I think about international stocks, which were similarly dead back then. And I think about the dollar potentially pushing lower in the future, which at least historically has been the biggest determinant of what happens in U.S. versus international equities. And if you believe the dollar is headed lower, you might want to have some international equities in your portfolios. And so I think there are a lot of echoes, a lot of similarities, and I think opportunities exist. They are just in places that people aren't looking for right now. And I think much like then, AI will become something that does benefit the entire economy and all the companies that operate in the economy, which is where that broadening thing I think really comes to fruition.
While other opportunities might exist, don't you also want to be exposed to what is going on, given the fact that every single day these companies are notching new record highs?
100%, but you don't want it to be your whole portfolio. And that's my worries right now, because when I travel around, people only want to be invested in those parts of the market. That's where I hear people come on your show and essentially kind of talk about that as if that's the only opportunity that's out there. Look, it can go higher. That is no doubt. I don't know when it's going to stop, and that's the problem. And that's where I think anybody who thinks they're going to know exactly the date that you need to actually get in those other parts of the market because you have hit some level of kind of peak optimism on AI and in those names, that's where I think they're fooling themselves. Plus, if you think about it, we have to broaden back out at some point. I don't think the economy can continue to be this narrow. AI is obviously very important to the U.S. economy, but is that already discounted in the prices of those stocks? And do the winners change in the future, which I think the answer is yes.
Jeff Bezos talked about on Friday that investors have a hard time in the middle of this excitement, really distinguishing between the good ideas and the bad ideas. What are the characteristics of each of those playbooks?
Yeah, I mean, that's just where I don't know if people know what the exact winners are going to be or how this is going to play out in the coming months. I even think about the economic data right now, which I never thought I'd get on a TV show, and we wouldn't be talking about the potential for a contraction when the average job growth is less than 30,000 by any single metric. You can look at ADP, Revelio Labs, which is something you all brought to life last week. And that's where I just think that's kind of an odd period of time. At the same time, you have inflation, which is pushing higher, not lower. And the Fed is expected to cut rates. We haven't been at their 2% target for some time. The CAPE ratio is at 150-year highs besides 1999, and yet there are no fears that are out there. And that's where I just want people to behave just a bit better and make sure they're ready for whatever comes next, because I do think that there are some risks that are out there that are not currently into the market in any way, shape, or form.
Brent, the situation you described, though, isn't that precisely the reason this is such a fertile?
자, 현재 약보합권 진입하였습니다. 좀 더 지켜보고 목표 수익권 도달 시에 수익 청산 사인 드리도록 하겠습니다.
The earnings profile of the big weights of the S&P 500 is still quite robust and solid. So you get both the earnings and the rate cuts. Why wouldn't you want to be in these names?
Look, that's where I think you could sit us at any point in the past in time periods like this. And I think there's this unfettered belief that the Fed can save every economic cycle. And that's where I'm just not for sure that occurs. And so that's where I just advise people to be a bit cautious. This does not mean that you go out and sell all your equities. It's just that you're at whatever level of equities that your financial plan says and that you stay diversified. I think there are more outcomes that could occur. Everything going well could be an outcome that occurs. I think inflation could be an outcome that occurs. I think on the opposite side, you could actually have an economic contraction because at least historically, the labor market is the canary in the coal mine. And that's where I'd advise people to stay diversified, stay invested, and continue to think about the future. And that's where I like to focus on relative valuations in times of unknown. And that's where I think small and mid-cap stocks trade at those valuations relative to the large cap counterparts that they did back in 1999. And if you look at the past 25 years, mid-cap stocks have outperformed the U.S. large cap market by 2% and small caps by 1.8%. And that was from those lows of 1999.
Brent, just build on this just a little bit more. Diversification in 2025 and what that actually means. I remember when playing utilities was actually defense, and now it all feels like precisely the same trade. How different is the story now?
On the diversification trade, I mean, I think to me, diversification means that you invest for uncertainty, and concentration means that you think you know exactly what's going to happen. And I don't think there's anybody who's going to come on your show that's going to know exactly what's going to happen. I think there are echoes of 1999, and that's where I would encourage people to stay invested in those names, but don't make them your entirety of your portfolio, which is what I see individual investors wanting to do. They don't want to own anything outside of that, and that has echoes of 99, that has echoes of 06. And that's where I think these narrative that Wall Street kind of comes up with to support whatever thesis they have oftentimes gets cold water thrown on it.
Brent, appreciate the update. Your reaction as well. Thank you, sir. Brent Shuley there of Northwestern Mutual Life Insurance. Cautious on this equity market. Wants to stay invested, but worried about the consequences of a market that's become too concentrated.
He's cautious because he's looking at potentially the history doesn't repeat itself, but certainly rhymes, and what potentially this could mean when we had, the internet bubble, the dot-com bubble, and all of the losers we saw out of that, and the people who got absolutely burned. And so many of those people are still in this market today, and they're starting to feel the same sort of exuberance they felt in the late 90s. They're feeling it now, and that is why there's some caution.
Nasdaq futures this morning up by another 1/10 of 1%. With an update on stories worldwide with your Bloomberg brief, let's cross over to Lizzie Burden. Hey, Lizzie.
Hey, John. The Trump administration is expected to announce a plan as soon as today to bail out U.S. farmers impacted by the ongoing trade war. The rollout may be impacted by the government shutdown and could hinder congressional action needed to approve the payout. Sources say that the bailout could total between $10 and $15 billion and could be followed by additional aid. Elsewhere, New York Stock Exchange owner Intercontinental Exchange is in talks to invest $2 billion in Polymarket. The deal could value the popular betting market between $8 and $10 billion and could come as soon as today. Polymarket drew attention, of course, last year for its betting market on the presidential election. And Wegovy maker Novo Nordisk has laid off dozens of employees at its largest US manufacturing site. That's according to Reuters. The previously unreported cuts included roles from quality control to production line technicians. The company hired its new CEO, Mike Duster, in late July. And that should be my brief, John.
Lizzie, thank you. More from Lizzie in about 30 minutes. Up next on the programme, the Morning Calls Plus, William Stein of Truist, as he calls AMD a real partner in the AI market. That conversation up next, live from New York City this morning. Good morning.
key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
I don't say bubble. I never say bubble. I think that there's a lot of enthusiasm. People feel, I mean, there's certainly a bit of a chase, right, where people feel like they need to, buy into the technology. There is some of that. But the market seems to be, this, at least for AI. Is that necessarily wrong? I'm not sure.
That was Neil Dutta of Renmac saying essentially be more focused if you're the Federal Reserve on what's happening in the labour market and the downshift in payrolls. Neil expecting this Fed to do a whole lot more. Maybe not this side of the new year, but certainly into 2026, you're going to see a more aggressive Federal Reserve as the labour market weakness boils to the surface just that little bit more.
And really fascinating because we are in a data desert with the government shutdown. Carlyle releasing its own estimates for U.S. economic data. Jonathan, this is not good, including an estimate of 17,000 jobs created in September. That's it. 17,000. If you're the Federal Reserve and you get a print like that, you're cutting interest rates.
Still waiting for the payrolls report. Not sure when we'll get that. The government's still shut down. Unsure if we'll get jobless claims this coming Thursday. CPI a week tomorrow. Waiting for the inflation report as well. So this Fed could well be flying somewhat blind as they get round the table together to meet for that two-day meeting at the end of this month. That's the situation with the Federal Reserve. Here's the situation with financial markets. Equity futures on the S&P 500 on a 7-day winning run. The longest daily winning streak going back to May of this year. Futures just marginally positive on the S&P. On the Nasdaq 100, all-time highs that are closed yesterday. Thank you, AMD. That stock is up again this morning. And that index is up by close to 0.1%. That's the price action. Let's turn to the morning calls. That one stock in focus, AMD. First up, UBS, raising its price target on the stock to 265, saying the AI trade still has legs given the infrastructure build out. Your second call from Morgan Stanley, raising its price target on AMD to 246, noting the OpenAI deal will boost its chip ecosystem. And finally, Jefferies upgrading AMD to buy, saying its OpenAI deal is a, quote, multi-generational opportunity. Let's stick with AMD, the stock adding over $63 billion in market value after landing a blockbuster deal with OpenAI. William Stein of Truist has a buy rating at 273 price target on shares of AMD. He writes the following: while AMD was previously cited as a price check to NVIDIA, it is now cited as a true potential partner. Will joins us now for more in the studio. Will, good morning.
Good morning.
We'd just like to start by giving you some space and time to reflect on the deal that was announced yesterday. Were you expecting something along those lines?
So I don't think this was a surprise in the sense that we've written about this change in sentiment in the way the supply chain partners are recognizing and the customers are recognizing AMD for its increasingly competitive products and solutions and the ecosystem that they're trying to build out relative to NVIDIA. So not surprising from that perspective. It was certainly a surprise in that we didn't expect the magnitude and the timing and the details of this deal, which are extremely positive. And I think the stock's reaction is sensible relative to the size of this deal that's announced.
Maybe it was a Freudian slip, but is AMD now mounting a real challenge to NVIDIA with this type of deal?
It's a challenge to NVIDIA, perhaps. I think that's a fair way to say it, but it's not a challenge for leadership, in my opinion. I still think NVIDIA is the company I call the AI company, and I think that remains the case. I think the question is how should we perceive AMD? Previously, let's say prior to a couple months ago, my industry contacts had always cited AMD as a sort of a price check. They're, it's not for real. They may be getting $2 billion this year.
자, 현재 나스닥 매수 진입권 실시간 대응 중에 있습니다.
Value that as sort of an underwriting of ongoing revenue and profitability, because my perception was, look, in a couple years it could be a zero, and that's what shifted a couple months ago.
잠시 후 약 12분 뒤에는 미국 8월 무역 수지 발표가 되고요.
A real alternate, a true potential partner as a supplier, I think that's
이후에 확인되는
Does it worry you that all of these
주요
deals are
경제
so
지표는
circular?
없습니다.
Look, it's not lost on me that there are heightened risks when the seller of technology is also financing the buyer. However, we've seen this for a number of years. The first time I heard about this happening in this industry was with NVIDIA essentially funding the cloud service providers to help it build out this thing they call DGX Cloud. This made me quite nervous. But here we are several years later, and when we look back at those transactions, it does not appear that they were set in motion in order to inflate revenue. To the contrary, these were sensible deals with real business rationale that drove technology forward for NVIDIA and for all of its customers. And we think the deals that are getting announced now are similar to that.
The stock is up again this morning by 3.9%, sort of a major move in yesterday's session. Off the back of that move, I imagine there's a green light for other companies to say, we need to strike the same kind of deal with OpenAI. Let's get moving. What are the prospects of another company doing the same thing? An Intel, say, getting involved in something like this?
Yeah, I think for Intel, this is a bridge too far. Now, that's not to say that Intel doesn't sell anything to OpenAI. I don't know whether they do or not. I would imagine it's likely they sell some stuff to OpenAI, okay? But to become a major supplier of AI infrastructure, Intel just doesn't have the products and services that I think are required here. You've got the two.
Intel? What's missing there at the moment?
Oh, a lot, but let's start with an accelerator product. It's a processor that's sort of at the core of AI compute. These are often called GPUs, sometimes they're called XPUs or ASICs. They're parallel compute structure processors. And the two main merchant vendors of these are NVIDIA and AMD. There is another route that these companies can pursue, which is called an ASIC or an XPU. And the major vendor there is Broadcom. There's another one outside of my coverage called Marvell, but those are the ASIC vendors. And it's my best understanding that OpenAI is already it has a deal with Broadcom for ASICs. Whether that's a fact or not, I don't know, but this is the widely speculated fourth customer of Broadcom.
It sounds like from what you're saying, the government investment in Intel is not going to solve the ultimate problem that company has. Is that fair?
Well, I think that's fair. I don't think it's a solution. I think the question is, how do other companies in the ecosystem, potential partners like NVIDIA, and potential customers react to this relationship that Intel now has with the federal government. And we saw, a view of this recently with the NVIDIA deal with Intel, right? This deal, makes Intel a supplier to NVIDIA for the sale of AI infrastructure to NVIDIA's customers. So they're essentially using some technology from Intel. Is that enough to save them? I don't think so. I think that's not to say that Intel won't succeed, but it's going to take more. What was remarkably absent from that announcement was anything related to manufacturing.
How difficult is that line to walk right now for these executives? I have been on countless trips with the president or in Washington, and Jensen Huang is there, almost dictating at times chip policy. What he wanted to see, the Trump administration is actually doing. Are they going to come under pressure to help basically support Intel and potentially other companies that the U.S. government now wants to see be winners?
I'd have two comments to that. First, I think there is some pressure, and that may be why NVIDIA engaged in this transaction with Intel. Maybe. I don't really know. But the second point is to just take a little bit of exception with what you said. Look, I don't know anything about Jensen's interaction with President Trump. I don't believe Jensen is dictating policy. For if he were, they would be selling lots of product to China right now. There's still a policy that prevents this.
Maybe I'm being a little bit snarky, but at the same time, Jensen Huang wanted to get rid of the diffusion rule over with the Trump administration. They wanted to get the H-20 trips back into China. Now, whether China wants to buy them or not, they are able to get that back into China. So a lot of things that he has been socializing are actually coming to fruition under Trump.
I think they're good policy. I think that's what's going on here. I don't, look, again, I don't know the degree to which Jensen influences Donald Trump. I really don't know. But I think these are good policies.
Well, before you go, wanted to finish and get your thoughts on what's been happening in this equity market more broadly. You've heard a lot of guests come on, including our last guest about 20 minutes ago, saying that there were echoes of the late 1990s. He was worried for investors and the concentrated risk, the bets building just around one or two companies, OpenAI, a good example of that. Is that a concern of yours? And what could you point to that would be slightly worrisome?
It is a concern. I think to brush that off is silly. I think whenever demand is very strong and has been for a number of years, as it has been in this AI trade since roughly 2020 or thereabouts, I think one has to always have an eye towards the next downturn. This AI data center cohort experienced that in 2019. It will happen again. The question is when and how bad will it be? I don't see anything on the horizon that suggests it's in the very visible future. For example, this year, next year, maybe 27. There don't seem to be any signs of that. The worrying signs, if we see them, are two things. One is a step down in CapEx from hyperscalers or like companies, so-called neoclouds, companies that are spending a lot on AI. If there's a slowdown or negative growth one year, that's obviously a big trip. The other is the ability for AI-linked startups to continue to get funding. If that has a sort of stall or hiccup, it's going to be a not so good day for these group of stocks. I can't so much talk about the wider market.
Sure.
You can make some interpretations.
Right now, the money's still there, that's for sure.
Yes.
Well, it's good to see you. Thanks for dropping by.
Thank you.
Thank you, sir. William Stan there of Truist Securities on that latest deal between AMD and OpenAI announced yesterday and that major rally we saw in AMD. Lots of concern, but ultimately one-way traffic for this equity market over the last 7 days.
Kevin Gordon, though, writes in, I love this. He says it's way bigger than 1998, 1999. As of the end of September, the 10 largest stocks in the S&P 500 made up 41.3% of the index market cap. That has to concern some people.
NASDAQ futures up this morning by 1/10%. Coming up on this program, the U.S. Senator Bill Cassidy as the government shutdown enters Day 7. Live from New York City this morning. Good morning. You're watching Bloomberg TV.
잠시 후 약 4분 뒤 금일 중요지 하나인 8월 무역 수지 발표됩니다. 발표 이후 시장 움직임 지켜보고 손절 및 수익 정산 수상해드리도록 하겠습니다. 자, 잠시 후 데이터 나옵니다. 잠시 후 데이터 발표됩니다. 현재 약세익권 약 3계약 기준 6만원 세익권에서 실시간 대응 중에 있습니다.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
The opening bell about 60 minutes away. Your scores shaping up as follows. Equity futures on the S&P 500 just about positive. Likewise on the Nasdaq up a tenth of 1% after closing at another record high in yesterday's session. Light on data once again this morning. Light on data all week potentially. Mike McKee can give you a look ahead. Good morning, Mike.
Good morning, John. Well, it is trade data that is missing today, the latest data from August, the updated data. The good thing is we do get an advance word on the trade deficit, and we did get that just before the government shutdown started, and it showed that the trade deficit has widened by, in goods alone, has widened by 11% this year. We are not exporting as much as we have been importing, even though during the last month, we saw imports drop significantly because people had front-run the government. The one interesting thing is that trade imports from China are down 19% on the year. The biggest increase comes from Switzerland, 197% higher. That's because of all the people moving gold back and forth when they thought it might be tariffed. We go on from here to probably not get jobless claims on Thursday, and we will get the University of Michigan on Friday, but it's Wednesday's Fed minutes that are going to be the most important thing that we do get, because people are going to want to know, A, how Stephen Myron was received, and B, what people thought at the time on the Fed about the possibility of a rate cut in October and December.
Mike McKee with the latest. Michael, thank you. Breaking down the data you won't be getting later this week. This is what Stephanie Roth of Wolf Research has to say. There should be very little impact to headline payrolls, but furloughed employees should be counted as unemployed. Stephanie joins us now for more. Stephanie, good morning.
Good morning.
That's your take on the government shutdown. I just want your take on the lack of data. When does this start to become a problem?
Well, if we head into the Fed at the end of October, then it's a problem.
수익 청산하도록 하겠습니다.
Our expectation is you'll probably start to see some data, and of course they're going to roll out the employment data rather quickly once the government opens up, because the payrolls report was largely done. But as we move into the next couple of weeks,
청산이 완료되었습니다.
we really need to see the payrolls data. We really need to see the inflation data.
An issue because the Fed won't be able to make a decision, or just because they're flying blind without enough of the data when they say they're data dependent?
They're flying blind. And our expectation is the data over the summer, from a payrolls perspective, was not a great reflection of what's going on in the economy. Our expectation is that the trend in payrolls is not something like the 29,000 3-month average. It's closer to 60,000, in which case it's a much different picture, because 60,000 is roughly the break-even base.
When the data does come out, how difficult is it going to be potentially trust it? Because all the individuals that are said to be collecting data every single day are at home right now, furloughed.
Yeah, so the October data is going to be really bad. That, I think, should largely be dismissed. The positive is the September data is clean. So the data that we'll get initially will be a clean read of the economy. Then you're going to have another window where the data will not really be a very accurate reflection of what's going on, and then we can move into the November data. So the September data, especially from a payrolls perspective, will be helpful to gauge whether, certainly we see August revisions higher, because that's our expectation. A decent print for September is our anticipation. And then when we get the October data, you have not only the impact from the government shutdown, which, like you mentioned, those people will show up as unemployed if they answer the question correctly, and there'll be deferred reservations.
Have you got your doubts that they're answering the question correctly?
Well, if you looked historically, they didn't. It's unclear. It's a survey, and the BLS isn't supposed to change their answer. So if they answer incorrectly, they have to leave it that way. So it will be very unclear the impact on the unemployment rate. It could be a couple of tenths. It could be up to 4 tenths. But then we're going to also have the deferred resignation, 150,000 roughly negative payrolls for federal workers.
Any reason for the Fed to deviate from its dot plot, with or without the data, based on the projections last time around?
I don't think so. I think the dot plot is probably kind of accurate in terms of where we are today. Things haven't really changed that much. Of course, we don't have a clean rate of the economy, but things don't appear to have deviated that much since the last set of data.
Did we have a clean read on the economy when we did have the data?
Yes, I think there have been a lot of revisions, and that's what's been driving a lot of the uncertainty. It's less about any sort of fraudulent activity happening with the data or it being incorrect in any other way, but there are a lot of revisions, partially because the response rates have been low. But once you get the second release of payrolls, then you have response rates back up to normal levels.
Carlyle has put out their proprietary data because of what's going on, the fact that we are in this data desert, and they are estimating 17,000 jobs only created in September. Could it really be just 17,000 jobs?
It could. Our expectation is it's probably a bit better than that. If you look at consumer spending data...
What's a bit better?
60 to 70,000 is kind of the ideal level right now. That's the break-even pace. That would be a nice steady state trend in payrolls. But so the 17,000 margin of error could easily be 60,000 as the actual trend pace. And if you look at consumer spending, we got big upward revisions to consumer spending in the last PCE report, and it tells you that consumers are still feeling largely okay, or at least they're spending with their wallets.
I'm glad you mentioned the consumer because we're obviously going into the holiday shopping season as well, if you can imagine, even though it's 80 degrees outside. When you say consumers are still spending, at some point, are tariffs going to be passed on to them?
At some point, but it's been a slow move into passing it on to the consumer. So our expectation is, when we track it, about 40% of the tariffs that we ultimately expect to get passed on have been passed on. It probably will never reach 100%, so call it we're half of the way there. So we'll probably continue to see it, but it will seem to be rolling out slowly, which is easier for the consumer to absorb.
Stephanie, it's good to see you. Thanks for breaking it down. Stephanie Roth of Wolf Research on
잠시
the
후 개장
economy
이후
without
여러
much
가지
data right now, what it means for the Federal
취합해서
Reserve
분석, 시장
at the end of the
분석
month.
후에
Let's talk about the government shutdown. I'm pleased to say that joining us now is the Senator from Louisiana, the Republican chair of the Senate Health, Education, Labour and Pensions Committee, Senator Bill Cassidy, joins us now for more. Senator, welcome to the programme, sir. Welcome back, I should say. There is a take on Wall Street that we've seen this movie before, that we get to the inevitable pressure points and the government reopens. You've done this for a long time. You've had this seat for 10 years. Senator, does it feel different this time?
It feels a little bit different because there's a complete breakdown of trust. Chuck Schumer, obviously he could end it tomorrow if he wants to end it, but he doesn't trust the president. That said, Chuck Schumer could end this tomorrow. I'm hoping that he does, and I'm hoping it doesn't take a lot of pain from the American people in order to get him to do so.
Is there a breakthrough with the fact that, and good morning, Senator, that it does seem like both sides, at least at this point, want to talk about talking, as Politico put it, that the president is coming out and saying maybe there could be a compromise when it comes to health care?
Yeah, I'm absolutely. You know, it's better to jaw than to war, as Winston Churchill once said. So let's go ahead and start talking. That said, Republicans have suggested a 7-week extension of the current budget to allow dialogue to continue. And that's commonly done, as Chuck Schumer points out, happened 13 times under Joe Biden. And so that 7 weeks kept the government open, allowed us to continue to negotiate. So I think there's something else that Schumer's thinking about. Not quite sure what it is, but I'd rather be talking than kind of sitting in our own corners.
What is going to happen, though, at the end of the year when we get this premium hike?
Well, first, we don't know what premium hike is going to occur. Let's just say that. But secondly, we've got to address the fact that the Affordable Care Act has become the Unaffordable Care Act, in which it takes huge subsidies in order to continue to make those policies affordable to Americans. That's wrong. We got to roll that back to a point where it's still affordable to Americans, but it doesn't require these huge subsidies. This is not sustainable. But by the way, it's not just me saying this. The Washington Post had an editorial about how the Affordable Care Act is no longer affordable. So I think now might be the time. What can we do to help the American public lower healthcare costs in a way which is not just for the exchanges, but for those in the kind of private markets as well?
Could you get a compromise like that before the end of the year?
I sure hope so. But first, you got to reopen the government. We're actually asking for, okay, how can we do this? How can we do that? The government shut down, so we can't get some of the information. The 7-week extension of the current budget allows that to happen. And so I'd ask Schumer to reopen the government. In the meantime, I'm certainly committed to how we can lower healthcare costs for all Americans. It's what I've been doing my whole life. And so let's get on it.
Senator, when it comes to moderate Democrats, do you see any willingness of some of them to join the 3 that we have seen sign up and vote for a clear stopgap funding measure?
I've not spoken to any of them personally. You'd like to think so. One more time, we've just asked for a 7-week extension of the current budget, which was done 13 times under Joe Biden. And so I would hope they would, because this is inflicting pain on the American people, but we could be talking with each other without a shutdown. I think this is a political response by Schumer to pressure from his left wing, but it should be pressure from the American people, keeping the government open while we continue to work to lower healthcare costs.
Senator, the White House is still operational and they've been making moves. I wanted to squeeze this in because I know you're a busy man this morning. Trilogy Metals in early trading this morning is higher by more than 200%. The announcement that the US will be taking a 10% stake in the Canadian Minerals Explorer, leading to a big rally on the stock. Senator, can you give me your opinion, your perspective on what you think of the party moving towards something that smells a little bit like central planning?
Yeah, I'm a little bit personally concerned about state-owned enterprises because it's a slippery slope. At first, you're a passive partner. It's one thing to have a position in the stock market, or it's another thing to have a timed exit. After TARP, there were some positions that the federal government had that was a timed exit. That's okay. But having a long-term interest, I think there'll be a future Democratic president who will be tempted to go a little bit further. We should definitely get a return on our investment if we end up bailing somebody out. Absolutely. But on the other hand, I'm a little bit nervous about taking positions that go beyond a timed exit.
Well, what do you make of the fact that the Republican Party, not the Democratic Party, is the party doing this and supporting state capitalism?
Yeah, so I think the president, I can't speak for the president, and the Republican Party is a diverse organization. I'll say that as well. I'm just speaking for Bill Cassidy, and I am a conservative, and I'm a little bit nervous when government ends up owning the means of production. When that happens, sometimes the government ends up dictating to the means of production what to do. For example, keep employment up for political reasons. I'm nervous about that. Maybe the president's got a great plan. It's one thing to be a passive partner, to own stock, we have a timed exit, et cetera. Another to be active. Now, I will say the president's specifically saying will not take a position on the board. That's my understanding. That's a good thing. That's a really good thing. But still, I'll put all those caveats out there.
As a senator, does it concern you that the executive branch is going one way and not consulting you and your colleagues?
Ultimately, we have to recognize that executive orders have been put there and the presidents can do kind of what they want with an executive order. But obviously, the problem with that is that when a new president comes in, she or he, so far just he, can immediately reverse all those. So you want legislation that will actually put in place for certainty for business and for labor that plan for the economy that goes forward. So everybody understands executive orders are powerful, but they're temporary. I would suggest that we're going to have long-term certainty.
Senator, before you go, can Tigers football get back on track?
Can who?
Can Tigers football get back on track?
Oh my gosh, I certainly hope so. I certainly hope so. We have a good game that's coming up with South Carolina. So I'm always hopeful for the Tigers. Go Tigers.
Ole Miss on top of the SEC. Senator, appreciate your time. Thank you, sir. Senator Bill Cassidy, thank you, sir. Thank you very much. Had to squeeze in some Tigers football.
Tigers. You had to end this segment on a sour note with the poor senator.
At least he was very open about the situation when it comes to acquisitions. Very much so. And we talked about this in the previous hour with Libby Cantrell. I am sympathetic with the objective, uncomfortable with central planning, and ultimately you have to be wary of what you normalise when you're in power, because someone else might be in power and you might be out of it, and they can take this to a different place.
What Senator Cassidy said is what a lot of Republicans will tell me behind the scenes, but don't want to be so overt about it. And he was happy to be honest right there on live television about this does make him uncomfortable. And for those reasons you just outlined, how many times, though, have we seen administrations, this is taking it more to the extreme, but also the Biden administration, using national security as this veil to basically enact some sort of industrial policy?
That stock is up by 250% in the pre-market. Let's get you an update on stories worldwide with your Bloomberg Brief. Here's Lizzie Burden. Hey, Lizzie.
Hey, John. Dell shares soaring in the pre-market after it roughly doubled its sales growth and profit estimates over the next 2 years, citing demand for artificial intelligence products. The company's updated financial framework calls for sales to rise at a rate of 7 to 9% annually for the next 4 years, while earnings per share will increase 15% or more. Elsewhere, the International Energy Agency slashed its forecast of US renewable energy growth by 2030 in half. The reduction compared to last year's analysis is due to several policy changes imposed under President Donald Trump, the IEA said. Global renewable power is expected to increase by 4,600 gigawatts by the end of the decade, according to the report. And Tesla plans to unveil a cheaper version of the Model Y today to counter the loss of US incentives for electric vehicles. The cheaper vehicle will lack certain features and use less premium materials. Executives said that production of a more affordable model started in June, but they decided to put off ramping up output until after the US phased out tax credits. And that should be my brief. John.
Hey, Lizzie, thanks for this morning. Appreciate it. Up next, we'll catch up with Oh-Sung Kwon of Wells Fargo with a new 2026 year-end target on the S&P 500. Plus, Yahira has your morning movers. Dow soaring as AI demand lifts profit estimates. That stock is up by 5%.
The key issue right now for us in the diamond space is the declared divestment of Anglo from DBS. And as you know, Anglo holds 85% stake in DBS. Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in DBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
U.S. jobs numbers are released, Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
It's pretty easy for us to find great leases from investment-grade tenants like the hyperscalers. You look historically in areas like this over the last 20 or 30 years, typically when this much capacity comes online, some of it at the end of the day is going to have to be marginal, right? These trends tend to lead to overbuilds in certain places, so I think us being selective and being measured in what we build.
That was the Ares Management co-president Kip DeVere sitting down with Lisa a little bit earlier on this morning. That's the major theme right now driving this equity market. Futures right now on the S&P 500 shaping up as follows. Futures positive by 0.1% on the S&P, up by 0.2 on the Nasdaq 100. All-time highs at the closing yesterday's session, and we add some weight to the rally so far this morning. In the pre-market, let's get you some single names, some morning movers. Let's cross over to Yahara for more. Hey, Yahara.
Hi, John. We start with IBM rising nearly 3% in the pre-market on news that it's integrating Anthropic's Claude AI models into its coding platform. It's the latest strategic partnership between one of these established tech players and AI newcomers like Anthropic, which has been riding high. It just had a funding round last week, which nearly tripled its valuation to $183 billion. And another high flyer is Dell Technologies, up nearly 6% in the pre-market after the company roughly doubled its growth estimate for the next 2 years, citing booming demand for its AI products. And it has to do with what Chief Operating Officer Jeff Clark said, which is we were all wrong about how big we thought the AI market was 2 years ago, and it's nothing but bigger, he said. And we end on Trilogy Metals, up now 250% on news that the U.S. is taking a 10% stake in the company, part of a $35 million push to unlock critical energy and mining projects in Alaska. Of course, it's the latest move by the Trump White House to take direct stakes in these critical minerals firms to counter China. John.
Yahara, thank you. Thanks for this morning. Major rally on that name in the pre-market. Let's stay on top of the market. Tech stocks fueling equities to a 7th consecutive day of gains. Osun Kwan of Wells Fargo expecting the S&P to hit 7,200 by end of next year, writing the following. The AI investment cycle could be as big as the internet cycle, if not bigger, requiring much more compute power than past innovation cycles. Osun joins us now for more. Good morning, sir. And congratulations as well.
Thank you.
On the new seat. Fantastic to get some time with you. I was going through the note. Let's talk about where the money's coming from and what's fueling this infrastructure rollout, because that's important, and you've touched on that. Where's it coming from?
Yeah, so far it's been cash from operations, and I think that was really the early innings of the AI CapEx cycle. It was really the hyperscalers laying out their CapEx plans and funding it with their operations. I think now we're moving into the 4th inning, so essentially the first inning of the middle innings, that more players are coming in. They're tapping into capital markets to fund growth. And I think we could potentially see some acceleration in CapEx.
Is this when we start to add the leverage to the cycle?
Yeah, exactly. I think that cycle could potentially lead into hyperscalers potentially increasing their CapEx as percentage of operating cash flow. There are some concerns out there that CapEx as percentage of operating cash flow for hyperscalers are rising too fast, too much. If you look at consensus numbers, it's going to reach about 70% by the end of next year. We actually looked at what happened during the shale days with energy companies. I think that was the most recent example of the investment cycle. And during the shale days, energy companies spent about 90% of their cash flow on CapEx for 2+ years, and yet their stocks continue to rally. So I think as long as the equity market continues to reward their CapEx outlook and the growth outlook, I think this is going to continue.
But not everyone made it when it comes to the shale, right? Not
Right,
everyone
so-
made it, .com, shale. So how do you, in this moment, decipher who's going to be a winner and who's going to be a loser?
Yeah, I think for now, at least, the biggest winners are going to continue to be the CapEx takers, so semis and hardware. And I think we are still in the earlier part of the investment cycle. So if you look at the size of tech equipment spend as percentage of total GDP, right now we're at about 2.0% of total US GDP. It peaked at 2.6% during the PC boom in the 80s, 2.9% during 2000, during the internet bubble. And just to get to that 2.9%, that means tech equipment spend has to go up by 47% on top of GDP growth, which is very significant.
Does it concern you, though, and we ask all these guests about this when it comes to AMD and OpenAI, NVIDIA, OpenAI, how circular this whole investment cycle is?
Yeah, there's a little bit of froth around that, obviously. What's happening right now is really, and this is a part of the reasons why we like small cap technology stocks that are really starting to see the benefits of this, ever increasing cycle of the AI capex investments. The idea is that the major players are at full capacity. They can't take capacity anymore. And because of power, GPUs, things like that. And they gotta make acquisitions, they gotta make investments in other companies to get that power and capacity. And there are a lot of small cap tech companies that are benefiting from it.
This is a somewhat original point of yours, that this can broaden down market cap, and that you also believe that the move in the Russell 2000 is not just about a rate story. It's not just about the cycle. It's about something with regards to AI. Could you give us some detail on that?
Yeah, so over the past 2 months, the Russell 2000 outperformed the NASDAQ. And a lot of people were saying that this is the cyclical rotation, this is the easing cycle trade, which I think a part of it is true. But if you look at what drove the Russell 2 higher over the past 2 months, it was really tech. It was communication services and tech that by far outperformed the Russell 2 index. So I think it was actually an AI story that because the big guys are at full capacity, there are a lot of smaller companies that are starting to really benefit from that because demand outpaces supply right now.
There's a guest who comes on this program, always challenges people to name a stock on the Russell 2000. A lot of people failed that task. Given it's an index that very few people can actually name the stocks on that index, how should you play that story if you are going down cap?
Yeah, so we came up with 26 stocks. We created a basket of small cap AI stocks that could potentially benefit from what's been happening over the past month or so.
Lots to think about. 7,200. Given everything you've just said, why are you so bearish? 7,200 on the S&P.
I mean, if you have to push me, I think there is more upside to our target, 7,200. But that's still about 8% upside from here.
For year-end next year?
Over the next 12 months. Yeah, I mean, we rallied 25%
You're
per
describing
year
a melt-up, though. When you talk, what I hear is a melt-up. That's what I'm hearing.
So outside of AI, there's not that many stocks or sectors that I'm getting interested or excited about, maybe other than financials. So I think it's going to be a continuation of this narrow market. AI is going to carry the market, but our model suggests about 7,200 by year-end next year.
This was thoughtful. Appreciate your time. And it's a great note. I'm reading it right now. Thank you, sir. Thank you. Oh-Sung Kwon there of Wells Fargo. 7,200 on the S&P 500 year-end next year. But going through the details on the AI theme, pretty bullish on where we are. The leverage is the next stage of things.
Yeah, the fourth inning going into the fifth inning, very Dan Ives-like. But Dan Ives will focus on the godfather of AI, where basically what we have here is focusing on all those companies downstream that are part of the AI story but are not the mega tech spenders.
S&P futures this morning up by 0.1%. The open about 34 minutes away. Coming up tomorrow, Julian Emmanuel of Evercore, Torsten Slock of Apollo, Tom Becker of BlackRock, and the former Federal Reserve Vice Chair Richard Clarida from New York City this morning. Good morning to you all. Have a wonderful day. Thank you very much for choosing Bloomberg TV. You've been watching Bloomberg Surveillance.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Let me break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, We are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that 3-year plan now than when you first came out with it, given that deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. It is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
Looking to set another record high, 30 minutes until the start of the cash trade. I'm Matt Miller. Danny Berger is on assignment. She's at Citadel's Future of Global Markets Conference. We'll check in with her later this hour. Bloomberg Open Interest starts right now. Coming up, this market is experiencing signs of fatigue. The AI-driven rally hitting extremes, with Citi warning that investors may soon start cashing in. OpenAI cementing its role as kingmaker, but the stock moves driven by the company are giving traders.com flashbacks. And Citadel billionaire Ken Griffin says he's concerned about the U.S. economy on a sugar high and calling the rush to gold really concerning. Let's check out some of the stocks that we are keeping an eye on this morning. Dell Technologies is one of those right now, up 7% in the pre-market after it roughly doubled its growth estimates for sales and profit in the next 2 years, citing demand for AI products. IBM also up in the pre-market, will integrate Anthropic's Claude family of large language models into its software portfolio, and AMD still riding high off that OpenAI data deal. AMD is going to give 10% of itself to OpenAI to get OpenAI to buy chips from it. For more on the AI trade, we are joined by Bloomberg Tech's Ed Ludlow, co-anchor of that program that kicks off at 11 o'clock. Ed, so much going on, but let's kick it off with Dell. What do we know?
Sure. Yeah, very simply, they're basically roughly doubling their outlook for sales and earnings through fiscal 2030. So top line growth is going to be between 7 and 9%, EPS growth 15%. But the story's kind of changing for Dell. So in the build out of data centers and infrastructure, somebody's got to put the server design together. And that's basically what Dell does. And right now, that's kind of a mid-single digits business, in part because of how aggressive the rollout is. Somebody's got to take a hit on the profitability. And it seems like that's been Dell until this point. But they are saying that the profitability on AI servers is going to improve. And so the stock clearly is reacting very positively to this. They have a lot of key customers, CoreWeave, XAI in the private sector. But traditionally, Dell is also very good at selling into the public sector. And a part of what the story they're telling about that pathway through to 2030 is that, as governments spend more on AI, they will also be there or thereabouts in it too.
Sorry, Ed, there's a lot more going on than just Dell. We've got news coming out from Tesla a little bit later. What we expect in terms of new models?
Yeah, what I'm hearing from sources inside Tesla is that this, whatever comes today, however it comes, because we don't know how Tesla's going to announce this, is a more affordable version of the Model Y. I have no idea on the specific price point of it, but what I do know is that the focus for an affordable Model Y has been about taking and engineering the cost out of the battery pack and engineering the cost out of the motors. What they focused on is basically going to their suppliers for lighting, for example, and being like, can we get some cheaper lighting? Teslas, as you know, have very few sort of panel controls because of the touch screen. But my understanding is that this vehicle will also have a much lower feature count and a much more simple control panel. But again, like, we have no idea how they're going to announce this thing. What I'm told by folks at Tesla is there's not going to be some kind of like big event. It may just get listed on the website. But this is the one everyone's been waiting for, because post federal tax credit of $7,500, everyone's asking how Tesla maneuvers in the lower end of the market, something that they've discussed, you know, in quite a lot of detail on the most recent earnings calls.
Right. Ross Gerber from Gerber Kawasaki says it's going to be a Model Y that's less good for less money. Let me finally ask you about IBM, because they have another partnership, this time with Anthropic, that's boosting their stock in the pre-market. So everybody wants to get in on this momentum, I guess, while they can.
Really simple story. You know, IBM has software offerings. They're going to make Claude models available, particularly through what they call Integrated Development Environment, or IDE. It's basically a platform for developers. You know, Claude is one of the leading frontier model shops. You know, their competence in LLMs far exceeds IBM's competence in LLMs. And so, you know, it's like this idea of the golden ticket trade. A partnership with the leading names in AI has boosted some of the legacy names, and it's a very simple story. You know, IBM is basically a sales channel for Anthropic, but it also makes what they're offering more attractive. And they have a community of about 6,000 software developers that use their software portals. Simple as that, and the stock is up significantly, 3% or so in pre-market.
All right, Ed, looking forward to your program. Ed Ludlow there, co-host of Bloomberg Tech with Caroline Hyde. Also moving this morning is a decidedly non-tech company, Constellation Brands. It owns Corona and Modelo beers. It reported better than expected results as beer and wine sales outperformed the broader industry. Bloomberg intelligence analyst Ken Shea joins me now. And Ken, I thought people were drinking less, or at least less of these traditional you know, lower alcohol beverages, going for the higher end liquors or even like THC infused beverages.
Hi, Matt. Well, some of that is true. You know, premiumization was a big buzzword in the alcoholic beverage business for many years, up until a couple years ago, when consumers decided to search for value. You know, a lot of theories about it, but I think it could be very well. The cumulative effect of inflationary pricing over the last few years has been pretty aggressive. So now Constellation came out last night, and they said that beer volumes were down about 8.5%. And as awful as that is, it's not as bad as the 9 to 10% that analysts were expecting. So that's why you've seen a little relief rally today. But to take a step back, the pressure is still on the company's beer business. As you said, it's mostly Modelo and Corona, two high-priced, premium-priced beers that have a very loyal following. But right now, the U.S. beer industry is really in the doldrums, where volumes are down, you know, low single digits, and this company is not immune to that.
So does Constellation have plans to expand into other higher growth or any growth areas?
Well, they would argue that Corona and Modelo have a bright long-term future. They believe that the near-term pressures will ease up at some point, and consumers will, you know, resort back to their old habits. I'm a little more skeptical. I think there's more structural issues going on here. I mean, some of the things that we've talked about, you know, substitution of cannabis, GLP-1 users drinking less, moderation in general, are likely to weigh on this industry for a while. To the degree, no one really knows. What's the company doing about it? Well, it's rolled out Corona no alcohol. It's come out with Modelo Oro, a 90-calorie version of Modelo. So it's doing what it can do, but, you know, now that it's downsized the wine and spirits segment, about 85–90% of the company's sales is beer. So there's not many places where it can run. It just has to do as best that it can in a troubled industry at the moment.
All right, Ken, thanks for joining us. Ken Shea there of Bloomberg Intelligence. You can find his work on the terminal. If you type in STZ Equity BICO, BICO is a command to find any Bloomberg Intelligence analyst covering any specific stock. Let's get to the ICE deal, and I'm not talking about immigration. The owner of the New York Stock Exchange plans to invest as much as $2 billion in cash and crypto-based betting platform Polymarket. Shares of Intercontinental Exchange, the original ICE, are higher on the news. ICE and Polymarket have agreed to partner on future tokenization initiatives. Bloomberg's Sally Bakewell leads our U.S. finance coverage. A lot of this stuff, if I were saying these words a few years ago, I wouldn't have believed it was a real story. But so this is happening. Like the operator of the floor is going to move towards tokenization.
Well, this is yet another example of traditional financial firms embracing the new guard, embracing the crypto players and embracing the prediction markets under this more friendly regime under President Trump. And anytime a storied institution like ICE, which owns the New York Stock Exchange, anytime that it puts a huge amount of money, $2 billion, into a business, it lends credibility to that business. And we could argue that Polymarket has been seeking to boost its credibility in the US because it was actually banned from US users in 2022, subject to probes examining whether it continued to allow US users to use its platforms, and those probes were dropped earlier this year. Again, another example of authorities under Trump reversing course on Biden-era actions.
Is something like Polymarket useful to investors? Has it been more and more popular?
Well, this is part of the deal. Polymarket, through this deal, it gets this direct channel to institutional investors who trade on NYSE. And then likewise for ICE, for NYSE, they get access to Polymarket's customers. So it's a great deal for both.
All right, Sally, great having you on the set. Thanks so much for joining us. Bloomberg Sally Bakewell covers finance for us. Get a quick check on futures. We are 21 minutes away from the opening bell, and we're looking at gains again here. S&P futures up 0.2%. NASDAQ futures gaining 1/3. Coming up next, we go live to the Greenwich Economic Forum, a special conversation with the founder of Bridgewater, Ray Dalio. He sits down with Bloomberg's Lisa Abramowitz. And later this hour, we'll head to Citadel's Future of Global Markets conference right here in New York City. My co-host, Danny Berger, sits down with former World Bank President David Malpass, followed by a conversation next hour with David Marcus, the CEO of Lightspark. This is Bloomberg Open Interest.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
The key issue right now for us in the diamond space is the declared divestment of Anglo from GBS. And as you know, Anglo holds 85% stake in GBS. Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in GBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way, We have targeted funders. We have parties. We have the Oman Sovereign Wealth Fund. We have others who are willing and ready.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Let's get to high interest now. Look at what's making headlines around the world. The World Trade Organization says the global goods trade will slow down sharply next year after a surprisingly strong first half of 2025. Merchandise trade is now expected to rise 2.4% this year, but just 0.5% in 2026 as President Trump's tariffs take fuller effect. The WTO says much of this year's strength came from surging shipments of AI-related products, even as trade and everything else barely grew. The White House is considering not paying federal employees for days they have been furloughed during the shutdown. It's a move that could run afoul of a law that mandates workers get back pay once the government reopens. Yesterday, President Trump said he was open to negotiating with Democrats over health care subsidies to bring an end to the funding standoff, but hours later, he reversed that position. Carlyle Group is filling in the data gap left by the U.S. shutdown, estimating that just 17,000 jobs were created in September, one of the weakest gains since the 2020 recession. The firm's private data shows a cooling labor market, even as other indicators suggest the broader economy remains resilient. And J.P. Morgan is footing a $115 million legal bill for two executives convicted of defrauding the bank, including Charlie Javis, who is now serving 7 years in prison. A Delaware court ruled J.P. Morgan had to cover legal costs tied to its $175 million purchase of Javis's company, Frank. The tab is almost 2/3 of what the bank paid for the deal. To put the $115 million figure in perspective, a high-priced lawyer billing $2,000 an hour would have to bill 8 hours every day, including weekends and holidays, for nearly 20 years to reach that total. But of course, a high-priced lawyer would bill far more than 8 hours in a day. All right, happening now at the Greenwich Economic Forum, Bloomberg's Lisa Abramowitz is speaking with Bridgewater founder Ray Dalio. Let's take a listen.
Credit, and look at where the credit spreads are. Credit spreads are very, very low. And so for those various reasons, my tilts would be away from those things.
And toward gold.
But again, yes, so more than would be a normal asset allocation mix. But I think you have to also say, start with what is a real dollar, if you're a dollar investor, a real return asset that you're going to hold as part of that portfolio. The most of the system is dependent on credit. Equities and everything is dependent on credit. You change credit and, then all sorts of things happen. And so it's an effective diversifier as well as probably the timing seems good.
Going to the 5 tenets that you were talking about, given the imbalances in the deficit, in the debt load, and the amount that people are going to have to sell, governments are going to have to sell, do you think it's appropriate for the Fed to be cutting rates right now?
I think the picture on cutting rates is slightly mixed. And it has to do with the split in the economy, and it has to do with split in capital markets, which means you're trying to look at the economy as a whole. But what you have is in certain sections of the economy, you have an enormous amount of liquidity, enormous amount of wealth. Things are like if you're in the top 1% of anything, or which is the top 1% of the income earners, the top 1% of the stocks, and AI, and so on and so forth. Wow, there's a tremendous amount of liquidity and fantastic. And so you would say, if anything, you'd worry more about the bubble and how you start to pull the punch bowl, that kind of thing. But we have a very diverse economy. So if you're looking at, let's say, the bottom 60% of the population, and the conditions of the bottom 60% of the bottom population, and labor markets, and so on, then you have a very, very different issue. I don't think monetary policy at all is going to be able to do that. I think that there's a strong situation where, you know, the natural instinct is if things aren't exactly like I would like and I'd like to make them better, I should ease monetary policy. Okay, so I mean, that's now, we've learned that, right? Because every time you do that and then things go up and people are happy and so on. But there's a cost in doing that, right? The cost in doing that is that there's, you know, one man's debts are another man's assets. And so when you artificially lower the interest rate so that it is not attractive, in a sense, to hold as an asset, and it's very attractive to borrow and buy things, that creates an imbalance. So I think that I think that discipline is not something that anybody seems to want, and yet I think it's needed. So when I think about the monetary policy and so on, I think not much, if any, but I also think it's not really dealing with the whole so well because of the disparity in the parts.
Going back to the video that you showed first, you're talking about these 250-year cycles and then 10 to 20-year periods where there's a transition of a power from one to another nation. And I just wonder if you see things the same way this time, because it seems like globally there are the same issues everywhere in terms of these imbalances and in terms of the deficit, in terms of nobody really wanting to take the punch bowl away at a time of increasing distress in certain pockets. Do you think it's different?
I think, and just to be clear, that's the whole cycle of the Great Cycle. In there are breakdowns of orders, right? So 1944, we had the breakdown of the monetary order. We had another breakdown in 1971, all right? So 1945, we had the breakdown of the most countries' political orders and most countries' geopolitical order, right? So we have those cycles, which are part of then the overall greater cycle, are worth keeping in mind. So they look a lot alike to me. So when I look at it and I look at the 30s, I think there's a lot to be learned about that particular dynamic. I think one shouldn't just believe a cycle is going to follow. I think it's like almost like a life cycle. You know, each person's life cycle is somewhat different, and it's caused by symptoms and conditions that could be measured. So you can look at the economy. You can look at the numbers themselves and see the health indicators. And that's what I did in the books I wrote and so on. So you can look at them directly. You can see how much, like a doctor taking, you know, a CAT scan of the circulatory system. You could see how it's squeezing out. You can see the supply-demand. You can see this dynamic happening. You can see it politically. You can see it globally. So you could see those breakdowns, okay? You have to then put them in the context, I think, of what the process is. What does a country do when it doesn't have enough money? Okay, there are a limited number of things. In order to see that, you can go back in history and get some understanding and also see what's going on now. So I think it's very, very similar to that. Just, to me, these all look like watching the same movie over and over again, except people use different technologies and they have different clothes and so on, and there are different people. But they look so much alike, so I think that this is pretty much looking like the typical process.
So everyone's asking, how does it end, right? Everyone wants to know how the book is going to end, how the movie's going to end. One thing that you've been talking about is how China has been taking over in a significant way, that the economy there has been growing tremendously. I just wonder whether some of the rebalancing and the rejiggering of the trade flows in the world are stymieing that progress, or whether they're a speed bump, or how that you see that fitting into the trajectory that you've been witnessing over the past 10 years.
Well, China has a number of problems that it has to deal with, which I'll touch on. However, since I started to go to China, which is 1984, and I went first for curiosity, and then because it was so interesting and I liked the relationship. Per capita incomes increased by 28 times. life expectancies increased by 10 years and so on. It's done them remarkable. But it now has very significant problems. I'll quickly take you through 4 or 5 of those. On its debt problems, its debts are all denominated in its own currencies and among Chinese, mostly speaking, but it needs a giant debt restructuring. The difficult one is the local governments, because the local governments in China account for more of the economy, and they're broke. The model, they were selling off land, earning money from land sales, and borrowing money to produce high production. And so not only do they have a debt, but they have a model for those local governments that is not an economic model. In other words, what do you do with businesses that don't work, that don't have a profit? And related to this is the rationing system, that they don't have a profit system. They've gone really mostly after quantity. So and the quantity, how do I maximize the quantity of production? Forgetting about the profitability of that. So when you have that, then you have the dynamic that they're now describing, which is now called involution, which is the fact of overproduction doing harm to the economy. That's going to require a big restructuring, like these big restructurings go, similar to what they did in the 90s. Zhu Runji was the vice premier and premier at the time who did this. But the way they go is you have to pick which companies are going to stay, and which go on the auction block, and which get restructured, and so on. Otherwise, they're going to have the problem similar to China, okay? Because Japan. Japan had the same thing, too much debt, but it was a surplus country, and the debt was in its currency, and they had locals. But you have to do that restructuring. So there's that. And then there's a number of things that we won't have, but certainly the world markets have changed. China produces manufactured goods, is dominant. 32% of the world's manufactured goods come from China. That's more than the United States, Japan, and Germany combined. And now their markets are being closed to them and so on. So they have to go to the third world. There are a number of these types of issues having to do with a pension system, an income tax system, and so on, that if they don't deal with well, and they're very difficult to deal with well, that'll be a burden on China, while at the same time, it's of course doing amazing innovations in a number of ways that are government directed. So I don't want to just say that it has those burdens, and it has a lot of really powerful thinking and quantity of engineers, and what can be done is quite something. They're more advanced in the use of AI for applications than the United States is, for example, actually using AI and so on. Anyway, that's too long of an answer, probably.
Would you rather invest?
That was Bridgewater founder Ray Dalio speaking at the Greenwich Economic Forum. You can continue to watch the full conversation on your Bloomberg terminal. Just type LIVE GO. You can also catch Ray Dalio on the latest episode of Leaders with Francine Lacroix. That airs this Friday at 7 p.m. Eastern on Bloomberg Television and at 8 p.m. on the Bloomberg Originals stream. Quick check on futures, about 5 minutes until the open of trade. We're looking at gains, only 0.1% on the S&P. NASDAQ futures up just about double that, and the Russell gaining as well. Less than 4 minutes now to go until the opening bell. We'll discuss concerns around profit-taking with BNY Wealth's Sinead Colton Grant. This is Bloomberg Open Interest.
there is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in.
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were gonna probably just hit it. And so far we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is gonna get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I'm never doing that again.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller. Danny Berger is on assignment, and you will see her on that assignment shortly. S&P futures in the green today. We have NASDAQ futures up a little more, 0.2%. Down at the New York Stock Exchange, you've got multiple former Rangers ringing the bell, including Henrik Lundqvist. I was interviewing this guy on the floor of the New York Stock Exchange the day I met my wife. So it's pretty cool for me to see that. Today kicks off their centennial season, 100 years of Rangers at Madison Square Garden. Down at the NASDAQ, you've got Expand, which is an energy play that has certainly expanded. The stock has tripled over the last 5 years, so good reason to smile. Stocks to watch today include Dell. That stock is up 5% right now in the cash trade after it doubled its growth estimates for sales and profit over the next 2 years, citing AI products. Obviously, IBM made an AI agreement with Anthropic's Claude. That family of large language models is going to be used in IBM software for coders. And AMD continues to rise on that OpenAI data deal that really kind of blows my mind. They're going to give 10% of their company to OpenAI so that OpenAI will please buy some of our chips. All right, another AI-driven record high yesterday. Stocks are seeing, well, green arrows, but maybe a little bit of fatigue today with valuations nearing extreme. Citi's Chris Montague says profit-taking risks have rapidly risen across markets and are particularly elevated for NASDAQ, potentially hampering further upside. Joining me at the desk is BNY Wealth Chief Investment Officer Sinead Colton Grant. Sinead, great to have you here. I wonder what you think of the idea that we're at the sort of profit-taking stage of the AI bubble already. Do we feel like we're that far along?
Well, it's a great question, Matt, and it's one that we talk a lot about with our clients, because the key question is, are we back in the 90s, right? Are we at a stage that's very similar to 99, early 2000? And our view is that no, it is not. And there are a couple of key reasons for that. Really, when you look at the fundamentals, free cash flow margins, they are 11% higher for the tech sector than for the rest of the S&P. So that's extremely attractive. Secondly, on a relative valuation basis, if you go back to the late 90s, the valuations of the tech sector were about 2.4 times the rest of the S&P. Today, that is 1.5 times. And when you think about the tailwind of growth coming through from the sector as a whole, specifically with AI, that still looks pretty attractive. Now, does that mean there won't be any volatility? Of course not. But for us, this is one of the mega trends that you really want to have exposure to.
But how much of this is real? I mean, NVIDIA is going to pay OpenAI $100 billion to buy its chips. Now, AMD is going to decimate itself for OpenAI to buy some of its chips. It just seems so circular. And is OpenAI really that much better than Anthropic or Llama or DeepSeek? I mean, they're all pretty clumsy.
Well, when you look at the adoption levels, there are significant differences based on the different models. And what we've been seeing is that certainly when it comes to DeepSeek, post the initial flurry, when we had the announcement, adoption levels have been much lower than for other models that have been much more prolific, and OpenAI is clearly at the forefront there. But look, this is a regime change. We talk about key mega trends that are going to be important, not just for the next couple of years, but the next several decades. And these are areas that are going to fundamentally change how we do business, how we go to work. We're already seeing an impact in the labor market, we think. So
a negative impact.
Well, it's a really interesting one because there are cyclical and structural forces at work, but certainly when it comes to hiring, the number of entry-level roles significantly lower over the last, call it 6 to 9 months, and we think that's as a result of the productivity gains from AI. You just don't need as many people to conduct those activities.
I want to get your take quickly on the Fed, because you mentioned the job market, and obviously that's why they're giving us these defensive cuts. Do you expect them to continue even as inflation, we think, is on the rise? We won't get the government data.
We're operating on sonar right now, right?
Yeah, exactly.
So look, let's just level set on inflation first of all. Inflation has been hovering in the high 2s, low 3s for quite some time. While it's clearly not at the Fed's goal, that's not a concerning level of inflation. Equity markets can do well, economies can do well. And when you think about the Fed's dual mandate with inflation and the jobs market is clearly under pressure. Now, having said that, we've seen unemployment rate rising to just over 4%, but there's a very significant recalibration that's happening. And that's one of the reasons why it's so concerning that we don't have the labor market data from the government, because what we're seeing are structural forces offsetting cyclical ones. And here's what I mean by that. With demographics, there's clearly less supply of labor. With greater immigration controls, less supply of labor. But then on the other side of the equation, there's less demand as a result of AI and productivity gains. And so taking all of those together, we do think it makes sense. We're seeing a slightly softer labor market. The Fed needs to continue to cut. We're expecting 2 cuts through the end of the year. And let's not forget that while the consumer in aggregate is very healthy, when you start peeling back the layers and looking at even the bottom 90% of the consumer base here in the US, you're seeing increased credit card delinquencies, auto loan delinquencies. So they're really feeling the pinch of higher prices and a slower labor market.
What do you look to, Sinead, to help guide you? What do you use as your sonar here as we don't have the government data? On the job side of the equation, it seems like there's so much more, right? ADP, Challenger, Carlisle put out its indicator today. What do you look at for inflation?
So obviously, there's a lot of anecdotal evidence, but when it comes to inflation, we are looking at where are we going to get the biggest bang for our buck, right? One of the largest components of the inflation reading is shelter. That has been in a concerted downward trend, and so that typically has quite a long life to it. So we expect that to continue. Offsetting that, we know that food price inflation is continuing to move a little higher. And so really you're putting together a jigsaw of how are all of these components interacting. But look, as we say, our expectation is we hover around the high 2s, low 3s for the foreseeable future.
All right, great having you in the studio. Thanks so much for joining us. Sinead Colton-Grant there, BNY Wealth's Chief Investment Officer. Let's get a quick check on the stock market now. About 7 minutes into the session, we're continuing to look at gains here. This is the move screen, which you probably know by now if you watch this program regularly, is what I think is the most dynamic way to look at the S&P 500. You get a good picture of the breadth here, 3 to 2, so 3 stocks gaining for every 2 that are falling. Right now we're up about 10 points, and if you look at who's adding the most points, NVIDIA puts up 4 of those, AMD adding 2.5, Amazon adding 2, and then you start to move down some of the other companies that are gaining. In terms of the losers, J&J is the biggest loser in terms of point deductions, taking away 1 1/3 points from the index. Tesla is down as well, only 0.5%, but it takes almost 1 full point from the index. Then you see Broadcom, Microsoft, and Eli Lilly bringing up the rear. In terms of the industry groups that we're looking at today, it's a pretty even split here. Financials, tech, and utilities are leading the gains. The losers are healthcare, consumer staples, real estate, energy, consumer discretionary. So some of these are defensive. Coming up, we head back to Citadel's Future of Global Markets conference. That's where my co-anchor is on assignment right now. Danny Berger sits down with former World Bank President David Malpass. This is Bloomberg Open Interest.
Do you think the dollar will remain the only reserve currency in the world, and are you as comfortable with the dollar as you used to be?
The dollar has been, as you say, a reserve currency for about 80 years. Actually, if you wanted to go further back, you could say it's almost after World War I, when the US had lent money to Europe and the UK for ammunition and so on, and then they had to get paid back in dollars, and that's when the strength of the dollar really began. So it's 100 years, 80 years, 100 years of dollar strength, so much so that important commodities, gold, oil, are denominated in dollars. Dollars are part of the payment system. When countries talk to each other, they represent their GDP and various figures in dollars. I think undoing that will take a long, long time. And, 3% in foreign exchange terms is not that much.
Okay, so you think the dollar will stay as the reserve currency of the
Absolutely.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question. Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Time now for our top calls, some of the analyst action to focus on this morning. First up, AMD getting upgraded to a buy at Jefferies. Jefferies raising its price target to a street high of $300 a share following the deal with OpenAI. The analyst says The partnership is a validation of AMD's AI roadmap and highlights the strong demand for the technology. AMD stock has been on a tear this year. You can see up 80%. Next up, Fifth Third Bank is getting raised to a buy at Morgan Stanley following news it would buy Comerica. The analyst says the acquisition is a good strategic fit for Fifth Third, and you can see those shares up 0.8% this morning. And finally, Evercore ISI is downgrading home builder stocks, including D.R. Horton. The analyst says the sector rallied this summer in anticipation of falling mortgage rates that could power a rebound in housing demand, but that just hasn't happened yet. D.R. Horton shares falling more than 3% as a result. Billionaire Ken Griffin is warning about the rush to gold. The Citadel CEO says the all-time highs for gold is a concern for the U.S. dollar. He spoke at Citadel's Future of Global Markets conference here in New York City.
As you see sovereigns around the world, as you see central banks around the world, as you see individual investors around the world go, you know what? I now view gold as a safe harbor asset in a way that the dollar used to be viewed. That's what's really concerning to me.
My co-host Danny Berger is at the Citadel conference. She joins us now with former president of the World Bank, David Malpass. Danny?
Matt, thank you so much, and that is indeed correct. I am here with David Malpass. David, thank you so much for joining this morning. Wonderful to see you.
Thank you, Danny. Nice to see you.
So for some time this year, you've really been arguing that this is central bank policy and a Fed that needs to be proactive, that needs to cut and turn to a more pro-growth policy. We did get a cut from the Fed last month. The dots indicated we'd get 2 more. Are you more comfortable now with the Fed's posture?
I'm happy they cut. I think they should have cut in June, but it's very important how they communicate and think about why they're able to cut. I think we need to shift the models a lot to where the Federal Reserve recognizes that production in the economy is going to be a key factor in inflation. Right now, they look backward at the inflation rate, and that's been problematic, so then they wait and wait and wait. So that's made them too late. This is not a new problem. This is a problem that the Fed's had for a long time if you look at the inflation rate, then you miss what's going on in the economy. I think also they have to say something about the dollar, that the dollar is really important. And if you think about the way prices are set, you need to have the purchasing power of the dollar actually support price stability within the economy. And that hasn't been occurring.
And I know you've said previously that a strong dollar, the strength and continuity of the dollar should be an important goal for the Fed. Is there a concern, though, if they are cutting much more, especially as Europe stops cutting, that you get a material weakness in the dollar, and that acts against the very goal that you're trying to accomplish?
I actually argue for a stable dollar, not a strong dollar, because that's going to really affect competitiveness. The U.S. is trying to, and President Trump has a policy of bringing manufacturing to the U.S. So you don't want a strong dollar, but you do want it to be stable in purchasing power so that you don't have an inflation problem. And I think that's what's missing in the Fed's current thinking and statements about it. The upside, there's a huge upside. If you say that you're going to maintain the purchasing power of the dollar or defend the dollar, then you can have the whole yield curve be lower. That's the short end and the long end, which, again, we're not achieving so far. In the Biden administration, the Fed cut rates and the yields went up because no one explained or said to the government, you've got to spend less money and you've got to really got to have stronger investment in the U.S. They were regulating it so harshly that people didn't want to invest. So we have a conducive environment now. It's quite possible for the Fed to shift to a model where they're more welcoming of growth that would allow faster growth without them leaning against it. That's what we have to avoid right now.
And David, again, some very clear ideas here. Have you had any conversations with this government, with Scott Bessent, about maybe being on the Fed next year?
I was very happy with Secretary Bessent's article in the Wall Street Journal and in the magazine International Economy, where he laid out some of the reform challenges for the Fed. And so I think that's going to be really important in where the world goes. Can you get a U.S. Federal Reserve that leads the world toward more stability? And that gives you lower interest rates for the countries that are doing well. It's going to be a bit of a competition among countries to see who's got better regulatory policies, better energy policies, better legislation on stable coins, which the U.S. is right now leading on.
So,
That's
David,
really
if you were
important.
called to help lead this reform, would the answer be yes? Would you join the Fed if asked?
You know, I was honored to serve and would be, and always am. What I want to see is the U.S. do really well with this economic plan, and I think that can lift the whole world, too. I really think there is positive opportunities that people are, you know, not talking enough about right now.
Are you concerned then, with all of this going on, the fact we just heard from the Citadel founder, Ken Griffin, about gold being at a new high, Bitcoin is at a new high. Are you concerned that these other pockets are gaining in terms of either havens, or as people turn away from global currencies and sovereign debt, is that an issue right now?
It's an issue because they're moving and they're momentum-based markets. I think the good news is there's not that much capital being diverted into them yet, so it's not a matter of them draining resources. It's a matter, are they signaling indifference to the dollar? And by central banks in general, are they indifferent to the value of their currencies? In that case, people go into a safe haven, as you're calling it, or a debasement trade. I don't think that's, it's not fatalism at all in that. The U.S. has full range of choice to say that the dollar is the best currency in the world. It can be defended. It doesn't take higher interest rates to defend it. It takes the statement that you care, that you respect the dollar, and that can be done pretty easily and recover some of that that instability that we have right now.
Are you concerned that a prolonged government shutdown, for example, we're in day 7, I believe, of a government shutdown, could exacerbate or ignite instability?
No, not on the government shutdown. I've been in and out of government, and I don't think that's such a problem. It's very important to have an efficient government in the U.S., but it can be much smaller, and so that's part of what's going on right now, a fight over how much waste are you going to tolerate, and that's a political issue. So that's not so much the issue to me. Very important is energy, and how do you form leadership on that in actual production? How do you get through the permitting process, the regulatory process on nuclear power, on natural gas? Each of these, the concrete things that countries do to enable growth are going to be very important right now. People talk about the world order. They somehow have this romantic notion that it was being done well before. It wasn't. It was really failing. And so now there's the opportunity to set up a system that works for the United States and I think works for other countries. But it's going to be new trade policies, new central bank policies, and new energy policies. That's all got to be put together quickly.
All right, well, we'll have to leave it on that note. I know you also have a panel to get to, so we will let you go. David, thank you so much for joining this morning. And Matt, that was, of course, David Malpass, the former president of the World Bank, on changes that he needs to see, whether it be energy reform or reform to the central bank.
Yeah, absolutely. With a wealth of experience that not many people can match. Danny Berger speaking with David Malpass. She'll be back in the next hour with David Marcus, the CEO of Lightspark. We'll bring you that interview. Coming up on this program, though, it's not just OpenAI deals moving stocks. Even the public mention of a company by OpenAI executives can send shares higher. That's next. This is Bloomberg Open Interest.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
We see there are multiples of demand that are latent and untapped from what we have today. And even today, obviously, by any standard, demand and revenue growth has been torrid in its pace. And so really we have to invest ahead of that. And I think that's going to be the rate limiter for us to be able to go capture demand, whether it's consumer or enterprise.
OpenAI COO Brad Lightcap telling Bloomberg about his company's surge in demand. OpenAI has become the stock market kingmaker with its recent deals. Even the mention of companies by OpenAI executives can send the stock spiking, as you see here. Bloomberg Tech's Caroline Hyde joins me now. And Caroline, we have companies decimating themselves to get in business with OpenAI, right? I mean, AMD is giving a 10% stake in themselves to convince OpenAI to buy their chips.
And there we were thinking that compute demand was limitless. And yet we're still seeing all these sweetened deals where companies are sort of giving OpenAI an edge because they get in return a massive increase in their own market capitalization. You've seen it with Oracle, you've seen it with AMD, but it's not just AI infrastructure deals. It's just about putting your company's very bread and butter within ChatGPT. ChatGPT is becoming a super app. They don't want you to leave. But what can you do is you can use FigJam, so Figma's software, to help build the latest application you're doing within ChatGPT. You want to go on a road trip, you can use Spotify to build your playlist. But Spotify is integrating within ChatGPT. Both these stocks rally hard. Figma was up at 1.16% on the back of this. Expedia, we were all worried about how travel companies were going to be decimated by ChatGPT, but ChatGPT is kind of giving them a lifeline, saying, come on in, we'll fold you in, we'll be a partner. Expedia goes up and to the right yesterday. We see spikes in Mattel because you can use Sora 2 to develop your next toy. Is this huge productivity gains, Mattel, or is this just Mattel being name-checked and Mattel stock riding? It's got this meme vibe to it, but is this momentum? Is this real material productivity gains? Is it madness?
That's a good question. Harvard and Stanford did a study and found that for a lot of employees, they're using AI to create work slop, you know, which isn't really moving the ball forward. I'm guilty of this. I sit on ChatGPT all morning long, and I could easily accomplish the same task in half the time if I didn't use it.
But the fact that you're integrating it into your workflow might give the productivity gains a plenty in a year or so. Many that will come back. When you cite the MIT report, when you worry about 95% of all these pilots not working, most will say it just takes time, it takes integration. The transformative effect of the internet didn't happen overnight. It took years, it took decades. But there are companies that will win, there are companies that will lose, and we're still at the very first innings. If you're going to be bullish about all of this, I can also see the cynicism in some of the way in which these deals and the money flows are going.
Looks circular. All right, Caroline Hyde, we look forward to your program, Bloomberg Tech, at 11 a.m. She will be talking to the CEO of CoreWeave at 11. This is Bloomberg.
NYK's sustainability efforts have produced a breakthrough. The tugboat Sakigake is the world's first ammonia-powered vessel in commercial use.
LNG can decrease emission of the carbon dioxide compared with the heavy fuel oil, the 25% more or less. But ammonia, 95% decrease can be achieved.
According to Bloomberg NEF, ships powered by LNG and other alternative fuels make up nearly 40% of the global shipping order book.
This is funded by the NEDO, so-called Japanese agency. And also the NEDO has the kind of the GI funds and the Green Innovation Funds. And also the Japanese government is supporting the usage of the ammonia as the power-generating fuel.
It's more expensive than normal standard fuels.
Yes, it is. And at this moment, and the supply of the ammonia volume is very much limited compared with the LNG and also the heavy fuel oil. But in order to promote ammonia as a marine fuel, together with the other industry players, and we can have the kind of the mass production, then the cost will be decreased. Then the next 10 years, we try to increase the number of the vessels powered by the ammonia.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Lizzie Burden outside Windsor Castle, England, and this is Bloomberg.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. The Supreme Court begins hearing arguments this hour on state bans on conversion therapy for LGBTQ children. Kaylee Childs is the Christian counselor who filed the suit.
We as counselors know that we should not be imposing our values on our clients. The problem right now is that Colorado is using me to impose their values on my client.
Curtis Lopez Galloway went to conversion therapy when he was 16.
They have a duty to make sure that they're following ethics and make sure they're following actual scientific practices.
We are now in day 7 of the government shutdown, and problems are growing at the airports.
Clearance is closed, ground's closed, local's closed, the tower is closed due to staffing.
Air traffic controllers staging passive protests. CBS's Chris Van Cleve is at the airport in Phoenix.
The Air Traffic Controllers Union says in a statement attempted to downplay these staffing issues. It is normal for a few air traffic controllers to call in sick on any given day, and this is the latest example of how fragile our aviation system is in the midst of a national shortage.
Thousands of flights have been delayed or canceled. New milestone for gold. It soared to a new record today, hitting $4,000 an ounce for the first time, as investors look for safe places to stash their money during the government shutdown. President Trump has announced new 25% tariffs on imported medium and heavy-duty trucks. Correspondent Michael Wallace.
The new tariffs will cover semis, tractor-trailers, delivery trucks, garbage trucks, and school buses. The U.S. Chamber of Commerce had argued against the tariffs because the top 5 truck importers, Mexico, Canada, Japan, Germany, and Finland, are all close allies who pose no threat to U.S. national security.
It's been 2 years since Hamas-led militants poured into southern Israel and stormed army bases, kibbutzes, and a music festival, killing about 1,200 people and abducting 251 others. Orit Barron's daughter and her fiancé among the victims at the Nova Festival.
She's my heart, and they took it from me. I can never be happy, complete, ever again.
A Hamas official says the attack was a historic response to Israel's actions. Peace talks between the two sides have resumed today in Egypt. The Nobel Prize in Physics announced in Stockholm this morning.
John Clark, Michel Devoret,
and John Martinis for the discovery of macroscopic quantum mechanical tunneling and energy quantization in an electric circuit.
American Martinez did his research at UC Santa Barbara, the others at Berkeley and Yale. This is CBS News. Bill Nye, the science guy, is warning about planned cuts to NASA.
The White House budget proposal would slash NASA funding by about 25% for fiscal year 2026, putting dozens of missions at risk.
The United States would cede leadership to other countries, especially China National Space Administration.
Bill Nye, the science guy, tells the CBS News Takeout podcast that could affect getting Americans back to the moon and key samples back from Mars.
China National Space is going to launch in 2028 and bring them back in 2033. Meanwhile, the U.S.
Acting NASA Administrator Sean Duffy has said he's confident the U.S. will beat China to the moon and Mars. Steve Kathan, CBS News.
Emergency crews in Madrid are scrambling to find 4 missing workers after a building under renovation near the city's opera house collapsed today. 10 people were injured. The most serious has a fractured leg. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, we are streaming live on YouTube as well. So head over to youtube.com and search Bloomberg Local Radio, and that's where you'll find us. Scarlett Fu, Paul Sweeney, we're live with you with the Bloomberg Intelligence Program. Coming up, we're going to check in with Ed Ludlow, B-Tech co-anchor. Dell raises estimates, not for like the next quarter, for the next 4 years. So, I mean, good for them. AI, it's AI again, folks. That's coming to the rescue for Dell. Christina Hooper, Chief Market Strategist at the Man Group, will discuss her market outlook. Always love checking in with Christine Hooper. Nathan Naidu, Bloomberg Intelligence Technology Research Analyst on Apple up and probed by the SEC over its data collection practices. And then Ken Shea, Bloomberg Intelligence Senior Consumer Analyst, talk to us about Constellation Brands earnings here. We're getting some earnings starting to kick in a little bit here, so we'll have that for you. But right now, let's kick this whole thing off with John Tucker, NA, Bloomberg Business Flash. John.
And this report, guys, being brought to you by IBKR. Will the Fed leave the rate unchanged at the October 29, 2025 meeting? At IBKR Forecast Trader, the yes was recently at 38%. You can start predicting today at ibkr.com/forecast. Last trading day for this contract is October 29th. After a record close for the S&P 500 and the NASDAQ yesterday, we are right now higher for those two indexes in the early going. The NASDAQ right now up 29 points. S&P 500 just 3 points higher. The Dow Jones Industrial Average is down 15. Dell is helped boosting some investor sentiment. The company, as you just mentioned, Paul, unveiling the long-term financial framework. It calls for sales to rise at a rate of 7 to 9% annually for the next 4 years, while earnings per share, when you strip out certain items, will increase, they say, 15% or more. Dell shares in the early going Right now 3.3% higher. And Armonk-based IBM getting a lot of investor attention. They are investing in a startup that you know as Anthropic. Anthropic is behind Claude. That's the family of the large language model. So basically anything AI, to the moon. IBM shares this morning up, 3%. And AMD, they have yet to run out of rocket fuel after yesterday's surge. It's the most active. Of course, they landed that blockbuster deal with OpenAI. And shares right now, they are up another 5.1%. And it has come off the highs of the morning, pairing some of the earlier gains. Trilogy Metals up now only 217%. They're based in Vancouver, and the U.S. government taking a 10% stake. They do a lot of mining for stuff in Alaska. And, Ford, let's do that. One of the most active of those shares, down 5.8%. I'm not sure why, but there was a fascinating article in the Wall Street Journal about a fire in upstate New York 3 weeks ago at a plant that makes aluminum, and Ford is one of the companies that gets their aluminum for this plant. Okay. It is shut down until sometime next year, and they use that aluminum for, among other things, the Ford F-150, the most popular vehicle in the U.S. right now.
And that's going to be costly, I'm sure.
It is going to be costly. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Scarlett, the lady in red this morning.
Well, that is my name, so it makes sense.
Yeah.
All right, John Tucker, thank you so much. And he cited a lot of old tech companies, legacy tech companies, getting a big boost on this AI link. So let's bring in Christina Kino and take a look at some stocks on the move today. Paul Sweeney here with Scarlett Fu, and of course, our Christina Kino does this for us on a daily basis. And Christine, I look at Dell, and the shares are at the highest since May of 2024, last year.
Yeah, absolutely, Scarlett. I mean, that's getting definitely a windfall from that deal. So Dell shares, ticker DELL, shares now up just 2.6% though. So pairing some of those strong opening gains. And so you can kind of get a sense that, okay, now we've gotten the news of their improved long-term financial framework. Investors are maybe starting to question what's the catch, right? And, the catch is that there is some concern that the cost of rolling out the equipment is going to be expensive. And so the question for investors is what's going to happen to profit margins? And so Chief Operating Officer Jeff Clark is meant to be reinforcing at their investor event today that, the AI server business is facing mid-single digit operating margins. But even our Bloomberg Intelligence analysts are saying that they will still need to show improvement on those server margins. Operating scale and buybacks will help, but that's something that investors are looking for at the moment with this monster deal.
What's going on with AppLovin?
AppLovin. So AppLovin shares, ticker APP, those are up at the moment. They're rebounding now, more than 6.7% currently, but they did fall 14% yesterday, and that is because just before the close, Bloomberg News exclusively reported that there are sources saying the Securities Exchange Commission has been probing the company for its data collection practices. And so the agency is specifically looking into allegations that AppLovin violated platform partners' service agreements to push more targeted advertising to customers. AppLovin did decline to comment. They say that it's generally not speaking on any potential regulatory matters. So getting a bit of a rebound after that big drop yesterday, but watch the space for more developments in that case.
Okay, and Christine, we're also looking at Dollar Tree in the retail space.
Absolutely, Scarlett. Dollar Tree, ticker DLTR. Those shares not doing so well at the moment, down 2.9%. And I'm seeing on the Bloomberg that is the fifth straight day of declines there. We did see a pair of analyst cuts to start the week for Dollar Tree. Jefferies downgraded the retailer to underperform from hold. Analysts are citing inflation, management decisions, and tariffs as some of the reasons why it is now a more complex environment for Dollar Tree. They're also citing specifically rising competitive intensity and a disadvantage from Walmart because, of course, the big box retailer very much competing in terms of low prices. And then, of course, we also got Bernstein cutting their price target for Dollar Tree to 100 from 109, still maintaining a market perform rating.
All right, Christina Aquino, thank you so much with our market movers on the day. And for more conversations like this, be sure to subscribe to our new Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Christine was telling us about Dell. Let's dig a little deeper into this guidance that the company offered. I'd say it's more than guidance, isn't it?
It's kind of a long-term vision a little bit of where the business is going.
Exactly. And, you know, in the tech industry, to be able to kind of project out that far is pretty notable. Let's bring in Ed Ludlow, who is our B-Tech co-anchor based in San Francisco. And Ed, one thing that I noticed about Dell is that this is another legacy tech company that's getting a big boost here from the whole AI play. And Dell is doing that through its AI servers, but it still has another part of its conventional business that is holding up at least.
Yeah, exactly. I mean, you guys make really good points about is this guidance or more? It's kind of like a reset on Dell's position in the AI market. It's another example of like, well, if we're all sort of very hyped up about data center builds out and NVIDIA's getting all of this love and we're very focused on energy, then why do we not talk more about Dell? If you build a data center, whether that is hyperscale or it's an on-premises smaller facility that any given sort of software company operates themselves, Dell is likely to play a part. You know, they assemble servers. That needs to happen. You don't just sort of put all the chips in a pile on the floor. And so it's taken a while for investors to kind of give Dell credit for that. A part of the reason being that because this build out of infrastructure is so fast, Dell's margins on the AI server business have really suffered because you have to spend money to move quickly. And a big part of the guidance they gave us through to fiscal 30 is that profit picture for the AI server business is really going to improve. And as you say, the core business, which is kind of PC as well, is supporting them do that in the interim.
Dell stock is up 2.5% today. It's hit a 52-week high today. It's up 30% year to date. It's not an all-time high. That was back in 2024, but it's certainly going in the right direction here. So, Ed, how does a company position itself as an AI player? Are they playing that up? Are they saying, hey, we're in a good position? I mean, how are they kind of positioning their company as an AI story?
So right now in New York City, all of the executives are on a stage talking about bigging themselves up.
Yep.
And the main argument that they're making is that on-premises part I was talking about. So in the future, Dell argues, 85% of all enterprises are going to have some form of on-prem footprint themselves. Okay. And Dell, which has a rich history of selling to businesses of small and large and the public sector, is best positioned to participate in that. And the idea, right, is that this all started with the hyperscalers, the cloud computing companies, and their capital expenditures. But the ripple effect is that we're now seeing smaller companies in software in particular justify budgets to spend on their own technology because they see a return on the other side, literally revenues driven by AI. So that's what Dell's argument is here. You know, you guys, the story is that through 2030, they've basically almost doubled their forecast for the top and bottom line. 7 to 9% top line growth and adjusted EPS growth of around 15%. Yep. And a big part of that story is just more people doing business with them.
So one thing that stuck out to me, Ed, is the comments from the COO, Jeff Clark, saying we were all wrong about how big we thought the AI market was 2 years ago, and it's nothing but bigger. Does Dell have a reputation as being conservative when kind of guiding along its vision, or is this a company that usually nails it in terms of its forecasts?
I don't know conservative is fair. I mean, like, you have to assess the business that they're doing in the here and now and the pipeline of business that they say has to come. And so, like, Dina Bass, our colleague, did a really good job of explaining that in the quarter. There is the sales that they've had committed to them. They booked $5.6 billion of new AI server business in the quarter. They shipped $8.2 billion worth of business in the quarter, so like actual sales. And then in the future, they have a backlog of $12 billion. It's not that new an idea that there's a pipeline of business. It takes time to assemble servers, ship them out onto location. The thing that they need to justify is like, what's the value add that they do? So I told you earlier in this segment, they say margins will improve. The thing is that all they're really doing is assembling something. They're not sort of contributing some amazing technology. That's what NVIDIA's doing.
It's amazing.
So, yeah.
All right, Ed, thanks so much. Always great checking in with you. Ed Ludlow, he's our go-to guy on the technology side, VTech out there in San Francisco. All right, folks, join us later on this morning, 11:30 a.m. Eastern, with an interview with Jamie Dimon. The J.P. Morgan CEO sits down with Bloomberg's Tom McKenzie for a conversation from J.P. Morgan's Techstars event in London. Listen for that interview with Jamie Dimon on Bloomberg Radio and watch on the Bloomberg Podcast YouTube channel at 11:30 a.m. Eastern this morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash, and we're being brought to you by Oracle. Attention, growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. The major stock averages mixed to a little change right now. S&P 500 kind of dead flat, up only a point. Dow Jones Industrial average 10 points lower, and the NASDAQ 100 right now, that is up 43 points. And only 4 of the 11 major industry groups in the S&P 500 are higher. And surprisingly enough, it is the utilities that are the best performing industry group. With all the focus on artificial intelligence, you got to power all those data centers. So, I mean, that's my explanation for that. Almost counterintuitively, you have energy, the worst performing of the major industry groups in the S&P 500 right now. That's because energy right now in the form of Brent crude and NYMEX crude, American crude, they are down just over 0.5% each. You have the shutdown and you have political turmoil in places like France. You also have central banks like the Chinese central bank buying gold, and that is pushing the precious metal up over $4,000 an ounce. First time that's ever happened. And the rocket fuel certainly hasn't petered out for advanced micro devices. It right now is the most active after yesterday's surge. Those shares right now, they are up 5%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Scarlett and Paul.
All right, John, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. The government shutdown, we're into the second week of the shutdown, but the markets are just kind of hanging in there. Not real much movement here today, pretty steady. Let's check in with Christina Hooper, Chief Global Market Strategist for the Man Group. Christina, we're back kind of, I can't say it's unprecedented because we've been here before with this government shutdown. We don't have really much economic data coming out of the government at all to kind of trade on. What's your view of how markets are kind of digesting this shutdown?
I think markets are frankly ignoring it. There are blinders on. There's a lot of excitement around AI, and that is generating enough enthusiasm that investors can really ignore this government shutdown.
Yeah, I just look at the NASDAQ 100 at a record high once again. The chart is just, keeps scaling these new heights. And you've got, so far in the second half, AppLovin up 79%, Intel up 70%, Micron gaining 55%, AMD up 51%. Christina, with the exception of AppLovin, what does it say about how these old school tech companies, the legacy tech companies, are now the latest beneficiaries of the AI trade?
Well, Scarlett, I think it's just about the AI food chain phenomenon. We continue to encounter more ideas, more themes around AI. Oh, by the way, X company is going to benefit from AI. It wasn't originally thought of, utilities and the potential that utilities had to benefit from AI, but it became part of the AI food chain, and we've seen a lot of strength there. And I think similarly, we're seeing a lot of the old school traditional tech companies, a light bulb goes on and there's a recognition on the part of investors or the company, and the company tells investors, hey, we're part of the AI food chain too, so you should be excited about us.
Outside of the AI theme, which again is just all over the place here in terms of a driver for this market, what else are you looking at, Christina, maybe inside the U.S., outside the U.S., where are some other opportunities?
Well, of course, I've been talking about gold for a while, and that to me is serving several different purposes in a portfolio. It has been used as a hedge against geopolitical risk, but it has also been used as an alternative safe haven asset. So as concerns have arisen about fiscal sustainability in the U.S., gold has started to erode U.S. Treasury's position as the safe haven asset class. I think gold owns that now. And so for many investors who are very excited about the stock market and want to participate in it, but are nervous that at some point this will come to an end, gold has been an attractive inclusion in portfolios. Of course, we also have another number of other catalysts driving gold. Beyond that, I think there's a lot of opportunity in investment grade bonds, especially in Europe. I think there's a lot of fiscal stimulus coming. That should be a positive. I think balance sheets look quite good. There are a number of areas of opportunity beyond the obvious with AI.
Yeah, gold is part of that debasement trade where people are trying to get away from U.S. issued assets like the dollar, like treasuries. Bitcoin is obviously another beneficiary of the debasement trade. How often is that coming up in your conversations with clients, Christina?
Well, it certainly is coming up, and there's excitement around it, especially just given the administration's interest and support of it. So certainly part of conversations. It's interesting. I remember a decade ago, it was very much part of retail client conversations. But then around 2018, 2019, institutional investors got excited. I think that's only growing as there seems to be more of a willingness to be supportive of it from a government perspective.
Fixed income, Christina, you can get a 2-year treasury at 3.58%. Do you do that, or you take some credit risk here?
I think you do both. This is an environment in which we don't know how things play out. I mean, I have a sense that we're likely to see the U.S. go into a modest recession, but the reality is we don't know, and markets are behaving quite differently than you would normally expect. So I would imagine that that we could see a variety of different scenarios. I would hedge my bets, have some exposure to credit and even some high yield, but also be on the short end of the Treasury curve and have some exposure there.
We've got a 3-year auction today. I think it's something like $58 billion of 3-year notes being sold at 1 p.m. today. The government is still selling debt, even if the government is shut down. Do you see an issue with demand for some of the longer-term debt that the government needs to sell?
So I think the government is certainly trying to focus on short-term debt. I think it recognizes the perils of long-term debt, especially right now, and reduced appetite there. I think there is a very real risk that we see an emergence of bond vigilantism, far more than the little bursts we've seen in recent months. And I think that's a very, very real concern. I think we could see Treasury yields spike significantly higher. The U.S. is not fiscally disciplined, and I think it's going to get worse, and we're going to have more concerns about it.
Christina Hooper, she's the Chief Global Market Strategist at the Man Group. Oh, thank you very much. Christina Hooper, thank you so much for joining us, Chief Global Market Strategist at the Man Group. AppLovin, stock's up 8%. That's despite the fact that the AppLovin, this company is being probed by the SEC over its data collection practices. I don't know how to play that.
I know. The stock is the best performing NASDAQ member in the second half of this year, up 79%.
Wow. Okay, I have to start with the pro we're going to go to. Nathan Naidu, Bloomberg Intelligence Technology Research Analyst. Nathan, I don't know a lot about this company. Tell our viewers and our listeners about AppLovin, number one, and number two. What is this? What's the SEC interested in?
So essentially, AppLovin is in the business of helping advertisers, or helping rather owners of apps, primarily apps on the iOS devices, on Android, helping app publishers sell ad space inside of their apps to potential advertisers, meaning they help app owners make money off of selling ad space to advertisers, whether that be brands or another game potentially. And AppLovin typically charges a fee in mediating that transactions. So going on to the SEC probe, or potential SEC probe rather, because nothing is confirmed as of now, SEC allegedly is looking into its data collection practices, and there was a couple of links made to short seller reports that surfaced back in February, and that was also around the company business practices, particularly in its inflation of app installation numbers. And actually, in addition to this SEC probe, or potential SEC probe rather, there was a class action lawsuit filed in March, and it could advance to trial, according to our litigation analyst Matthew, based in Washington D.C. And so that's actually could be the bigger fish to fry for AppLovin, in addition to alongside its SEC probe from my point of view.
Okay, so there's negative catalysts for sure for this company, yet,
yeah,
as Paul points out, the stock is rising today. Is this because AppLovin is a meme stock?
Well, I don't know about AppLovin being a meme stock, but I mean, it certainly haven't made up all of the losses that we saw yesterday. The stock was down 14, 15% in one day, and I think you've made up partially that in today's gains. And because the SEC probe is not confirmed, and typically the biggest risk from this potential SEC probe is a penalty. If we look at SEC's published report for its fiscal 2024, the heaviest fine was $100 million. Meanwhile, AppLovin at the moment is pumping out $2 billion in free cash flow every year. So I think the SEC risk alone it wouldn't make much of a financial impact to AppLovin per se, but the bigger risk that we're watching here is definitely that potential class action lawsuit, because our analyst Matthew estimate that could be $750 million in fine if that goes to trials and AppLovin couldn't win a motion to dismiss in the next couple of months. So yeah.
Nathan, has the company responded at all or talked about this issue?
So the only allegations that the company denied was the allegations from the short sellers back in February. The company has not outwardly denied the allegations, or the potential allegations rather, from this latest SEC probe. So that's where we stand right now.
All right, Nathan, thank you so much. Nathan Naidoo is Bloomberg Intelligence's technology research analyst. AppLovin, again, being probed by the SEC, at least that is the reporting right now, over its data collection practices. And Paul, there are some platform partners here that you wonder if they're going to be tainted by any of this, because its partners include Meta, Amazon, and Google of Alphabet. So the biggest names.
Some of the biggest names in digital advertising. And digital advertising has been such a extraordinary growth story really for the last 15 plus years, as advertising dollars move away from traditional media, I think broadcast television and cable television, to digital media, and AppLovin's kind of right there in the middle of that.
Very well said.
Yep. All right, folks, join us here at 11:30 Eastern today for an interview with Jamie Dimon. The JP Morgan CEO sits down with Bloomberg's Tom McKenzie for a conversation from JP Morgan's Tech Stars event in London. Listen for that interview with Jamie Dimon on Bloomberg Radio, and watch on the Bloomberg Podcast YouTube channel at 11:30 a.m. this morning. So we got that coming your way.
I'm sure he'll have some commentary on the government shutdown. He's never been shy about his views on what Washington could be doing better.
No, I agree with you, Jamie Dimon. He's unvarnished, and he tells you what he thinks, and that's usually a good listen. S&P 500 pretty much unchanged on the day. The Dow's down 68. The Nasdaq's up 13 points. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash for you. Maybe signs of exhaustion after yesterday's record close for the S&P 500 and the NASDAQ. Mixed a little change for the major averages. This flash being brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with a 2-to-1 advisor-to-staff ratios. Most active, let's start with that. Advanced Micro Devices right now, up another 5%. The stock soared yesterday, as you know, briefly boosting its market cap by roughly $100 billion at an intraday high after they signed that deal with OpenAI. And then you have ICE. This is the Intercontinental Exchange, owner of the New York Stock Exchange. They plan to invest as much as $2 billion in cash in Polymarket, the crypto-based betting platform. The transaction values Polymarket at roughly $8 billion. And then let me do shares of IBM right now, up 3.4%. They have a pact with Anthropic, and they're going to use their large language models in some of their software. And right now, S&P 500, 5 points lower, 67.35 on the index. Dow Jones Industrial Average down 67 points. NASDAQ 100 right now, that is up 15 points. Paul, you can't play because I did this with you earlier, but Scarlett, America's top earning restaurant chain.
Top earning restaurant chain, Olive Garden?
Din Tai Fung.
Oh, yes. Love it.
You've heard of them. 17 U.S. locations, more
hard
on
to
the
get
way.
reservations.
They the average annual $27.4 million per U.S. location
the
is what it
Xiaolongbao
generates.
is so amazing.
And they've come to the East Coast in Manhattan, I believe.
Yes, in Midtown.
You've been?
I have.
And
the first time was not so great. The second time was much better. But I've gone numerous times in California, and the only reservation I could get, Paul, was like 10 p.m. on a Tuesday night.
Really?
Yeah.
Wow.
Yeah.
All right, John, you're on something.
I'm sold.
Yeah.
Okay.
So good.
Right.
And what does it serve? Kind of food?
Soup dumplings.
Okay.
Like-
I can't get excited about that.
Xiaolongbao. So good.
I don't even know what
so
that.
good.
I don't even know what that is. We check the markets and other stuff for you, 24
gotta get
hours
you
a
on
day,
this.
7 days a week, 365 days a year. I'm John Tucker, Paul, and Scarlett.
All right, JT, thank you so much. We appreciate that. Scarlett Fu, Paul Sweeney. We are live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. All right, I'm thinking Constellation Brands. You thinking Corona beer, Modelo beer, Pacifico beer. They got some wines stuff. Stock's down 35% year to date, and I'm thinking it has to do with the crackdown on immigration,
Tariffs as well.
and those brands. So I'm thinking of all that kind of weighing down on the stock. Let's check in with Ken Shea. He's the senior consumer products analyst for Bloomberg Intelligence. Ken, talk to us about Constellation Brands. What's weighing on the stock? What's the company doing about it?
Yeah, hi, Paul and Scarlett. Well, you mentioned two of the factors right there. It's definitely a slow beer market. Tariffs are playing a role, and also some of the crackdown, that ICE has had in inner community is hurting the Hispanic community and their socialization trends. All these things have been a factor for the last couple quarters. Today, the company said that their beer volumes were not quite as poor as a lot of street analysts expected today, but the pressures are still on, and they're very real for this company, and that's because their suite of products, as you mentioned, Corona, Modelo, these command high price points, about twice the level of a popular beer. So in times where consumers are pulling back, a little cautious about expenditures, got to remember, you've had high inflationary pricing in this category for the last few years. These brands aren't doing so well right now. And then compounding that with some of the factors that I mentioned and some longer term issues like cannabis substitution, things we talked about, GLP-1 user not drinking as much, moderation among Gen Z, all these things are weighing on the company right now.
Yeah, I'm super interested in what you said about the last part, like the structural changes in consumer taste, especially from Gen Z, younger people overall. Beer is just not where people want to be spending their money necessarily.
That seems to be the case. It's been around a long time. It's a $115 billion market that is growing very slowly. it's essentially flat. In fact, volumes are expected to be down low single digit this year. So clearly it's a very mature category. And what we've seen over the last few years is consumers just want different tastes. You know, you have a proliferation of the ready-to-drink cocktails, you know, like Truly and White Claws and more sophisticated, you know, margaritas in a can and so on. That's where a lot of the consumer who wants taste experimentation are going. And then you have other more mundane factors like just, you know, more conscientious calorie counts. And all these things are just weighing on this very, very mature industry.
So somebody like Constellation Brands, did they go out and look to maybe buy some of these brands or verticals that within the spirits business may be growing?
Well, they've had kind of a mixed history of M&A over the last few years. I'll be kind and say it that way. Not really. You know, they're downsizing their wine and spirits segment and try to shift it to more of a high-end mix, which I think they're having success with. But what that does is it makes their beer business even that much more important. It's now about 85% of their sales. So as beer goes, I mean, the company has really good brands and a lot of brand loyalty there. But again, there's not a lot of wiggle room there.
Right. So with beer becoming less popular, and you mentioned other big trends like Ozempic, weight loss drugs, and greater cannabis use, what is Constellation doing about non-alcoholic beverages?
Well, so they've rolled out a non-alcoholic Corona brand. They've come out a couple years ago. They came out with a low-calorie brand called Modelo Oro. A Corona, no alcohol, I think I mentioned. So those two brands, while they're relatively small, they see you know, a lot of opportunity that's on trend with what you said. So you know, they're doing that. They're also modifying some of their portfolio for more taste. There's consumers that want a lot of taste. They're coming out with you know, a fruity cerveza, and so they're doing as much as they can to stay on trend with consumers.
I love myself a grapefruit beer. Well, yeah, there's a German grapefruit beer that I really like. Yeah, tastes good.
So talk to us about this. Talk to us about this legal cannabis and obesity drugs and the impact that's having on kind of the beer business, the spirits business overall. Ken, is that something that a lot of your companies are calling out?
Yes. As a matter of fact, Paul, yesterday we came out with our BI came out with our 4th annual consumer survey on beverage preferences, and again, we see that consumers are substituting cannabis for alcohol. Of consumers that do partake in cannabis, now more than half have substituted for alcohol at least once a week. And that's up from 46% last year. So that's a trend that just keeps moving. Now you're seeing a lot of these cannabis companies coming out with hemp THC products, beverages that are sold in mainstream liquor stores. You know, traditional cannabis, legal cannabis sold in dispensaries, it was not really a big hit. But now that some of these federally legal hemp-based THC products, beverages, are sold in liquor stores right next to the beer aisle in about half the states in the country, that's really chipping away also at beer consumption.
Final question to you, Ken. What about return of cash to shareholders? I'm looking at the dividend yield, about 2.9% if you're being generous. Is Constellation Brands still able to make good on its dividends, continue buying back its shares?
Yeah, that's an important point, Scarlett. Yes, they can. Despite the pressure on sales, believe it or not, the operating margins that Constellation generates are best in class. They're about twice that of other alcoholic beverage companies in general. So they have strong cash flows. As a matter of fact, they're winding down construction of a brewery right now. Over the next couple of years, you're going to see free cash flow likely rising. So it's high and rising, and that's enabling them to continue to meet their commitments to share buybacks and dividends.
All right, good stuff. Ken Shea, Senior Consumer Products Analyst for Bloomberg Intelligence. Talk about Constellation Brands, the stock. Reported some numbers and a little bit better than expected, but still some headwinds for their core beer business. All right, join us this morning, 11:30 Eastern, for an interview with Jamie Dimon. The JP Morgan CEO sits down with Bloomberg's Tom McKenzie for a conversation from JP Morgan's Tech Stars event in London. Listen for that interview with Jamie Dimon on Bloomberg Radio and watch on the Bloomberg Podcast YouTube channel at 11:30 a.m. Eastern. this morning. This is Bloomberg.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, this is the the first hour of Bloomberg Intelligence, although we are approaching the second hour.
Exactly.
I'm just getting ahead of myself.
It's hour 4. No worries.
Hour 4 for Paul Sweeney. But, we're anticipating Jamie Dimon of JP Morgan Chase in the next hour, so that's why I'm getting all excited. In the meantime, let's talk to someone who knows the banking sector well and the financial structures sector very well, and she is Catherine Doherty of Bloomberg News. And Catherine, there's some news this morning about the owner of the New York Stock Exchange, the Intercontinental Exchange, investing up to $2 billion in cash in Polymarket, which is one of those prediction markets that it's crypto-based, isn't it?
It is, yes. It runs on the blockchain. So you have this storied institution, ICE, that owns the New York Stock Exchange, as you mentioned, and they're putting their money where their mouth is. It really is an indication of where the market is headed. So you have these institutional players that are teaming up with either crypto native firms, or in this case, it's also the prediction market based players. And we have seen this recently with also CME, the derivatives exchange based in Chicago. They're partnering with FanDuel, and most people associate FanDuel with sports betting, but they are big in prediction markets as well. And with CME and FanDuel, they're doing a markets-based prediction of yes or no. Will, for example, gold be above a certain benchmark? And this announcement today with ICE also shows a storied institution kind of getting behind the newer incumbents and showing where they see the next phase of the market headed.
What is Polymarket really do? I see them quoted around in the press and things like that.
So you've probably seen Polymarket around the time of the election. They were one of the platforms that users were placing bets on who was going to win the presidential election. They, at a time, were also in the news around 2022 because they were prohibited from actually operating in the U.S. And more recently, in the last few months in 2025, they've re-entered the U.S. market, and they've done so through two avenues. One, it's a changing regulatory environment. It's a crypto-friendly regulatory regime. And number two, they bought their own regulated derivatives platform that essentially allowed them, it was a pathway back into the United States market.
So with this deal, which values Polymarket at about $8 billion, ICE becomes the global distributor of Polymarket's event-driven data. What does that mean to have that data now in its hands? What can it do with that information? Because exchanges they're not just a platform for collecting commissions on trades. They're also huge sources of information data that they then sell.
That's right. It's a huge part of their business. And you have these big institutions that are paying millions of dollars for access to this data. And as the market becomes a mix of institutional client base and retail clients, that data, these companies, you have ICE, you have Polymarket, this combination is giving ICE access to retail clients that they otherwise wouldn't necessarily have access to, and vice versa. Polymarket gets now all of their data displayed through ICE channels that institutional clients have been set up and working with ICE for years. So it's a fast entryway for both companies to increase their user base, increase their access, and how they market themselves to an entirely new client.
So it just feels like some of these traditional exchanges, if you will, I think that, are they saying basically, hey, if we want to grow in the future, we have to embrace some of these new asset classes, whether it's crypto or whether it's predictive markets and things like that. Is that kind of what they're telling us?
I think that it's very much where they see their clients headed. There's a blurring line between you have hedge funds and traditional institutional firms, and then you have retail investors that at a time there was so much news during the meme stock era around who these users were that were in their basements, but now these are really sophisticated investors that are playing in the options market, prediction markets. Many of the leaders of these exchanges are saying there is no difference between what we've been running and at least a binary yes or no. Is this index going to be above or below a certain threshold? They're combining what was presumably two different worlds into one now.
And competitors of Polymarket include Kalshi and Crypto.com. Are you anticipating, Catherine, there's going to be similar tie-ups for those companies as well?
There is a race to, I believe that this is just the start, or really the CME partnership with FanDuel was kind of the first indication. This is just another, and I think that it's going to be off to the races in terms of who partners up next, because to build something from scratch is hard, and when you partner with a existing client base too, it is an easy way in to an entirely new market.
I tell you, it wasn't cheap. I'm reading Bloomberg Intelligence Research React from Paul Goldberg. This acquisition implies 50 times revenue is the purchase price there.
Ooh.
That's not cheap.
And it's an all-cash deal. They're just saying we're in.
Exactly. All right, very good. Catherine Doherty, thank you very much. Catherine's a finance reporter for Bloomberg News, joining us live here in our Bloomberg Interactive Brokers studio. And folks, for our listeners in the U.S., you can listen to us via satellite radio on SiriusXM Channel 121. Access to the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on SiriusXM Channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now with the S&P down 7 points. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, coming up here in this hour, we got a lot more going on. Scarlett Fu, Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio, and we are streaming live on YouTube as well. Coming up, Craig Trudell, Bloomberg Global Autos editor, give us the latest on Tesla. They're planning on unveiling a cheaper Tesla model. The market's been waiting for that, that's for sure. Anurag Rana, Bloomberg Intelligence technology analyst, talking to us about IBM. Look at IBM getting in on the AI trade with this Anthropic Enterprise software pack. So that's good news for AI and IBM. Nancy Daoud, private wealth advisor at Ameriprise Financial. She's going to give us her thoughts on these markets. And Nathan Dean, he is our Bloomberg Intelligence senior policy analyst down at DC. It's his job to kind of fix everything down there in Washington, D.C. So we'll get the latest reporting on what's happening with the shutdown. But first, let's go to Charlie Pellet and get a Bloomberg Business Flash.
Thank you very much, Paul Sweeney. Here's what's going on. We have got the Dow, the S&P, NASDAQ now lower across the board. NASDAQ 100 index turning negative as I speak. Right now we have got the S&P 500 index down 8. That is a drop of 0.1%. Dow Jones Industrial Average down 52, also down by 0.1%, while the NASDAQ Composite Index down 0.1%. The Russell 2000 Index of small cap shares down now by about 0.4%. Bottom line here, Wall Street failing to gain traction as a rally that drove stocks to record shows signs of fatigue. 10-year currently yielding 4.14% with a 2-year 3.58%. Gold is up $25 the ounce at $39.86. Indeed, a record there, up 0.6%. West Texas Intermediate crude 61.63 a barrel, down 0.1%. And right now, Bitcoin is down 1.9%, 122,894 on Bitcoin. Dell shares higher after delivering a bullish outlook. Dell roughly doubled its growth estimates for sales and profit over the next 2 years and said demand for AI products will extend those higher projections at least through the end of the 2030 fiscal year. Dell shares right now, they are up by 1.9%. Yesterday, you recall, AMD surged 23.7%. It is up again today by another 4.6%. So AI continues to remain in focus. As for the overall market backdrop, Brent Schutte is Chief Investment Officer at the Northwestern Mutual Life Insurance Company.
The market has been as narrow as it has been only one other time in history. So think about the percentage of stocks beating the S&P 500. It was 28 and 32% in 98, 99. It's been 28 and 32% in 23 and 24, and this year is narrow. That's because the economy is narrow. The thing holding us out of recession then was the internet. Today it's been AI.
Brent Schutte of Northwestern Mutual interviewed this morning on Bloomberg Surveillance. And by the way, you can hear more of the conversation on the Surveillance podcast. You can download it wherever you get your podcast. We are keeping an eye on Trilogy Metals shares. The stock is surging now by 220%. This after the government said it would take a 10% stake in the Canadian Minerals Explorer. Again, bears repeating, Trilogy right now showing a gain of 210%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right. Thank you so much, Charlie Pellet. Paul Sweeney and Scarlett Fu here in the second hour of Bloomberg Intelligence. We want to get some more stocks on the move today. Let's bring in our own Denitsa Tsakova to take a look at some of the big movers. And the biggest mover that we're going to start with here is Dell.
For sure, Dell, obviously some of the earlier gains are fading, but still the stock is up 2% today. It was up as much as 6% today. It's not only Dell moving higher on the news we had, it's Super Microcomputer and HP as well getting a boost out of this, despite more broadly stocks seeing some exhaustion today. Of course, it comes off the news that Dell roughly doubled its growth estimates. The company unveiled a long-term financial framework that calls for sales to rise at a pace of 7 to 9% annually for the next 4 years. The new financial framework underscores Dell's bet on its position as a supplier of servers, and the AI business has been crucial for the growth we're seeing of the company. it has grown to 20 billion in just 2 years. And you can see that reflected in the stock. The stock is up 30% year to date, really strong and one of the big beneficiaries. Of course, the company has contracts with CoreWeave and Elon Musk's XAI. So these are some of the big partnership investors are potentially seeing some big potential going forward.
Intercontinental exchange.
Yes, crypto means traditional finance, and Intercontinental Exchange plans to invest as much as $2 billion in cash in Polymarket. That's quite a turnaround story for Polymarket. Now it's around $8 billion in value. Of course, just a few years back, things were very different. Polymarket was kicked offshore by federal regulators. Kalshi, Polymarket, those companies got a lot of popularity when it comes to betting on election outcomes, but Polymarket is now back. It came after it acquired a kind of little-known derivative exchange called QCX. Of course, it has been favored by regulation that's a lot more permissive to those bets, but that's clearly a fast-growing business. We obviously saw Citadel yesterday hinting that potentially they have some interest in that field, in that space, and it's growing very fast. And Intercontinental Exchange is getting a boost out of it. It's up more than 1% today, and the ticker is ICE.
And it may very well be a sign of more of these tie-ups between traditional market players and the crypto native ones. All right, final stock that you're keeping an eye on is Dollar Tree.
Dollar Tree is having a rough day today. The ticker is DLTR. The stock is down about 2.5%. It fell even more in earlier trading. It's coming off a downgrade from Jefferies. Currently, it's underperformed. The price tag downgrade is actually pretty bad. It's currently $70 from 110 price tag. Walmart is involved in this. They're saying that Dollar Tree's long-standing competitive advantage, which is like simple bargain, may have all but evaporated. Jefferies found that the shopping bills at Walmart were lower than those at Dollar Tree. So we're seeing some pressure there. Obviously, consumer is not necessarily doing so well. We're having some worries there, inflation and pressure on the consumer. And that's definitely weighing on the stock. And it's not only that, actually, Dollar General is down, Five Below is down today. So a lot of pressure on those retailers today. And without too much economic data this week, but obviously we're looking at all those consumer-facing brands and the pressure they're feeling.
All right, Denitsa, thank you so much. We appreciate that. Denitsa Sokova, cross-asset reporter for Bloomberg News, joining us live here in our Bloomberg Interactive Broker Studio. And for more conversations like this, subscribe to our new Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. All right, I think it's coming. Tesla going to bring out a lower-priced model. This is something that the market's really been begging for, I think, quite frankly, and investors have as well, trying to get a better, lower price point to get into this EV market. And Tesla's has plans to do that very well today. Craig Trudell, a Bloomberg Global Autos editor, joins us here. Craig, talk to us about Tesla and kind of what we expect to hear. Craig got the mute button on there. There we go.
Yes, this is expected to be Tesla's sort of best foot forward to try and make up for the fact that the $7,500 tax credit has gone away. So this is a vehicle where to get into a new one, you're going to have to pay, sort of mid-40s in terms of price in the U.S. And so, I guess this sort of, it remains to be seen sort of where they'll price this vehicle. But, the hope would be, maybe south of $40,000 to get it to where it's more affordable for people who were sort of on the edge of whether or not they could afford a Tesla at the time when the federal government was incentivizing consumers to purchase them in the U.S.
Okay, south of 40,000 still sounds kind of pricey to me, especially when you have Chinese-made EVs sold for a lot cheaper elsewhere around the world. Granted, they're not coming to U.S. streets anytime soon for different reasons. But Craig, what would this cheaper model feature or not feature in this case?
I think that's one of the things that we'll be on the lookout for too. I mean, the Model Y is a vehicle with a lot of sort of bells and whistles that could be taken away to make it, sort of more affordable for Tesla to afford it, and therefore sort of allow for them to offer a cheaper version without crimping their margins too much. Some examples that come to mind, the vehicle has a glass roof that is incrementally more expensive than just a sort of typical roof, so you could see maybe a change there. You could see the company use a smaller battery, and anytime you sort of shrink the battery down, of course, there's going to be some sacrifice on a range perspective, but that should make the vehicle more affordable for the end consumer. So, those are just a couple of ways that are pretty simple and straightforward. Maybe some sort of like lighting fixtures, things like that. Those were sort of hallmarks of what this relatively recently redesigned Model Y offered in terms of bright sort of tail lights, and the front of the vehicle kind of looks like the Cybertruck where there's a light bar across. I think when we saw the teaser image earlier this week, it was 2 headlights, and so that could be an indication of a way in which they've sort of taken some costs out of the vehicle.
Craig, as we think about spurring the next round or next wave of EV demand, how much is price a driver there versus, say, I don't know, lack of a really good charging network, or maybe people just don't really want EVs? How much has Tesla said, boy, if we lower the price, we're going to really spur demand?
Yeah, I mean, I think to Tesla's credit, they've really addressed the charging question, much more thoroughly than any other manufacturer, and they've sort of taken it upon themselves to do so. They've now sort of opened up that charging network to other manufacturers, and so you've seen, over the last year and a half, a lot of car makers, adopt Tesla's charging standard, their sort of plug design. That has made charging less of an issue, I would say, and yet it's still, I think, something to overcome for the sort of average consumer. Even if there is more charging available, I think people are still kind of nervous, and to the extent that you haven't used an EV before, that's a hurdle to get over relative to just sticking with a gas car, or taking the sort of incremental approach of going to a hybrid. But to answer your question about how much price is an issue, I think it's massive. It's a big difference in terms of what you can expect to pay for an electric vehicle versus a gas car. There's still a sort of stubborn premium that we've yet to really close, and until and unless we're able to get closer to parity, I think electric vehicles are going to have a harder time catching on in the U.S. market.
Yeah, I mean, that's one big reason why they're so popular in California, because gas prices are so high that it makes it much more economical. Craig Trudell, thank you so much. Craig Trudell is our global autos editor, joining us from London here for Bloomberg News. Let's switch gears and take a look at some of the hardware companies, or I should say software companies. Once upon a time, it was hardware. Yeah. And I'm talking about IBM. It's a legacy tech company, and it is the latest legacy tech company to partner up with an AI startup. Anurag Rana is tech analyst here at Bloomberg Intelligence. Anurag, we hear this fancy announcement about IBM inking a partnership with Anthropic to integrate this Claude family of large language models into certain IBM software. What I noticed is that there's no dollar amount mentioned at all. So how do you evaluate this partnership versus other tie-ups?
See, when you come to a company like IBM, I think they have done a very good job of being open and partnering with other vendors. I think the acquisition of Red Hat was the first such example a few years ago. And frankly speaking, the company has turned around quite a bit. Now it's more of a software company than it is a service or a hardware company. So when you look at today's announcements, IBM still has a lot of footprint in legacy companies and their internal infrastructure, whether that's a regulated entity, whether that's an on-premise software. What they're basically saying is, for these companies who want to add more AI capabilities into their infrastructure, we're going to use one of the best models that's out there, and that's Anthropic. They're not, just solely dependent on IBM's own internal models, but we see more and more of that happening, that companies like IBM and other services companies will go out and partner with Anthropic, with OpenAI, with Gemini, and give more enterprise capabilities to vendors or to companies, basically.
How does Anthropic differ from OpenAI, if at all?
That's a very good question, Paul. And right now, what we are seeing is Anthropic is pushing more and more stuff on the corporate side or the enterprise side. On OpenAI side, their core business is still ChatGPT, which is the app, and that's more of a consumer app right now. And the question is, which one of the models will somebody use? Whether if you are, let's say, a JP Morgan or a Citicorp, would you be going to be using one of their models or an open source model? I think they're going to be using all of the models. What Anthropic relationship with IBM does, it actually helps them to spread the word out across their entire customer base. So if you are trying to get more coding done, for example, in an IT department, and you have all the legacy products that there, now you can use, an AI model from Anthropic rather than using, whatever tools you had before.
Okay, so it makes sense why Anthropic is a good fit for IBM, or how it's going to incorporate Anthropic into its software. But what does IBM specifically offer Anthropic? What access does IBM have that Anthropic wants and needs?
Yeah, that's another excellent question. In this case, you're looking at IBM's entire customer base. IBM has a very large services business called IBM Consulting. These consultants will go out and sell Anthropic software into the enterprises and say, hey, bank, let me help you to automate this particular process, and you can use it with this software. It drives their consulting business, and it also helps out their software business, which is fairly popular right now.
IBM hitting all-time high here today, Anurag. This stock has found a new life, hasn't it?
Yeah, absolutely. And this is something that we've been saying it for almost 5 years now. That, the acquisition of Red Hat completely changed it. If you go back and look at, some of the comments we've made on TV about IBM prior to Red Hat, it was a very closed company. It only wanted to sell their own products to people and was not very keen on embracing, what I would say is open source. With the acquisition of Red Hat and the company saying, Red Hat can work with any cloud provider. I think that was the biggest difference to me, was it allowed Red Hat to work with companies, but based on Amazon Web Services or Microsoft. So they were not just pushing their own cloud products. And I think that really made a difference. Their software business has been doing so well comparatively to the rest of the world. And I think that's where you see the market validation that this is the right strategy for them.
All right, Anurag Rana, a pleasure as always. Tech analyst for Bloomberg Intelligence, always making us smarter and giving us some context to these much needed headlines, because it feels like every week there's some kind of old school tech company announcing some kind of deal with an AR startup, and it's not very clear how much money is involved, except that it's going to be a great growth driver.
Yes, exactly. Whether it's IBM, Oracle, Intel, these names that, again, we've kind of considered old, they're back, baby. All right, join us in just a few moments, 11:30 a.m. Eastern time, for an interview with Jamie Dimon. The JP Morgan CEO sits down with Bloomberg's Tom McKenzie for a conversation from JP Morgan's TechStars event in London. Listen for that interview with Jamie Dimon on Bloomberg Radio, and watch on Bloomberg Podcast YouTube channel at 11:30 a.m. Eastern time this morning. In just moments, this is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. Stocks lower across the board, and this Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitments, see if your company qualifies at oracle.com/Bloomberg. Wall Street failing to gain traction today as a rally that drove stocks to records shows signs of fatigue. A topic we're exploring right here on Bloomberg Intelligence. We have got the Dow, the S&P, NASDAQ all in the red. S&P down 18. Drop there of 0.3%. The Dow down 66, drop there of 0.1. NASDAQ right now down 102, a decline of 0.4%. The NASDAQ 100 index down 0.3%, and our Mag 7 index down by 0.7%. The 10-year at 4.13%, the 2-year 3.57%. Gold 39.90 the ounce, up another 0.7%. Indeed, a record on the precious metal. While West Texas Intermediate crude 61.55 a barrel, down 0.2%, and a retreat for Bitcoin back at 122,400. Bitcoin down by 2.3%. Intercontinental Exchange, the owner of the New York Stock Exchange, plans to invest as much as $2 billion in cash in Polymarket. That is a crypto-based betting platform. ICE, Intercontinental Exchange, up now by just about 0.9%. Coming up in a matter of minutes, 11:30 a.m. Wall Street time, we sit down with J.P. Morgan Chase CEO Jamie Dimon. The head of the conversation, J.P. Morgan Chase down 0.8%. And for on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcast. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Let's get to these markets. As Charlie was just reporting, got a little bit of red on the screen here today, but let's see what the pros are doing out there. What's the message you have for clients when the market's just been ripping off of that April low here? Where do we go from here? Nancy Daoud joined us. She's a private wealth advisor for Ameriprise Financial. Nancy, thanks so much for joining us here. I'd love to know kind of what are your conversations these days with your clients? How do they typically go?
Well, the government shutdown is clearly delaying some key economic data, specifically the labor trends, which markets tend to watch. But in general, markets have been unfazed by the shutdown, which is consistent with history. But I think what's happening today is, the delay it's getting a little too much. And any further delays will cause the volatility because the market just hates unknowns. So the advice really is to make sure that you understand your personal goals and objectives, regardless of what's going on around you, because that's really what counts in the end.
Sure, taking the long view. So I wonder for now, if someone does want to put money to work, is now a good time for them to leg into stocks, to put money into stocks, or would you recommend that they hold off, given that we have seen this incredible surge? Paul mentioned off those April lows, 35% for the S&P 500 alone.
Well, I think the dictator here that would decide that is the time frame. How long are you in it for, and what's your appetite for risk? Those two have always been the dictators on how and when you invest. If you're in it for the short run, I would not enter this arena because it could be very, very dangerous. And especially if your appetite for risk is very low. But if you're in it for the longer term, even if you have a low appetite for risk, I think it's a fantastic opportunity because longer term, the prospects are pretty optimistic.
Well, what are we doing in the bond market here, Nancy, in the fixed income space here? You consider the 2-year Treasury get about 3.6%. That seems like a pretty nice way to make a living, or do we take some credit risk here?
Yes, and I think the buzzword here with the fixed income market is quality. Buy the most boring things, the most boring bonds that you can possibly get. And durations should be okay now. You could think longer term durations. And if we get another Fed rate cut or two, then that's good news for bonds as well. And it's a great diversifier if we end up with a very volatile market. in the stock side.
What seasonal factors should we be aware of? For a lot of investors, institutional investors, if they've just been long the market, long beta, we're talking about up 14% for the S&P 500 so far this year, up 18% for the NASDAQ. They can just sit back and do nothing. What do we need to keep in mind tends to happen in October, November, and December?
Well, fourth quarter historically has always been very, very strong. You've got a little bit of rebalancing, some people buying, some people selling. There's pension contributions or retirement plan contributions being made. So historically, fourth quarter has been a very, very favorable time to be in equities. However, based on valuations, we could see a little bit of a pullback if we get some drastic news from any arena at all, whether it's the labor market or geopolitical or anything at all.
Nancy, one thing I've been amazed, particularly for retail investors, is their appetite for alternative investments, whether that's hedge funds, private equity, private credit, maybe even some real estate, things like that. Alternatives. How do you talk to your clients about alternative investments?
Well, I think alternatives have a place in every portfolio, mainly because by definition, it's uncorrelated to stocks and bonds. So theoretically, if all hell breaks loose and everything takes a downturn, those should prevail or be a good buffer or serve as a good guardrail, so to speak. So there has been a much bigger focus on that, to have at least maybe 10 to 20%, depending on clients' time frame and appetite for risk.
How are they thinking about crypto? Because, there's this whole move towards a debasement trade where people don't quite trust U.S. government-issued assets, whether it's the dollar, whether it's treasuries, and gold is certainly one way to express that, but increasingly so is crypto.
Yeah, I mean, I really can't comment on crypto, but I think that the most important advice we provide our clients in that arena is to be extremely cautious.
That's good. That's a good piece of advice, probably. But and I guess with all the ETFs out there, there's lots of ways to play it. Nancy, thanks so much for joining us. Nancy Daoud, a private wealth advisor for Ameriprise Financial here. All right, it is time for our daily check-in with Nathan Dean. Why? Because he's down in Washington, D.C., and it's his job to tell us what is going on in Washington, D.C., and that's a tough job in normal times, but a little bit more even difficult today when we've got a government that's shut down. I'm not sure I'm seeing much conversation between the two sides. So, Nathan, you're down there in D.C. You're right in the middle of it. What's kind of the feeling down there these days?
So the feeling is that this shutdown is most likely going to continue for at least another few days, if not a little bit longer. I mean, like you just mentioned, both sides aren't really talking, and both sides really don't feel the need to talk at this point. Polling over the weekend suggests that Republicans are getting more of the blame amongst independents. The Democrats love that message. Republicans are also feeling pretty good because their base is pretty happy with their position of, we've passed a clean CR, the Democrats need to come to us. So both sides are feeling pretty good, and when that happens, neither side really feels the need to talk. Now, I will say there are some pressure points coming up over the next few weeks, though, or just days. October 10th is when the federal government employees are going to miss their paycheck. And I think more importantly for that pressure point is on October 15th, this is when the military misses their paycheck. And so as the military misses their paycheck, policymakers are going to feel that pressure to come together and figure out what this deal looks like, because ultimately, both sides are going to have to reopen the government. It's just a matter of when.
And we are starting to see more tangible results from, I don't want to say results, signs of damage because of the shutdown. There's flight delays, at least in the New York area already, because there's not enough air traffic controllers, for instance. There's flight delays into the Los Angeles area as well. Is this the kind of thing that gets constituents angry and starting to call their representatives in Washington to say, get back to work?
Yes. I mean, think of this government shutdown and the response to it is that like a ball that's slowly running downhill, and then all of a sudden it gets a little bit steeper and goes much faster. I had a daily check-in with our equity strategists this morning, and I said, how are you feeling? And they said, look, if this continues into the next week, we need to start thinking about this more, because the message has always been that markets aren't really all that impactful by shutdowns, but as they go on, then the impacts get greater and greater. For example, at the end of the month, SNAP benefits runs out, and there are ways that the USDA could potentially get SNAP benefits into November, but it's tricky. So if you have exposure to grocers, for example, that's something you should start thinking about. Maybe maybe around the October 17th beyond timeframe, because then investors are going to get a little bit skitterish. So I will say is that right now we're still in the stages of like everybody's just waiting around, waiting to see what happens. But ultimately, as this continues on, the market and for those of us who are trying to fly with air traffic controllers and TSAs, the impacts get greater.
Yeah, I want my air traffic controllers happy in their job.
Yes.
At their desk.
Yes, exactly. They're getting paid. They're happy. They're not worried about whether they can put food on the table.
So, Nathan, what do you think the role has been and what could it be of President Trump in maybe resolving some of these impasses?
So, he just floated, you spoke earlier about this idea where he floated some openness to, negotiating on Obamacare subsidies. These are the subsidies that expire at the end of the year. And one of the reasons why the Democrats really were interested in this government shutdown. Now, look, we probably know what the framework of this deal looks like. It's a reopening of the government plus an agreement to deal either through a vote or an actual deal on these Obamacare subsidies. But both sides need to actually go through the motions before they start these negotiations. Now, President Trump walked back that remark a little bit, saying, look, I don't like Obamacare. But Representative Marjorie Taylor Greene of Georgia, just flat out said last night she wants to make a deal on this because her constituencies are impacted. So I think what happens is that eventually, as the parties get to that pressure that they need to come to the table, you'll see President Trump float this openness again. And I think that's where the Democrats will say, look, we have enough here to declare victory. Let's go forth. Let's conduct a negotiation and let's figure out what this strategy is to expand these Obamacare subsidies by the end of the year.
Paul, I go back to the idea that the president, the Republicans need to come up with a way of maybe embracing extending those Obamacare subsidies by branding it as something that's Trumpian.
That's a good point. Yep,
and then that allows the president to take a victory lap. Marjorie Taylor Greene gets on board as well. So,
that's a good strategy.
Some thinking outside the box here.
Get on the Acela train, head down to D.C., make it happen.
Is that something, Nathan, that you think that they might be open to repackaging everything, rebranding it as a Trump idea?
Absolutely. I mean, this is a political debate, and politics has very strange outcomes. You could just call it Trump care or, something like that. And you never know. Exactly. I mean, it may get President Trump on board with this idea. So I'll say is that, this is anticipated. Right now, they're still going through the motions. Neither side wants to negotiate, which is fine. I mean, obviously, it's not fine for the people that are impacted by this. But, our base case scenario is, as you get to this October 15th date where the military begins to lose funds, that's when the pressure is going to be even greater. Because look, Speaker of the House Mike Johnson has kept his caucus away from Washington. Why? Partly so that they're not giving interviews to the press and they are being paid. And answering that question is, why are you being paid and the military is not? So a lot of this is political, but ultimately, I think President Trump and the Democrats ultimately will make a deal.
And Nathan, you mentioned here not going to get paid on Friday. I'm sure, at your kid's soccer practice or drop-off line, you've got a lot of neighbors that work for the federal government. How nervous are they?
They're very nervous, especially this morning after President Trump floated the idea, and, I'm paraphrasing here, that the White House memos essentially said that maybe you don't have to pay back furloughed workers. I mean, there are 750,000 workers at the moment that are furloughed. Only about 91,000, according to our estimates, are here in the Washington, D.C. area. 80% of the federal workforce is outside of the DMV. But I will say is that before, we could say that it's a 99% chance that these federal workers would ultimately get back their back pay. I would just say, and I'm guessing, a 90% chance now. I don't think that it's going to be in this situation where these federal workers get back pay. But let's also not forget, the contractors that are furloughed, they don't get back pay. And so there's a lot of angst about this, and there's a lot of angst about whether or not Director of OMB Russ Vought follows through on his threats to conduct federal layoffs.
I was just going to go there. It just feels like every day there's a new idea that's being floated, whether it is mass layoffs or something like not paying federal employees for days that they've been furloughed. Does it feel like they're kind of letting things come out, leaking things, and seeing how the public reacts before deciding whether to move forward with it?
Yeah, and I think this is more of a political exercise than anything else, is that they're just putting out ideas to see how the public reacts to it and see how the Democrats react to it. I mean, a carrot and stick strategy, if you will. But I will say is that, if the Democrats continue to see polling data that independents are blaming the Republicans for this, and, some of that data was fairly substantial that these independents were blaming Republicans. If the Democrats see that and President Trump follows through on his threat to fire workers or not conduct back pay, I think it pushes the Democrats back into their shell a little bit more and just say, look, we can't negotiate. Let's just keep the shutdown going a little bit longer.
All right, so is there anything in the next day or two that could be a catalyst here, or is this just grinding time out for another 4, 5, 6 days?
Well, I think it's grinding for the shutdown, but one of the things we are telling our clients is just non-shutdown related is be aware of potentially a farm aid package being announced as soon as today, potentially around $10 billion from the Treasury Secretary, Scott Bessent, that would go to farmers. We did a quick analysis on the terminal that showed that, this money would most likely be spent for seed and fertilizer in the fourth quarter. So it's a short-term gain, short-term problem alleviation. There are still long-term questions about related to soybeans. So as the government remains shut down, that farmer piece, that's really where we're focusing our time at the moment.
Nathan, who's the number one person you're watching here? We talk a lot about President Trump, but he kind of takes himself out of it sometimes. Is it John Thune? Is it Chuck Schumer? Are they still kind of the keys to unlocking this?
They are. I mean, obviously, and I'm being very simplistic here, is that the House really doesn't matter. So any statement you see from Speaker Johnson or Representative Jeffries, take it with a grain of salt. For me, it's Senator Thune and Senator Schumer, and it's the gaggle of bipartisan senators that were on the floor last Friday. Think of Susan Collins, think of Mark Warner, think of, Senator Ossoff from Georgia. Those are the individuals that ultimately will figure out where this, shutdown ends. Because two Democrats and an independent that caucuses with the Democrats have already signed on to extend the government open until November 20th. They only need 5 more. And so as the pressure mounts, I would be looking at those bipartisan senators under the leadership of John Thune and Chuck Schumer to ultimately decide where this ends, because they are the ones, not the House and not the president, that will come up with the deal that then goes to the president for his blessing.
Nathan Dean, thanks so much. Always appreciate it. Nathan Dean, Senior Policy Analyst for Bloomberg Intelligence. In just moments, we will bring you a conversation with Jamie Dimon at the JP Morgan TechStars Conference in London. That'll be coming in just moments. But right now, let's go to Charlie Pellet and get a Bloomberg Business Flash.
And this Bloomberg Business Flash is brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with a 2-to-1 advisor to staff ratio. Small firm attentiveness, big advisor impact. Go to commonwealth.com to learn about their consultative support and technology. The Dow, the S&P, NASDAQ all in the red as Wall Street fails to gain traction. That rally that drove stocks to records is showing signs of fatigue. So right now with the S&P 500 index down 34, 67.05, down 0.5%. The Dow is lower by 0.3%. The NASDAQ Composite Index down 0.8%. 10-year at 4.12%, with the 2-year 3.57%. Gold up $16 the ounce, $39.77, a record there, up 0.4%. And West Texas Intermediate crude up 0.1%, $61.74 a barrel. And Bitcoin is trading lower now, down 2.9%, 21,555 on Bitcoin. We've got Dell shares higher by 0.3% after a bullish outlook. It roughly doubled its growth estimates for sales and profit for the next 2 years. And IBM shares are rallying after the company announced a plan to integrate Anthropic's AI technologies into its software solutions. IBM right now up by 2.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, thank you so much, Charlie Pellet. Paul, we are looking at stock indexes near their session lows right now. Yep. The NASDAQ Composite off by 0.8%, the S&P 500 losing 0.5%. And one drag on the indexes is Oracle. The shares are now tumbling, falling as much as 7.1% after the information. This is an industry publication reported that Oracle's cloud business, which of course is fast growing and is powered by NVIDIA's chips, has had razor thin gross profit margins over the past year. And they cite internal documents. And it goes back to that idea that building out your AI capabilities costs a lot of money. There's a lot of spending there. And as exciting as the growth prospects are, it's going to ding profitability. Yep.
Well, for some of these companies, and again, I think the market's just kind of grasping for some details about the economics of some of these, some of this spending here by some of these tech companies. The report adds that in some cases, Oracle is losing, quote, considerable sums on rentals of small quantities of both newer and older versions of NVIDIA's chips here. A spokesman for Oracle, which doesn't publicly disclose the AI cloud server unit's financials, did not have a comment on those figures, the information.
And it makes sense as well why Oracle is selling or did sell all the money, all those corporate bonds, right? $88 billion worth. There was a lot of questions about, why did they need to borrow that much money? Well, this is expensive.
It's expensive. Again, the stock's down about almost 6% today, but it's up 64% year to date. So a little bit of context there. I'm told context is important, so we certainly give you that context.
What's the tagline? Context changes everything. Context
changes everything. There you go. Boom. I'm in line with that. We're still waiting for Jamie Dimon to speak. He'll be being interviewed by Bloomberg television anchor Tom McKenzie in London from the JP Morgan Techstars conference in London. We'll bring that to you when that begins. In the interim, let's check in with Mr. Michael McKee. He does all the economic stuff for Bloomberg. Mike, what do you do all day these days? I mean, you got no data to look at. What's going on? What are economists? What do they do?
I'm watching commercials for Bloomberg TV with with Scarlet Fu on them, wearing a red dress. I just saw you on TV.
Oh, really?
Yeah.
You must be watching the internal channel.
No, this was a promo for.
Oh, yes. Okay.
Shows. This is a perfect opportunity to promote all of your shows.
There we go.
There's no data.
Exactly.
We will have we did have some data today. We did have the New York Fed's inflation expectations index, which went up to 1 year went up to 3.4% from 3.2%. Not a terrible move, but it's not in the right direction, as we keep saying. And then more people are concerned about their jobs and their incomes over the next year. So we've got a little bit of a stagflationary situation going.
Or at least concerns of it. We also never got the September jobs report because the government shut down, and it still is something that we're waiting for. There have been a lot of alternative sources of data sets for that jobs report, including one from Carlyle Group, the alternative investment firm, which is a lot more bearish than what economists are expecting overall.
Yeah, Jason Thomas and the folks over at Carlyle have a lot of proprietary data because they own a lot of companies and they keep track of what's going on. And when there are data shortages, they tend to put these out, and they are suggesting we only saw 15,000 jobs created in September. But the real point of the note, and I think a lot of people are missing this with the 15,000 number just staring at you, is he's pointing out that what we're seeing is an increase in inflation, not huge, but it's still going up. And the reason may be the immigration situation, where the administration has taken so many potential workers out of the country that that will lead to a rising wage situation if employers need more people, and that's a concern. We shouldn't let that thought go by with just the 15,000. Bank of America also out with a note today saying that hiring had slowed. They didn't put an exact number on it, but they're looking at the number of paychecks deposited in the Bank of America. And so I thought that was an interesting way of looking at it.
That's a good point. Yeah, somebody asked me to write them a check recently. I don't even know where my checkbook is. I don't know if I have a checkbook.
You didn't Venmo them?
No, they don't. That's the point. They don't have Venmo or Zelle or anything. It's a small business.
Okay, yeah.
And I'm like, this
You're like, let me withdraw some cash. That might be easier.
I'll walk by your office and drop it off for you. Presumably the Fed's not flying blind data-less, are they, Mike?
No, they've got all the data that we were talking about. Okay. They can look at the Carlyle data too. They get ADP's raw data on a week-by-week basis, and they put it into their own models and come up with different numbers than perhaps ADP does with what they release to us. But they also are constantly talking to companies and finding out what they're doing and what the layoff situations are, et cetera. And the jobless claims numbers are put together by the states. So I'm sure there's somebody at the Fed who's tasked with calling 50 state offices and pulling together all the numbers for them so they can see that. And there are a lot of different price gauges these days that are out there, a lot of them based off the internet that they look at as well. So they're not flying blind. They don't have the quote-unquote gold standard numbers to rely on or to use as the reason for doing something one way or another, but they do have a suite of data that they can fall back on that gives them general idea that they're going in the right direction, whichever direction that may be.
So I was looking at a story that said that the federal government is entering its second week of a shutdown, but the Supreme Court is open. The SEC, we believe, it has suspended almost all normal operations except for emergencies, regulatory emergencies. What about the Federal Reserve? Is it business as usual, or have they basically shut down as well?
Business as usual. No difference at the Fed. The Fed is self-funding. They collect money for a lot of their services, including payment systems. And so for that, they can fund themselves. And this gets to the whole controversy that's come up in recent years about any excess money beyond their operating expenses they remit to the Treasury. And in the last couple of years, because interest rates have gone up, they've not been able to remit anything. They actually owe the Treasury back remittance, so they don't have to rely on Congress for funding.
On the inflation front, Mike, we haven't seen any real discernible pickup in inflation. Some folks saying, hey, tariffs are not going to cause inflation, so stop worrying about that. It's a one-time reset. So we'll get back to that inflation thing. But right now, let's head over to London right now. JP Morgan Chase Chairman and CEO Jamie Dimon speaking with Bloomberg Television anchor Tom McKenzie.
The CEO and Chairman, of course, of JP Morgan, Jamie Dimon. Jamie, thank you so much for having us here. Thank you for your time. What is top of mind for you, for the team, and for clients?
So first of all, welcome, Tom. Thanks for having me here. Well, top of mind is the freedom of the democratic world, safe security, Ukraine, Russia, war, economics. That's the most important thing to me. I don't worry as much about whether we're going to have a recession or not next year. Here it's all about clients, covering clients, innovating, growing the economies, which I also think is critical for everything, to get our economies serving all.
Oh, we have some technical difficulties. That happens a lot when you're in a tech event,
London,
ironically.
Event over there in London, so we're back here. So we'll get that audio fixed from the JP Morgan conference over there in London. Jamie Dimon. So we'll go back to...
while they sort it out.
Yeah. So we were talking to Michael McKee, and he's still here. He didn't leave when he had a chance to leave.
Too bad for him.
So he's still here. Inflation, is that something we should still be on the watch for, Mike?
Yes. For two reasons. One is we are seeing some tariff pass through, and it's expected to continue. And the World Trade Organization said the effective tariffs really is going to be, today they put out a thing that says the real impact is going to hit next year.
Oh, okay.
And Trump is still putting on tariffs at 25% on the trucks yesterday, and there's more to come on others. So we haven't felt the full effects of that, and companies are reporting that their margins are getting compressed, so we are expecting prices to go up. But the other side of it is that the service industries, which are not affected by tariffs, are still reporting fairly hefty price increases. And that's a concern for some of the people at the Fed who've said maybe we shouldn't be cutting rates in a series here because we haven't solved this inflation problem. So it's going to be an interesting debate October 29th, especially if we don't have a lot of additional data by then on what they're going to do.
Right. The next official inflation report is due on the 15th, right?
15th for CPI and the 16th for PPI.
All right. I think we do have the tech issues resolved over in London with JP Morgan Chase Chairman and CEO Jamie Dimon. Let's go back to London.
We've been doing AI since 2012. So people think it's like a new thing. Gen AI is kind of new, but not all of AI. We have 2,000 people doing it. Spend $2 billion a year on it. It affects everything: risk, fraud, marketing, idea generation, customer service, and it's kind of the tip of the iceberg. And so, we're deploying it. Every time we meet as a business, we ask, what are you doing in AI? What are you doing to serve your people? Why can you do better? What is somebody else doing? So we're freely deploying it, and safely. We have a lot of rules and regulations in place for our own data and how we use it, et cetera.
Is it having a material impact on revenues for JP Morgan? If not now, then when?
So we have shown that for $2 billion of expense, we have about $2 billion of benefit. Some we actually can do real detail. We did this, we reduced headcount, we saved this time and money, we reduced errors. Some you can't. It's just improved service, something like that. It's like almost worthless to say what's the NPV, but we know about $2 billion of actual cost saves. And like I said, I think it's the tip of the iceberg. We're getting better and better at it. We know how to do it. As the managers learn how to do it, they're asking more questions. Why can't it do X and why can't it do Y? And then I don't have my phone here, we have a suite, an LLM suite on internal data to do research and summarize reports and scan contracts and do things like that. 150,000 people a week use it. So it's quite productive.
More and more of your employees are using the agentic AI.
Our own LLM, and agentic is just starting. But that will be deployed over time too. But it's also being used for coding. I mean, it's being used quite broadly now, and like I said, part of it is getting your mind working around how you're going to use this thing, and so our managers and leaders have to do it.
If you look out 5 years, are there more jobs in banking as a result of AI or fewer?
I think people shouldn't put their head in the sand. It is going to affect jobs. So think of every application, every service you do, well, you'll be using AI, some to enhance it, some of it'll be you doing the same job, you're doing a better job at it. There will be jobs that it eliminates. But you're better off being way ahead of the curve and retraining people. So we retrain and redeploy a lot of people. So for JP Morgan, if we're successful, we'll have more jobs. But there'll probably be less jobs in certain functions.
When you look at the spend on AI, infrastructure, chips, OpenAI, it's not making a profit. Loss-making, deals of about $1 trillion this year. The hyperscalers, the spend there. What is your reaction when you see those numbers crossing? Are you comfortable with that kind of spend on the infrastructure around AI?
It's a lot. I'm not sure it's all ever going to be totally spent. I think when you look at big tech, like tech that happens like this, and you go look at cars, you look at television, you look at internet, big money's got spent. There were a lot of losers, a lot of winners. In total, it was productive. So take the internet bubble. Remember that blew up, and the amount of people. You and I could probably name 100 companies that were worth $50 billion and disappeared. But out of it came Facebook, YouTube, Google. So there will be real big companies and real big success. It will work in spite of the fact that not everyone who invests in it is going to have a great investment return.
And of course, those investments are part of what has powered this bull market in stocks. And on Sunday, it'll be 3 years of that bull market. Where do you think we are in that bull market? Is there any complacency there? Is it underpinned by rational factors? Is there more momentum?
Yeah, look, we're in a bull market. It's been clear. Asset prices are high, credit spreads are low, consumer's still okay, the consumer has jobs. Remember, jobs are what usually starts to force people to cut back and change things, and consumers spend less and companies cut back. So far, so good. There are a lot of issues out there that the economy's got to deal with, from all this geopolitical stuff. Maybe that'll start out well. What's going to happen to inflation? I'm a little more nervous about inflation not coming down like people expect. That might be a surprise. On the other hand, there's a lot of spending. There's a lot of government spending, which is inflationary too, by the way. And so, I don't know. I hope for the best, plan for the worst.
And you're not worried about a recession in 2026 for the US? You made that clear.
I think it could happen in 2026. I'm not worried about it as a different statement. We'll deal with it. We'll serve our clients. We'll navigate through it. A lot of us have been through them before. You don't wish it because certain people get hurt, but it could happen in 2026.
We're still, of course, in the U.S. government shutdown.
But I do think there are positives. Like deregulation is a real positive, which also helps animal spirits as a positive. And in the one big beautiful bill, there's also more stimulus that has positives for the economy, but maybe negatives for inflation. So how it all sorts out, we'll see.
Markets are looking through the US government shutdown. Is there a period of time, if this shutdown continues, where markets start to wake up and become concerned?
I don't think so. I don't like shutdowns. I think it's just a bad idea, and I don't care what the Democrats, Republicans say. It's a bad idea. It's not a way to run a railroad. I don't think it's critical. We've had, I forgot the number, 4 or 5 or 6. One of them went for 35 days. I'm not sure anyone really affected the economy and the market in a real way.
You mentioned inflation. You said you're a little bit more concerned about inflation than maybe some others. Markets pricing in about 100 basis points of cuts between now and this time next year from the Fed. Does that therefore seem reasonable to you, or markets are over their skis in pricing?
I think markets have to make a forecast. I want to point out that forecasts have almost always been wrong, and the Fed's been wrong too. So it isn't like their forecast is going to be accurate. If inflation goes up, starts ticking up for whatever reason, and it might, it's going to be hard to do 100 points. They might do some, and then they have the battle, the give and take of if unemployment starts going up, well, obviously they're going to do some. So we'll see.
You've long talked about geopolitics as being a risk factor. We're seeing gold at $4,000. We're seeing Bitcoin at record highs. The dollar, though, year to date, down about 8% on the Bloomberg Dollar Index. Are you seeing structural shifts out of the US dollar, and is that a sustained theme?
A little bit, but again, I wouldn't have heartburn over it. The dollar did well for a long time. If you own U.S. stocks, so foreigners own something like $35 trillion of U.S. stocks and bonds, and because the stock market's gone up, your allocation to the U.S. has gone up. I think it's perfectly reasonable for investment committees in Europe and around the world to cut back a little bit of their equity ownership. We've also seen people changing their hedge ratios and stuff like that. So it may just be a rational adjustment to, I don't expect a stronger dollar. The tariffs has this effect. But it's still, if you look at America, still the greatest place in the world to invest in the long term.
And deal making seems to be picking up. And of course, JP Morgan played a significant role in the takeover, the take private of EA, $20 billion in financing provided by JP Morgan. Is that a marker in the sand? Is that a one-off as a deal of that type? Or is it a sign of more competition between, frankly, the banks and private credit?
Well, look, we're agnostic about private credit. So there may be competition or not. We want our customers to do what's in their interest. We offer both, and we did that whole deal in 11 days. And we didn't do it that way to make a point to private credit. If they said do it differently, we could have done it differently too. And so, but there's a lot of merger talk. There's a lot of firepower. There's a lot of tech. We had a bunch of IPOs in the U.S. I know there's only been a handful here. The tech world is still doing quite well. The 800 companies here. I think it was 400 last year. We now have 500 bankers coming. The innovation economy globally around the world, including we've added like 50 alone here. So, look, I'm a long-term optimist. I do think asset prices are high, credit spreads are low, and you should take that in consideration how you think about the future.
And when we talk about credit and you talk about debt, I'm thinking of some data, in fact, that JP Morgan put out on auto loans. Biggest losses in the most recent months, I think since 2020, March of 2020. Is that idiosyncratic to auto loans in the US, or are you seeing other weak links being stressed?
I think there were one or two frauds, which I won't go through, but in general, consumer credit was so good, it's basically, most of that's just normalizing. For both credit card, but subprime order is a little bit worse than normalizing. It doesn't look like it's getting worse from here, but it might. But a lot of that, if you look at the history of credit for consumers, it's employment. It's when employment or home prices go way down, which we don't maybe not expect, that drives credit.
The administration is talking about possibly changing the requirement around quarterly earnings.
Yeah.
And you've talked about this, you've written about this with Warren Buffett around the guidance part of earnings and quarterly guidance. Would you welcome a change like that? And would it mean a change at JP Morgan in terms of how often you update
I would welcome
investors?
it. We still probably update investors quarterly with much less stuff, and we just be very transparent. I think the bigger problem wasn't just reporting quarterly, it was forecasting where CEOs get their back up against the wall, they have to meet these things, earnings, and they start doing dumb stuff to meet earnings, and that kind of public pressure. I think it's a smaller part of a much bigger problem. We've gone from 8,000 public companies in 1996 to like 4,000 today. And that, I'm not sure that's good. We drive companies out of it. We have cookie cutter governance. Some activists are good, but they're activists. There's litigation, there's cookie cutter compensation, there's very expensive listing, there's disclosure rules, which you've heard about them here. I mean, endless rules, and that it makes it hard for a small company to go public. So I think, and they're trying to do that here, have an active small company going public. That's what we all need. And create an equity culture, which Rachel Reeves was trying to do here. And I think they're doing a good job reducing regulations, trying to make it easier to do business, and reducing regulation in banks, but also in business in general. You want an active market, and we've kind of crushed it. And because the research laws and MiFID and disclosure requirements. So if I was a regulator, I would take a step back and look at the whole system and say, how can we improve it and make it safer? And look at it holistically as opposed to, just everything's like a one-off conversation.
I need to talk to you about some other changes that the Trump administration has taken. You are a champion of capitalism and free market capitalism.
Yeah.
So when you see stakes taken by the administration, or the US government, let's put it that way, in terms of Intel, golden share for US Steel, investments in a lithium mine producer, how does that sit with you?
Yeah. So the first thing is there are legitimate complaints around trade. So just take that first. Some are around just unfair trade. It's unfair to use, it's not just tariffs, it's surpluses, it's capital, it's quotas, it's just, it's the non-tariff barriers. And then there's national security related. So I think in national security, you have to take some special thing. I call it industrial policy, but it's got to be done right. It's got to come with permitting, no virtual signaling. And so like the deal that was done for MP, I thought they did a very smart thing. They're giving MP, which we were part of banking, does rare earth magnets, because they're going to have a long-term contract with the government, it gives them a chance to survive, to get through it. They call it the Valley of Death, and they bought a piece of coin to that. So I thought that was really well done. I'm not going to comment all of them. I think you have to be very careful when you get involved in that kind of stuff. Why are you doing it? What's the long-term benefit? You know, and then of course, you know, if Democrats get in power, they're going to do even more of it. So I would be very cautious about how you go about that. I do think they need to do more. You cannot do certain things in the United States. You think a company's going to do it, they'll be bankrupt in 7 months. They either need free land, cheaper financing, and maybe the most important thing is long-term purchase agreements with, you know, defense or companies or something that gives them a real chance to build a business.
You touched on the fact, look, we're here in the UK. The Chancellor was here. She addressed the summit. She addressed the conference. She's making those changes. Is the UK doing enough? There are going to be potentially some changes when it comes to listings. They may be announced in the budget in November. Is enough being done to make the UK, to make London an attractive listing destination again?
Well, first of all, something here, it's a wonderful city. It's a melting pot. The brain power is extraordinary. And I'm talking about not just financial, but lawyers and technology, media. It's unbelievable. It's a huge benefit to UK, though I'm not sure the rest of the UK appreciates that much. And they're saying the right things. They're deregulating. It's not just banks, but business in general, reducing red tape. I call it blue tape now. You know, they're reducing red tape, blue tape. They're trying to consolidate the pension and savings schemes, which I think is very smart. Have a little more of an equity risk culture. You know, not to lose money, but to take a little more risk. And maybe some of these tech companies here. Yeah, I applaud everything they're doing. I know the public here doesn't applaud as much as I do, but they have to keep going.
H-1B visas in the US, talking about attracting talent. $100,000, is that a barrier to the US tech sector? Are you concerned about that?
No, I'm not. Again, I could harp on it. It's 600,000 employees. That's it. We have 160 million people working. And I do think, you know, these things happen. I didn't like it when I first started. I still don't particularly like it, but you know what? It was being abused. You know, we did the analysis and the work. It was not supposed to be to bring cheaper workers here to make more money for your company. It was meant to bring very talented people in you don't necessarily have for your company. And we may have made some mistakes, but let's just fix the system. I was with the president once, and he said more merit-based, more merit-based. In fact, I heard him say we should stamp a green card in every person in this country who went to university or advanced degrees and have them stay here and build their career here. That would be my belief. I want them to go back to that. Yeah. Not make it harder to be or make it easier for real merit-based.
You speak to the president every week?
No.
Okay.
I've spoken to him a couple of times.
Jamie Dimon, Chairman, CEO, JP Morgan. Thank you very much indeed.
Thank you.
Really appreciate it. Caroline, Ed, back to you.
All right, there you have it. Live on Bloomberg Radio, Jamie Dimon, of course, CEO, chair of JP Morgan Chase at the JP Morgan Techstars Conference in London. I'm Joe Matthew in Washington, D.C. Thanks for being with us. We'll start a touch early today on the Tuesday edition of Balance of Power. And we've got a lot to talk about on a busy day here in the nation's capital. It's day 7 of the government shutdown. We're going to get to that in a moment. It is also a day for a state visit. Prime Minister Mark Carney of Canada is in the White House as we speak. Excuse me. With me in Washington, D.C., this never happens, by the way, is Michelle Jamrisco, for whom I am all choked up over. Let me get something to drink. How's it going, Michelle?
Joe.
Thank
for
you.
having me.
Well, yes. It's not that I'm having you here. You're sharing the desk with me today, so welcome to the broadcast. They must have put something in the air here just in time to start off. You cover the White House for a living. How important is this meeting?
I mean, every foreign leader trip is important, and that's and visit is important, and that's kind of the standard caveat here. But you know, there's not so much that we know about what they're going to discuss today. Of course, there's a range of issues they could discuss. Sure. Obviously, Canada being one of the top trading partners, and trade and tariffs still a hot topic, but range of global conflicts and other bilateral issues. So we'll see how it goes. And of course, in the background is, you know, do they have the rapport that, you know, some of this joking that continues around the 51st state might
we'll
suggest.
See if we get more of that.
We'll see what the tone
of the
conversation is.
It looked like a happy welcome at the West Wing entrance a short time ago, and I should note we've always got our eyes on Wall Street here, and we are tipping lower today. The S&P 500 after touching an all-time high. Still above 6,700, but down about 30 points, about 0.5%. Dow's down almost 200. The NASDAQ is down 154. We'll get with Charlie Pellet a little bit later on this hour for a full read on the Tuesday trade. We're joined here in Washington as well by Bloomberg Washington correspondent Tyler Kendall, who is frequently on the North Lawn, but we're lucky to have her in studio as well. We'll let everyone know here. Mark Carney, Tyler, is just about to sit down with President Trump in the Oval Office. The press pool is waiting outside as we speak. When they go in, we're going to follow them in and bring our listeners and viewers into this meeting. This was a very contentious relationship at one point. We still have a lot of questions about our trade relationship, the status of tariffs. Will any of that be decided today?
Well, it's a really good point, Joe, because Canadian Prime Minister Mark Carney now is actually considered to have a relatively warmer relationship with President Trump compared to his predecessor, Justin Trudeau. But as you mentioned, it's important for us not to forget that he campaigned on getting into office by countering President Trump. I recall his acceptance speech, Mark Carney saying that dark days were brought on between the U.S. and Canada because of this White House's actions regarding trade. Now, it's been sort of a rocky relationship since then because we really haven't seen substantial progress when it ultimately does come to these trade talks. Canada is still facing that 35% broad sweeping tariff on most of its imports, though important to say that that doesn't apply to those USMCA compliant goods. If we look at the data, it's around about 55% ultimately of goods coming across the border.
Really interesting stuff. Hang on, Tyler. They're just getting rolling here. We'll bring everybody inside the gold-laced Oval Office. President Trump is sitting down on the yellow chairs in front of the fireplace with Mark Carney. This is live on Bloomberg.
We're going to be talking about trade. We're going to be talking about a lot of different things. We'll certainly be talking about Gaza. We're in very serious negotiations to, I guess you could say, depending on the way you count, 3,000 years. You could say 500 years. You could say, but that it's been raging for a long time. And I think there's a possibility that we could have peace in the Middle East. It's something even beyond the Gaza situation. We want a release of the hostages immediately, etc. And so our team is over there now. Another team just left, and other countries, literally every country in the world has supported the plan.
Yep.
I don't think there's anybody that hasn't, actually, not that I've seen. But there's a real chance that we could do something, so you may have some questions on that later. But in the meantime, we'll spend some time and we'll make some deals and we'll do some things that are good for both of our countries. And Mark, it's an honor to have you. Thank you very much.
Thank you very much, Mr. President. If I may, you kindly hosted me and some of my colleagues a few months ago, and I said at the time, you are a transformative president. And since then, the transformation in the economy, unprecedented commitments of NATO partners to defense spending, peace from India, Pakistan through to Azerbaijan, Armenia, disabling Iran as a force of terror, and now, and I'm running out of time, but this is in many respects the most important.
The
what
merger
you created
of Canada and the
what
United
you
States.
have created. That wasn't where I was going. On this solemn day of commemoration of the horrific attacks of October 7th, for the first time in decades, hundreds of years, thousands of years, this prospect of peace that you've made possible. Canada stands foursquare behind those efforts, and we'll do whatever we can to support
Very
them.
nice.
Yeah.
Thank you, Mark, very much. Any questions?
What would it take for you to drop or lower your tariffs on Canadian sectors, including aluminum and steel?
Well, we're going to be talking about that with the Prime Minister. We'll be talking about tariffs. We'll be talking about a lot of that, but that's for a little bit later on. I want to just acknowledge our great ambassador. Is he doing a good job?
He's doing a good job.
Otherwise, I'll get him out of there so fast. No, you have a good
Isn't the White House's position that furloughed workers should be paid for their back pay?
I would say it depends on who we're talking about. I can tell you this, the Democrats have put a lot of people in great risk and jeopardy, but it really depends on who you're talking about. But for the most part, we're going to take care of our people. There are some people that really don't deserve to be taken care of, and we'll take care of them in a different way. Okay? Thank you.
Mr. President, in your opinion, why has Canada and the United States failed to reach an agreement up until now?
Well, it's a complicated agreement, more complicated maybe than any other agreement we have on trade, because, you know, we have natural conflict. We also have mutual love. You know, we have great love for each other. I love this. I love Canada and the people of Canada. And Mark feels the same way about here. The problem we have is that they want a car company and I want a car company, meaning the U.S. wants a car company. And they want steel and we want steel. And, you know, so in other countries, they're very far away, and there's no problem. You can compete and you can do. We don't like to compete because we sort of hurt each other when we compete. And so we have a natural conflict. It's a natural business conflict, nothing wrong with it. And I think we've come a long way over the last few months, actually, in terms of that relationship. So when it comes to trade, the United States was always giving everything. They gave everything to Canada. They would, let car companies leave here and go to Canada. But that hurts the United States. And, other presidents didn't see that. They weren't business-oriented. They might have been good politicians in some cases, not in all cases. They were bad at both. But it's a very natural conflict, and it's something that we're working out.
Mr. President, Canada has offered a lot of compromise this summer. Are you willing today to offer some compromise to Canada, maybe on steel, on aluminum?
Well, we've made compromise, and we've made some compromise even on steel. But, we have the same basic authority and the same basic, this could be also a little bit of a conflict with other countries all over the world on steel, because we want to make our own steel. We don't want to bring steel in for the most part, but we will bring it in, and we do bring it in. We continue to bring it in from Canada, but there is a tariff to pay. And I think that would be a normal thing to say, but we've come a long way. I think, Howard, we can truly say, do you want to make a comment on that?
Well, I think the opportunity to work together, and as you said, there's conflict. Why do we make cars in Canada? You've called that out, and you've addressed that. So there are places we should work together, and there are places that we have natural conflict.
It's a tough situation because we want to make our cars here. At the same time, we want Canada to do well making cars. So we're working on formulas, and I think we'll get there.
Canadians are refusing to go to the U.S. The numbers are down like 23% in the first 7 months of the year. What do you say to Canadians that don't want to go to the U.S. now because of your 51st state talk, because of the trade war, the tariffs?
Yeah.
And
Well,
the fear
I
of
understand
also
that. Look, I
being
understand
taken
that, and Americans don't want to buy cars that are made in Canada. I mean, we have the same conflict. So there isn't. It's something that will get worked out. There's still great love between the two countries, but American people want product here. They want to make it here. Detroit was emptied out and moved to Canada, moved to Mexico, moved to other places, not just Canada, and now they're all moving back. They're moving back. We have. Right now, I was just telling Mark, we have 17 trillion, but it's really much higher. That was as of a couple of months ago. Yeah. We have over $17 trillion being invested now in the United States. As an example, Biden, he was the worst president we've ever had, but they had less than 1 trillion in 4 years. We have more than 17 trillion in 8 months. 8 months. And I think that number is going to be $22 trillion. There's never been anything like that in the history of the world for any country, not even close. If you did 1 trillion in a year, that's pretty good. We're going to do over 20. And it's coming in with AI. It's coming in with auto plants. We're building auto plants, a lot of auto plants in the U.S. It's coming in for a lot of reasons. It's coming in because of the fact, I think the November 5th election was a big factor, and I think the tariffs are a big factor. And again, we want Canada to do great. But, there's a point at which we also want the same business. We're competing for the same business. That's the problem. That's why I keep mentioning one way to solve that problem is a very easy way. But we're competing for the same business. He wants to make cars, we want to make cars, and we're in competition. And the advantage we have is we have this massive market. So it's quite an advantage.
That would be, a very long-standing law that's been on the books.
Yeah, well, it's been invoked before, as you know. If you look at Chicago, Chicago's a great city where there's a lot of crime. And if the governor can't do the job, we'll do the job. It's all very simple. They probably had 50 murders in Chicago over the last 5, 6, 7 months. Many people were shot. And then the governor gets up and he says, well, we can handle it. They can't handle it. They don't know what they're doing. The mayor is grossly incompetent. He's at a 4% approval rating in Chicago. He's at a 4%, lowest approval rating, lower than even de Blasio had, which is hard to believe in New York. I thought de Blasio would always maintain that record, but the Chicago guy is even lower. So I think that we want safe cities. If you look at D.C., you would right now, Mark, you could go out, take your family out to dinner, you could walk right down the middle of the street. There is no crime in D.C. When I got here, this place was a raging hellhole where people would come from Canada, people would come from other places and end up getting shot. Nobody's being shot. The National Guard's been unbelievable. I mean, they are strong, tough guys. You know, we won something at the Supreme Court, which is a big deal, merit. Everything now in this country is merit-based. I didn't think I'd ever see it again. And we have our soldiers are merit-based too, and they're central casting. And they walk through that town, and I'll tell you what, this place is safe. It's beautiful. Now we're in Memphis, and the same thing's happening. You're getting the reports. The bad guys are saying, we don't want anything to do with this. And we're removing many people. In D.C., we took out 1,700 career criminals and sent them back to the countries from which they came, mostly let out by Biden and his people that had an open border policy. And, you know, Canada, you suffered because of that, too, because they'd come here and they'd go into Canada also. So we're like a buffer for that in terms of Canada suffered greatly by Biden and the open border, the policy of open border, totally unchecked, totally unvetted. And these people were, you know, if you got 5%, 2%, now you were getting a lot of bad people. And we now have a closed border. You've done well. Yep. We have a closed border, and it's a really closed border. In fact, for 4 months, I don't even know if this is possible, but the figures were released. 0 people were able to come into the United States from the southern border. 0. And as you know, we've taken a very hard stand on drugs. This is also benefiting you. We've a lot of we call them the water drugs, the drugs that come in through water. They're not coming. There are no boats anymore. Frankly, there are no fishing boats. There's no boats out there, period. If you want to know the truth, we're saying, does anybody go fishing anymore? The fact is, we knocked out, probably saved at least 100,000 lives, American lives, Canadian lives, by taking out all those boats coming in. So it's, and now they don't come in that way anymore. Now they'll come in other ways, and we're not going to allow that either. So we've done a great job on that. But on crime, Chicago's a great city, but you can't be a great city if you have murders and if you have a lot of problems, and they do. And they have an incompetent policy, just like they had open border policy, anybody could come in. They came in from prisons, they came in from mental institutions, drug dealers, they came in from all over the place, and we don't have that anymore. This country is becoming we're a very strong country. Look, financially speaking, I would say that because of the tariffs, because of the election, because of the policy, because of the great big beautiful deal, it's what I added the word great because it really is. It's the biggest bill ever passed in the history of our country. We don't need another bill. It's the biggest tax cuts, I mean, when you think no tax on tips, no tax on Social Security, no tax on overtime for the people. But far beyond that, what it does is incentivizes auto plants and AI and all of the things that nobody's ever passed a bill like it. We don't need another bill. We don't need any more bills. I said, let's get it all at once. I was greatly helped by our Speaker, Mike Johnson, and by the Senate. I'll tell you what, John Thune's both of those guys have been incredible. And we got a bill passed that I said, let's see if we can get it all done. Because these Democrats are like insurrectionists, okay? They're so bad for our country. Their policy is so bad for our country. I said, let's see if we can get it all done. And everybody said it's not doable. Because it's the biggest bill ever passed in the history of our country. And we got it all done. We don't need anything else. We got everything we want. And now, because of that, that's a big reason why the companies are coming in. You know, 1 year depreciation, 1 year write-off, 1 year expensing. Nobody's ever seen anything like it. So they're coming in from all over the world. But to have a great country, you can't have crime. And We don't have crime, but we have cities where there's tremendous crime. And Chicago's one of them. And if the governor can't straighten it out, we'll straighten it out. Thank you. A question for the president.
Do you remain committed to,
Mr. Prime Minister, I'd like to know how come the UK and the European Union have succeeded to sign deals and bring the tariffs down, and Canada still hasn't been able to do the same?
Yeah, because they're not located right next to each other. It makes it, in many cases, it's much better and easier. But
yeah, and if I may, let's be clear about the relationship as it stands right now. We are the second largest trading partner of the United States. We do a lot of trade going across the border where we're cooperating, first thing. Secondly, we are the largest foreign investor in the United States. $500 billion in the last 5 years alone, probably $8 trillion in the next 5 years if we get the agreement that we expect to get. Thirdly, there are areas, as the President just said, where conflict, maybe not so much conflict, we compete. There are areas where we compete, and it's in those areas where we have to come to an agreement that works. But there are more areas where we are stronger together, and that's what we're focused on. And we're going to get the right deal. Right deal for America, right deal, obviously, from my perspective, for Canada.
Including one thing that, wait a minute, easy, wait. So one thing where we are working very closely is the Golden Dome. That's the protective mechanism, and you see how that works. It's unbelievable. Ronald Reagan wanted to have it, and at that time they didn't have the technology, even close to the technology, but he was advanced, and we'll be working together on a Golden Dome for the two countries, and it's something that I think is going to be very important, especially when you look at the world, you look at what's happening. We want to have that protection. It's really amazing. The technology is unbelievable.
Mr. President, why do you say some federal workers should not get their back pay? Why do you say some?
Well, you're going to have to figure that out, okay? Ask the Democrats that question.
Go
ahead.
Mr. President, just to follow up there, I mean, the law says that when the government is reopened, that workers will receive their back pay. So are you going to define the law there, or what do you?
I follow the law, and what the law says is correct, and I follow the law.
Mr. President, will Canada be leaving empty-handed, or will will Mr. Carney be leaving Washington with a deal on tariffs?
I think they're going to be very happy. We have a lot of things that we're working on that people don't talk about. They talk about, competitiveness. He's a very competitive person. And they talk about things that we don't necessarily agree on. But I think they're going to walk away very happy. I think so.
On all your
trade deals that you've signed, there's been a minimum tariff that countries have got. When the USMCA gets renegotiated, do you want a minimum tariff on goods between Canada and the U.S.?
Well, we're going to have tariffs between Canada, and, they have them with us. I will say with our farmers, as you know, they went up to as much as 400%, 250, 300, and even one at 401. We found one having to do with a very small product, but it was high. So we've always had tariffs between the two of us, and actually Canada was charging us very high tariffs on our agricultural things, a lot of our agricultural product, and that's one of the things that we talk about for bringing that down. So this is a mutual thing, but. We've been charged tariffs. Look, we're the king of being screwed by tariffs, just so you understand. And I'm not talking about with Canada. I'm talking about with countries all over the world. When you look at Europe, when you look at China, when you look at all of the, almost every country charged the U.S., we didn't charge them. Because we were led by stupid people in many cases. Stupid people. They took advantage of our country. They're not taking advantage of us anymore. If you looked at European Union, they're all my friends. I don't blame them. I blame our presidents. I blame our past presidents and, business leaders. But we are the king of countries that have been taken advantage of for many, many years. We've been paying trillions and trillions of dollars and receiving nothing at all. As an example, prior to the deal with Europe, where they pay a lot of money, but they're happy and I'm happy. The deal was good. It's a fair deal, but it wasn't fair. You couldn't put a car into Europe. You couldn't sell your agriculture into Europe. You couldn't do anything. And now we have it so that it's open. We charge them tariffs. We didn't charge them tariffs a car. They charge us tremendous. I said to Angela Merkel once, I said, how many cars have gone to Germany from the United States? And she said, well, I don't believe any. And I said, you're right. You're right. Well, that doesn't happen anymore. And they're paying a fair amount. It's just a fair amount. It's not, I could ask for much more. It's a fair amount. But the United States now is using the same thing that they've used on us. And I just can't believe it's taken presidents so long to do this. And again, we're going to treat people fairly. We're going to especially treat Canada fairly. But I can't believe it's taken so long where we get charged and don't charge them. Japan was a good example. We made a deal with Japan. You saw that, Mark? A deal with Japan. It's a much different deal than we've had in the past. But they would send us millions of cars, no charge. We weren't allowed to send them cars. We sent them no cars. I doubt you had one car go into Japan because we were restricted. They didn't want our cars. Same thing with Europe, same thing with other places. So now all we do now is fairness. But fairness leads us to the most successful country there's ever been. You know, we have some advantages over other countries, and we do have a great market. We have an amazing market. But you know what? If I let this go, if we didn't win this election, if we had these people that were running, that were ruining our country, destroying our country with their open borders and men playing in women's sports and transgender from everybody and windmills all over the place, if we allowed that to go on for another couple of years, we would be, I'm not sure that we'd even have a country. Yeah, Brian. And by the way, I'm not sure we would have even had a country. And now we have the most successful country in the world. Brian?
Yes, sir. What is your message to Democrats ahead of a next vote to open up the government? The American people is saying, open the damn government. What's your message to them right now?
Well, they're the ones that started it. They're the ones that have it. And it's almost like a kamikaze attack by them. You want to know the truth? This is like a kamikaze attack. They almost, you know, they have nothing to lose. They've lost the elections. They've lost the presidential election in a landslide. I saw the other day where Kamala said this was a very close election. This was one of the biggest sweeps that anybody's ever had. Won the popular vote by millions, won the Electoral College by a massive amount. They said, if I got 270, that would be great. But I got, I think, 312 or 315, and they got 220. So, you know, we won that. But we won counties. The big thing is counties. So out of all of the counties, thousands and thousands, we got 2,500. They got 525. It was a landslide. And we listened, oh, yes, it was close. It was one of the greatest victories ever. And it was a mandate to do what we're doing. And I hope, and Mark wants this as much as I do, we are very close to making a deal on the Middle East that will bring peace to the Middle East. After all of these years of millions and millions, tens of millions of people being killed, there's a chance to bring peace to the Middle East. In addition to that, I made 7 other deals, and they're, you know, great. And we're, you know, things are happening with respect to Russia, Ukraine. That's one that last week, Mark, 7,812 people were killed. Soldiers, mostly soldiers. Yep. But 7,000, more than 7,000, almost 8,000 soldiers were killed. It's a crazy thing. I thought that would have been one of the easy ones. I get along very well with Putin, and I thought that would have been, I'm very disappointed in him because I thought this would have been an easy one to settle, but it's turned out to be maybe tougher than the Middle East. We'll see what happens with the Middle East. The Middle East. Go ahead, behind, yes.
Is the fentanyl crisis over with Canada, with the Canadian border?
Is what?
The fentanyl crisis.
No, it's not over. It's never, I think it's never going to be over, frankly. But they've done, Canada's worked hard, and they've done a much better job than in the past. We have very few people coming in through our southern border, too. worked with Canada, and we've worked with Mexico, so we've made it a lot better.
Look, Canada is too much.
Wait.
On fentanyl, any amount is too much. So we've gotten it down. It's down substantially. It's less than 1%, but it's still too much. It's too much at home in Canada.
A lot of people.
Yeah, we got to stamp it out.
USMCA, are the two of you both committed to seeing it through in the renegotiation of that deal that you made?
Well, we can renegotiate it, and that would be good, or we could just do different deals. We're allowed to do different deals if we want. We might make deals that are better for the individual
What's your preference?
countries. I don't care. I want to make whatever the best deal is for this country, and also very much with Canada in mind. Yeah, go ahead, please. Go ahead, sir.
Sir, on China, what more can the United States and Canada do together to counter China?
Well, you have to be able to compete. They're a great competitor, and Mark and I both know that, and you have to be able to compete. We have big advantages over China for lots of different reasons, and I think we're doing very well with China. I get along very well with President Xi. I'm going to be meeting him in a few weeks, as you know. I'll be meeting him in South Korea. But we've had a very good relationship for a long time. But you have to be able to compete. To do well with China, if you can't compete, you're not going to do well with China. And Canada is very competitive. I can tell you that. Canada is a very competitive country. And I think Canada's done very well over the years with China.
Yeah, we have. But we'll do better together on that.
Mr. President, on Golden Dome, Middle East, what guarantees are you giving your Arab partners that Israel will not resume its offensive after the hostages are released?
Well, the primary guarantee is once this deal happens, if it does happen, look, they're in negotiations right now, we are going to do everything possible. We have a lot of power, and we're going to do everything possible to make sure everybody adheres to the deal. Okay? Oh, sure. I mean, it's they're all Democrat delays. There are delays at the airport. That's standard. And again, this is something that every day we put forth a bill. It's just a continuation. It's a very simple thing to sign and very simple to do. And I really think that these are people that I think they have nothing to lose. They have a party that's out of control. They have no leader. Nobody knows who the leader is. I look at people with very low IQs like Crockett, this woman Crockett. I never met her, but she's a low IQ individual. I look at AOC talking about how if they want to negotiate, they can come to my office. She's not in that position to do that. And who the hell is she to say that? And then I watch Nancy Pelosi not knowing what to do. I watch their leadership. Look, Schumer is petrified of primary because he's not going to win probably against anybody in a primary. You know, Schumer did the right thing, but he handled it badly. Originally, a year ago, he did probably the right thing, but he handled it badly. I think Schumer's incapable of making a deal. They are a mess. They're a party that has no leadership. They have, and they have no policy. You know, I think we have great leadership, but we also have great policy. We have strong borders. We have no men and women's sports. Basic things.
체결되었습니다. 확인
We're not
바랍니다.
going to take your child away and change the sex of your child. We're not going to do things like that. What they're doing to the country is so incredible. And they got away with it with all their woke crap, and now it's stopped. And we have a country that's based on common sense and strength and intelligence. I mean, we have the United States of America, and I say it all the time. Other leaders have told me this. Mark hasn't yet, but I think he would. A year ago, we were a dead country, and now we are the hottest country anywhere in the world. Maybe Canada. I'll give Canada, but because I do like Canada. But you know, we're the hottest country in the world right now. There's never been a country that has the kind of money coming into it. There's never been anything like this. There has never been a country that if you take $1 trillion, that would be unbelievable. We're going to have over $20 trillion invested in this country. There's never been anything like what you're seeing. And it's based on good policy and common sense and leadership. Yeah.
Mr. President, what is Canada giving you in return? If you say Mr. Carney's going to be leaving Washington happy, what's Canada giving you in return?
Well, you'll find out. But I think the people of Canada they will love us again. Most of them still do. If you say only 25%, I assume a lot of them. I think they love us. And you know what? I'm not the biggest hockey fan, but I like it a lot. And I watched some of the greatest hockey games I've ever. How good were those games, right?
Yeah, very good. We're coming down for the World Series, Mr. President.
Oh, good.
Canadians.
By the way, your team is looking pretty good.
President, will you sign a trade deal with Canada that doesn't include supply managed goods like dairy, for example? If the federal government.
Well, a deal would include dairy. I mean, it's going to include everything. We'll do a comprehensive.
Have you identified programs to eliminate under this shutdown?
Oh, sure.
Which ones?
We have a lot. I'm not going to tell you, but we'll be announcing it pretty soon. But we have a lot of things that we're going to eliminate and permanently eliminate. You know, one of the things that we have is some advantage, you could say, but because of the shutdown, which I think they made a big mistake, we're able to take out billions and billions of dollars of waste, fraud, and abuse, and they've handed it, you know, on a silver platter. And you know Russell Vogt, he's a serious person, very serious person, and he's sitting there and he's getting ready to cut things. And this is something that was handed to us by, I assume, Schumer. I just don't know if Schumer has any power anymore. I look at your leadership. I don't know who to speak to. I'll tell you what, I'm getting calls from Democrats wanting to meet. I never even heard their names before, and they're claiming to be leader. The Democrats have no leader. They remind me of Somalia, okay? You know? And I met the president of Somalia. I told him about the problem he's got. I said, you have somebody from Somalia who's telling us how to run our country. She's from Somalia. He said, would you like to take her back? He said, no, I don't want her. Okay, you know who I'm talking about?
주문 청산이 완료되었습니다.
Well, I can tell you, I'll be able to tell you that in 4 or 5 days if this keeps going on. If this keeps going on, it'll be substantial. And a lot of those jobs will never come back. But you're going to have a lot closer to a balanced budget, actually.
Is there anything the Prime Minister has done that's making it more difficult to reach a deal?
Say it?
Is there anything that the Prime Minister has done that's making it more difficult or easier to reach a deal?
No, I think he's a great Prime Minister. I mean, he could represent me anytime. I will tell you, I'm not saying that because he is a very strong, very good leader. He's a nice man, but he could be nasty. He could be very nasty, maybe as nasty as anybody. I think Canada is, let me put it this way, I can tell you this because I deal with lots of leaders all over the world. He is a world-class leader. He's a man that knows what he wants. And I'm not surprised to see that he won the election and won it substantially. And I would think he's more popular now. He's a good man. He does a great job, and he's a tough negotiator.
So then what's holding things up? If he's a great man and you want to do a deal with Canada, why aren't you?
Because I want to be a great man too. Thank you very much. Thank you, everybody. That could have been good. That could have been good. Thank you very much. Thank you.
All right, everybody out. President Trump, Prime Minister Mark Carney, that had to be the loudest conversation in the Oval Office that we've heard in some time. Live here on Bloomberg Radio, Balance of Power. I'm Joe Matthew alongside Michelle Jamrisco in Washington. Thanks for making this program part of your Tuesday. Really interesting. They sure seemed like they were getting along, and a number of headlines crossing the terminal with regard to trade. You do get the sense, Michelle, that we could be on the verge of a deal here. These were two gentlemen who had nothing but nice things to say about each other and each other's respective countries.
A lot of flattery, a lot of laughter, and it was remarkable. The first chunk of that conversation was remarkably on point, very focused on trade.
True.
Notable, though, the one thing that they seemed to agree on is that they wanted to remain competitive competitive with each other. So each kind of digging in on their side. Trump talking a lot about autos, Carney talking about a range of issues. And of course, there's layers and layers of tariffs that Carney would like to see removed.
That's true. We suspect that we'll hear more from the president, likely on Truth Social, is the way these bilateral meetings and state visits have gone, if there is, in fact, some news to come from this. Talked about a lot of other issues, of course, because they opened this to the floor, and we want to bring Bloomberg's Tyler Kendall back into the conversation with us here in our Washington bureau. Tyler, I heard the word insurrection a couple of times here, and I think that's pretty deliberate. When the president was asked about troops in American cities, he said, Chicago, a city with a lot of crime, and if the governor can't do the job, we will do the job. Describes D.C. as a raging hellhole, or at least it was before the National Guard troops rolled in. This idea, though, that Stephen Miller has put forth, political insurrectionists, the local authorities who are pushing back on these troops coming to town.
Right, it does continue. What's really been an escalation in rhetoric from the White House when it comes to this issue. It's something that we're watching closely to see how these local cities are going to end up responding here. It kind of dovetails into this other issue, though, when we are talking about running the government and the government shutdown, because we heard some equally harsh words from the president during these remarks, really pointing to the Democrats related to the moves that they're taking against the troops going in, but also the moves that they're taking, as he's saying, holding the government hostage when it comes to those reopening negotiations. It was really interesting to hear some of the headlines come from President Trump on this, telling reporters in the room that in 4 to 5 days, we're going to hear where he stands on those potential layoffs. We know that the threat of permanent layoffs has repeatedly come into the discussion, but we've yet to see it really come to fruition, which has raised questions about whether or not this is a negotiating tactic or part of the administration's broader agenda.
It's really something last evening, Michelle, the president made reference to a deal, or at least talks with Democrats on a deal to extend Obamacare subsidies. They kind of walked back those comments, but, Bloomberg's Skylar Woodhouse in the Oval Office, they're talking about back pay, which also remains a pretty big question here.
Yeah, that's another moving part, and notable. You talked about that exchange yesterday. It'll be interesting to see if the Democrats seize on that again today, because Trump did open the door to those sort of healthcare talks that every other Republican was saying were off the table before he then closed the door in a Truth Social post hours later. So we'll see if they can kind of seize on that and say, wait, are you serious about talking about this now, or are you pushing it past the shutdown, which he continues to blame on Democrats?
The question about whether all federal workers would get back pay, the president was first asked about it, Tyler. He said it really depends on who you're talking about. For the most part, we're going to take care of our people. Then he said there are some people that really don't deserve to be taken care of, which prompted Skylar's question. Do we know who he meant?
No, at this point, I think Skylar's question was trying to clarify what the president meant. Now, of course, this comes after our own reporting, a person familiar telling us here at Bloomberg News that there is this draft memo circulating from OMB Director Russ Vought that could potentially mean that the White House is looking at not giving back pay to those federal workers once the government reopens. They're taking aim at this 2019 law that was enacted after the last government shutdown under the last Trump administration, which is broadly seen as a durable legal basis for federal workers to get back pay once the government reopens. Instead, it appears from this memo that the OMB is arguing that Congress would have to specifically appropriate these funds, that it's not automatically granted. So it's something that we're going to be watching really closely, because as you both know, there are about 750,000 federal workers that are estimated to be furloughed. This is raising the stakes of these talks. Of course, other pressure points really coming to head this week when it comes to raising the stakes. Friday, October 10th, is going to mark the first missed paycheck for federal workers. And then I know that you're watching closely the WIC program, that key nutritional program. That could run out of money this week, and I expect if that happens, federal assistance for women, infants, and children, that would really sound some alarm bells around here.
Be a different layer on the story. Tyler, thank you so much. Bloomberg's Tyler Kendall, our Washington correspondent, with us here in the nation's capital. Tyler, referring to the Government Employee Fair Treatment Act of 2019, the administration in that OMB memo suggested that it was misconstrued, or, in the words of one source talking with Politico, deficient, because it was amended after it was passed and may not cover all of these furloughed employees. That's where we start with our political panel today. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us. Jeannie is, of course, our Democratic analyst. political science professor at Iona University and democracy visiting fellow at Harvard Kennedy School's Ash Center. Rick Davis, Republican strategist partner at Stone Court Capital. What do you think about this, Jeannie? That back and forth with Skylar Woodhouse. She said, why shouldn't some feds get back pay? The president said, you're going to have to figure that out. Who is he referring to?
Yeah, I don't think we know, and good for Skylar for trying in that very loud meeting. So good for
yes,
her
indeed.
for getting her voice through. It's incredibly difficult. And he did not offer an answer. And I think it's very curious. You were all just talking about this piece of legislation. Who wants to be on the political side of going to Congress and voting not to give back pay to a number of federal workers? I think that would be fascinating. And I can't imagine Republicans are stomping over there to make that vote, because that's a very hard vote to make. We can't forget that House and even the Senate are so narrowly divided that you would lose the House as Republicans if you're voting in those purple districts against that kind of back pay. So I'm not sure why they would set up Republicans to take that vote.
Well, Rick, let's talk about the negotiating tactics here. We're a week into this. Both parties seem to think that they have the leverage. Where do you think the Democrats can maybe respond to the exchange we were talking about last night with, Trump opening the door to healthcare talks, and then today with this furlough and back pay talk? I mean, is there any opening for the Democrats to kind of gain in their pressure campaign on this?
Yeah, it's pretty clear that Trump got ahead of his own team at the White House yesterday by saying, hey, we got to take care of this ACA issue. And that was music to the Democrats' ears, as you point out, Michelle. I mean, like, they were waiting for that kind of a conversation to take place. It's not totally clear to us that he was actually talking to any Democrats about putting the fix in and cutting a deal that would reopen government. But it's certainly on his mind, and that was the tell that they were all looking for. Okay, we can get a deal from this White House. And I don't actually think it's a coincidence that then this morning, OMB puts out a memo trying to change the topic. Government employees are going to get paid. It'll go to a lawsuit if it has to, and the courts are going to defend the act that Donald Trump himself put into effect after a couple of closures of the government during his first term. And if they can't get it done legally, Congress is going to fix it, because the last thing Congress, Republican or Democrat alike, want to do is stiff a bunch of government employees who did nothing but serve the government, especially showing up today to work 7 days into a government shutdown, not getting paid.
The talk about insurrection was really compelling, Jeannie. And look, this is the way it goes. We're supposed to be talking about trade with Canada right now, but the conversation almost immediately changed as soon as this went to questions with reporters. And I bring it up because there's talk of the president actually invoking the Insurrection Act to justify the use of troops, depending on how some legal rulings pan out this week, the use of troops in American cities. He called Chicago a city with a lot of crime, and if the governor can't do the job, we'll do the job. He described D.C. as a raging hellhole and said that Democrats themselves were insurrectionists, echoing Stephen Miller, who called them political insurrectionists. Is this the building of a case in the public square?
Yeah, do you guys, I'm sitting here watching this thinking, what is Mark Carney thinking as he is sitting there to talk trade and tariffs and border? And this is what he is hearing. But it feels like so many of leaders from around the world have now gotten the message on how to deal with Trump. And I think we saw that with Mark Carney. So good for him. And, this is typical Donald Trump. We can't forget the largest insurrection in modern American history happened under his watch on January 6, 2021. First day in office, first act in office. What did he do? He pardoned everybody involved in that insurrection. And now, just as he is wont to do, he is turning the tables and calling Democrats. And of course, you have Stephen Miller calling Democratic politicians and also judges, legal and political insurrectionists. This is typical Donald Trump. Whatever he is accused of, he turns the page on his opponents. And I think that is what we are seeing. And of course, in law, insurrection is a very, very serious crime, as Donald Trump well knows. And so it is not lost on any of us that they are using that kind of very serious language against their opponents. But they would probably come back and say, well, it was used against Donald Trump and we are turning the tables.
Well, Jeannie, you mentioned foreign leaders have learned how to deal with Trump, and especially in those Oval Office meetings. I was struck by how Carney opened. This is a guy who came into office pledging to stand up to the U.S., and he opened with a very flattery-prone diatribe about how Trump, deserved a lot of credit for resolutions. He didn't say the 7 wars that Trump has claimed, but he did point to, especially on a day like today, October 7th, especially the work on the Mideast peace talks. How much of a distraction this week do you think, especially Friday, when we get the Nobel Peace Prize winner, is that from all of these other issues that we are talking about today and throughout this week?
Yeah, Michelle, I was thinking that I wouldn't have been surprised if he endorsed Trump for that Nobel Peace Prize that we all know is coming. And I'm worried about whoever wins it, because I think Trump may have them in their sights on his social media page the very next moment, if it's not him, of course. But, I do think this is all weighing very, very heavy. Certainly on the anniversary of October 7th. And I think for Carney, we can't forget that how strange a world we live in. One of his big opponents, the conservative leader, went around Carney just the other day offering to negotiate with Donald Trump, saying Carney is not being effective. And so I think that's part and parcel of what we're seeing with Carney and the sort of flattery, because we know that domestically in Canada, to your point, Carney came in with very tough talk. He hasn't been able to deliver. They have big economic problems and housing, inflation, and other things in Canada. And of course, he now is faced with trying domestically to prove that he can succeed in the way he promised. And so I think that's what we're seeing. He's going to do everything he can to get something out of Trump. I'm not sure it'll be today or this visit, but he has sort of a gun to his head, if you will, from the domestic audience over there.
Well, Rick, President Trump calls the Oval Office the greatest show on earth, and this is what we all do when world leaders come to town. I'm wondering what you make of the Carney performance today. He called Donald Trump a transformative president. Transformation he pointed to in the economy, unprecedented commitments of NATO partners to defense spending. He talked about peace in India, Pakistan, through Azerbaijan, Armenia, and disabling Iran as a force of terror. Knowing, presumably, there's a deal at the end of this. Rick, will he get one?
Well, he's certainly playing the script out. As you point out, it is performative. And Oval Office visits always have been pretty performative, regardless of what president's been in there. But this takes it to a higher level. I noticed a lot more gold in the fireplace backing the two gentlemen today in their discussion. The constant renovations of the Oval Office are actually highly entertaining. But at the end of the day, I think the world leaders have figured out a routine, right? And the routine is, you arrive to great pomp and circumstance. You do something before you leave to go see him that's positive toward him. And number one thing Carney's done that he did not do the first time they met in March is he just not interrupting the president. He's waiting his turn. He's looking for an opening, and he's responding when asked to respond. But let the show go on. It's a Trump show in the Oval Office. It should be. It's the president's of the United States office. And yet I do think that these world leaders now have a routine, and by and large, they get something for it. And so hopefully for the people of Canada, this will not go unrewarded. And as Jeannie points out, maybe calm some of the political storms that exist around our relationship in Canada. And, it will be something if the Blue Jays wind up in the World Series.
Fantastic. Rick Davis, Jeannie Shanzano will be back in our second hour. Bloomberg Politics contributors, thank you both for the insights. Mark Carney, President Trump have wrapped their conversation with reporters. They're going to go behind closed doors now. Michelle, you wonder if a deal does emerge today.
Yeah, we wonder about a deal. We also wonder about any other of the many, many topics they could be talking about. We didn't dive into it, but Arctic security, Indeed. China was mentioned.
All on the menu today
Ukraine was
at
not,
the White
but that's
House.
also potential.
Yeah. Day 7 of the government shutdown. Come back tomorrow. Michelle Jamrisco on Bloomberg.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
Day 7 of the government shutdown. Welcome to the Tuesday edition as we head for more votes without an end in sight, even after President Trump suggested healthcare talks were underway with Democrats. We're going to get into this and seek some off-ramps when we talk to Republican Congressman Mike Bost from Illinois. He'll be with us live from Capitol Hill, and we'll focus on Prime Minister Mark Carney's visit to the White House today, the U.S. and Canada in trade talks, when we spend time with Bloomberg Washington correspondent Tyler Kendall. Analysis from our signature panel. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are with us for the hour. And we start, as always, by setting the baseline on Wall Street. Let's get to the Tuesday trade first with Charlie Pellet. He's at World Headquarters in New York. Charlie, what do you have?
Thank you very much, Joe Matthew. We are lower across the board right now with the Dow, the S&P, NASDAQ, all in the red. Stocks fell after a series of records, showed signs of buyer exhaustion. S&P dropping. Tech giants are dragging down the benchmark. Here's where we stand. S&P right now at 6707, looking at a drop of 32 points, down by about 0.5%. Dow Industrials down 176, down 0.4. The NASDAQ Composite Index down 0.7%. The NASDAQ 100 Index down 0.6%. The Russell 2000 Index of small cap shares slumping now by 1.1%. The 10-year at 4.12% with the 2-year 3.56%. Spot gold is up $16 the ounce to $39.77, higher now by 0.4%. And West Texas Intermediate crude down 0.3%. WTI 61.51 a barrel. Bitcoin down 2.8% at 121,735 on Bitcoin. Dell shares higher after a bullish outlook. Dell Technologies roughly doubled its growth estimates for sales and profit for the next 2 years. We've got Dell higher now by 2%. And IBM shares are gaining after the company announced a plan to integrate Anthropic's artificial intelligence technologies into its software solutions. IBM up now by 2.1%. Recapping, stocks lower, S&P down 0.5%. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. And back we go to Washington. Once again, your host. Here he is, Joe Matthew.
All right, Charlie Pellet, many thanks, Charlie. On this day 7 of the government shutdown, we'll have more on Wall Street and what appears to be a sagging session, at least so far, when we connect with Charlie about 20 minutes from now. We do this every day here on Balance of Power, on Bloomberg TV and radio, on YouTube as well. Search Bloomberg Business News Live if you want to catch us here in the studio. With no path to freedom here, at least in terms of government funding. We're going to talk about this with Tyler Kendall in a moment, having heard from the speaker earlier today. Mike Johnson is still in town. In fact, a lot of lawmakers are, as we'll hear from Chairman Bost in just a moment. He's live on Capitol Hill, but it's, of course, the Senate that has to vote, and we're expecting more where this came from. Another failed round without enough Democrats to pass the bill. Mike Johnson speaking earlier, as I mentioned. Here's the speaker.
Yes, he wants to solve problems. The president is a deal maker. He likes to figure these things out and works towards solutions, and that's why he's a bold, strong leader that America needs right now. I'm excited to work with him on that. I have the exact same opinion and position, but again, none of this can happen until the Democrats stop inflicting pain on the American people and turn the lights back on in Congress and get everybody back to work.
Tyler Kendall with us in Washington with more on the shutdown and other news coming out of the White House here. There's a question today, Tyler, about, based on what we just heard from the president and a memo that went out from OMB earlier, the Office of Management and Budget, that some of these furloughs may not necessarily lead to layoffs, but they also may not get back pay, which is something we had not heard before. The president says it really depends on who you're talking about. There are some people that really don't deserve to be taken care of. We don't have a sense of who he means, do we?
At this point, we don't. And we heard reporters trying to follow up for exact clarity on what this could mean. But it comes after we saw this OMB memo circulated, written by the OMB director, Russ Vought, suggesting that the White House is considering not issuing back pay once the government reopens. Now, it appears the OMB is taking aim at this law that was enacted, as you well know, after the last shutdown in 2019. And that was considered to be this legal guarantee that federal workers would get back pay after a government shutdown. But it appears that the issue that they're taking with this is that Congress would have to appropriate those funds specifically. This shouldn't be considered to be an automatic guarantee, and that's really what we're going to be looking for here. It's definitely raising the stakes. President Trump said in this Oval Office meeting with the Canadian Prime Minister Mark Carney that in the next 4 to 5 days we should know where those potential permanent layoffs shake out. But Joe, we're up against a pretty firm pressure point later this week, Friday, October 10th. That's going to be the first missed paycheck for many federal
workers.
He said
4 or 5 days. He must be thinking, I guess, about Monday, which sounds to me like he wants to give leaders on Capitol Hill room to make a deal or peel off enough Democrats to pass the CR.
Well, it was interesting to hear President Trump basically signal that he could be open to negotiations. That was broadly taken as this positive step, even as Republicans have really been standing firm here that the government needs to reopen before any of these talks can take place. Now, what I'm really watching for is where a potential agreement shakes out on expanding those Affordable Care Act premium subsidies, whether or not a commitment to an up and down vote would potentially be enough for Democrats, because the thing with these subsidies is that Republicans are divided on them. Many of them go to people in these states that President Trump won in 2024. These are red states that didn't expand Medicaid and ultimately have a lot of people on Obamacare insurance exchanges.
That's right. This, of course, all, as Tyler references, came in the middle of an Oval Office meeting with another world leader. Prime Minister Mark Carney is in town. They're here to talk about tariffs and trade. There were a couple of questions about that. Most of this was on domestic politics, though, and that's what happens when you have a room full of American reporters. But do we expect an announcement from the White House today on a deal with Canada?
Well, it was a relatively warm meeting, as you saw. Mark Carney calling President Trump a transformative president, but we can't lose sight that Mark Carney really did campaign on countering President Trump and his trade agenda, and we really haven't seen a lot of movement when it comes to the trade negotiations. Canada still facing that 35% tariff for non-USMCA compliant goods, though a lot of goods coming over the border, about 55% or so, are compliant. But it's really those sector-specific tariffs that I'm watching for to see if there's any sort of movement when it comes to negotiations. They are 50% for steel, aluminum, and copper. Those are really high rates, and they're impacting a range of sectors when it comes to Canada. It was interesting, though, because President Trump seemed to demur multiple times when asked, what would it take? What can Canada give in terms of concessions to get this over the finish line? As you well know, there's a range of things that this White House is looking for, from market access to curbing fentanyl to then digital services taxes, something that has repeatedly come up in the conversation.
A lot going on around here, Tyler, and it certainly reminds us how much has yet to be determined when it comes to Canada. We've spent so much time looking at Europe, looking at India, looking at China, that our nearest neighbor and biggest trading partner has yet to be resolved. Tyler Kendall, frequently on the North Lawn of the White House. Lucky to have her in studio today, our Washington correspondent. Tyler, thank you so much. I'm Joe Matthew in Washington, and it's great to have you with us here as we continue the conversation with someone who's in the middle of it all with regard to the government shutdown. As I mentioned, not all lawmakers have gone home, and that includes Congressman Mike Bost, Republican from Illinois, who is chair of the House Veterans Affairs Committee. And just to give you a sense of who we're about to talk to here, as I like to let you know exactly where a lot of these members are coming from, because, they're real people too and bring a lot of unique experience in many cases today. Mike Bost, former firefighter, U.S. Marine, ran his family's trucking business, member of the Main Street Partnership. How did I do, Congressman? Will it be the middle? Will it be the Main Street Republicans who figure a way out of this?
You know, Joe, I think it's a case where we need to make sure that the Senate today makes the vote and comes back today. Now, whether that happens or not, I don't know, but I know that every day of shutdown goes on, more pain is felt by more people. And when I'm chairman of the VA, I know about where we're going to see those shortfalls. Right now we have several, though we have put a front load on the medical, most of the medical providing, and most veterans won't leave it out on their main services, which is their health care. But when you start talking about TAP programs, people leaving the military, when you start talking about the Fox grants, those Fox grants are special grants set up for contractors to provide mental health. When you start talking about daycare workers for those people that are homebound veterans, those are all on contracts. Yeah. We're trying to work with the Secretary at this time to make sure those keep going, but each day we go further, that is more and more danger. Remember, we in the House, we've done our job, we send it to the Senate keeps bringing it back up. There's those holdouts. They need to go ahead and open government, and then we can look into all the other things they're bringing up, because those are those things that we can negotiate while we work on this budget, but not while we're in a shutdown.
Understood your point. Mr. Chairman, we spoke with the Secretary, Doug Collins, about what this means for the agency and what it means for the delivery of veterans services ahead of our conversation with you today. Here's what the Secretary told us.
The positive news to our veterans, especially for those who get the 9 million plus who get their health care through us, that they're not going to see any difference in what they have seen. Our vet centers are still open. The counseling is going on. Our mental health outreach and placement are still going on. So this is a good time for that. And I think really is to look through this is we're going to do the what we have to do to take care of our veterans, and we have the funding to do that.
Did the Secretary frame that appropriately? Because his message that
well.
evening was that benefits are not being affected by this. You're looking down the road, though, Congressman. How long
I'm looking down
before
the
they
road.
are?
And let me tell you that right now we are already operating without without the ability of Congress to authorize those particular side contracts. Everything the Secretary was talking about is the actual function of the VA that is the VA not contracted. As we're moving forward, we're a little bit worried as those contracts are starting to not have authorization number. Are those things that can lose out? Your health care is still going to be there. Your appointments are still going to be there. However, when we start talking about the TAP program, that's service members leaving. When you start talking about home care, when you start talking about the Fox grants, which is mental health, we have other mental health programs. But each one of these is important in itself for certain individuals. We're okay now, and I'm glad we are, but we've got to pay attention. This can't go out for a long time.
Some are suggesting we could have another record here. I'm not sure anybody has a clue at this point, Congressman, as long as the leadership are not engaged cross aisle here. And I just wonder what you think. The president mentioned last evening from the Oval Office that talks were underway with Democrats on health care. Is that a plan that could be done through back channels, that could be done quietly to bring Democrats to the table, or does there need to be some sort of grand bargain here that involves government spending?
I really believe that if we come back and then we can work on that. Remember, that problem doesn't come to fruition until the 31st of January. This CR only gives us to the 21st of November. So we come back, we start negotiating these things. But the reason why this is difficult to negotiate is just that. It's difficult to negotiate. Even though we don't want to see anyone lose their health care, if we're having to subsidize the health care, there's a problem with the health care system in the first place. And we're not subsidizing the individuals, we're subsidizing the insurance companies. So therefore, the minds need to come together, but they don't need to come together by scaring our general public in a shutdown. We need to come back to work. We need to go to work on these problems. We're not saying they're not there and we don't need to work on them, but we can't be working on them while we're playing these games and you're holding things hostage. But if you look at our Democrat colleagues, many of the leaders on the other side, 13 times they voted to keep the government open with this same type of clean CR when Biden was in and gave quotes like, we shouldn't hold the American people hostage. We've got to make sure that we don't use it as a negotiating tool. Instead, we keep the government open so that we can continue to negotiate. That's exactly what they said. They were right then, they're right now, that would be right now, and that's what we're saying.
Congressman, our listeners and viewers should know that your 12th district in Illinois is not part of Chicago. It's
not
down
at all.
the southern part of the state. You're closer to St. Louis than you are Chicago, actually, in the western part of your district.
Yeah, St. Louis is the northern part of my district. St. Louis is the northern part of my district, and I have 1/3 of the state's land mass. So, my major
all of that
employer,
said, you got a lot of farms there too. You've got a lot of farms, Congressman, and I'm wondering. So what are you hearing from the White House on this? Does there need to be a bailout? Should it come from tariff money? How do you handle this? If they're not buying soybeans in China, what do you do?
Yeah, we've been talking with the administration on specifically that. The tariff money, some kind of situation to help many of these farmers through this time. Understand these farmers, many of them are 4 years into their banks. 4 years into their banks where they haven't turned a profit. You can only do that so long. This would be the time to give them that opportunity while we're building those markets. I'm really, really glad that he's meeting with Canada today. Now, let me explain this, that he was right, he needed to meet with Canada, because if you're a grain farmer, it's one thing. And the USMCA was a good deal in itself. However, remember this, when you start talking certain key products like dairy, which we provide from Northern Illinois and Wisconsin, or would like to provide into Canada, Canada has a 400% tariff. When we start talking about 30%, that sounds amazing, that sounds huge. But Canada has 400% tariff on the United States. Hopefully we can work through to get fair trade like the president has always talked about, and I trust the president to do that.
What happens first, a farmer bailout or a deal with China that starts soaking up some of these soybeans?
So the way it looks right now is probably the using the tariff money to help those existing farmers because we're so far into it, unless these negotiations go with China very, very quickly. Now remember, we have to renegotiate with China because China, what they do is, when they allowed China into the World Trade Organization, they probably shouldn't have done that in the first place because you're supposed to be a free government to be part of the world trade, but that happened. Ever since then, China will come in and they'll take the commodities, whether it's soybeans or corn or whatever, and they're going to say they're going to purchase this large amount at the beginning of the planting season. Farmers will go out and plant all these the commodities, whether it's corns or soybeans or wheat, and all of a sudden, then China says, oh, we don't need that much, which causes the market to fall. The commodity now is a cheaper rate, and the farmer's out there trying to figure out how he or she is supposed to get the rate that they need to even make a profit at all. And so that's the problem when we're dealing with China, why we need to push them back to the table. Because it's either...
And so your farmers...
Yeah, my farmers are hurting.
Your farmers feel like Lucy in the football here. Do they make off with the dollar figures that we're hearing about? Is it $10 billion the president puts in a fund? What do you need?
That dollar amount is being negotiated with the chairman right now, both in the House and the Senate. G.T. Thompson is working very hard with his staff to make sure and informing us as we're moving right now. Because, you know, if a farmer's going to make it through, then you want to provide them a little bit of help. But if they're really the ones that are young farmers, or because the mega farms quite often, they hurt, but they've got enough in reserve. It's those that don't have in reserves. And so trying to get those numbers squeezed through the USDA and figuring that out is where we're at right now.
Really, really interesting. You know, we heard about back pay for federal workers when the president was talking with reporters in the Oval Office. Mr. Chairman, I don't mean to sneak up on you here because you might not have heard what he said, but there was a question about some folks not getting back pay, and he said some people don't really deserve to be taken care of. He wouldn't tell us when we followed up who he meant. Do you have a sense of who he was talking about, and do you support that view?
I don't know who he was talking about, and you know, the speaker also was asked about this morning. I'll say what the speaker said. We've always made sure that our employees are made whole on back pay. So I would say if we don't do that again, that'll be a rarity. But the thing is, if we get this done, we don't have to worry about back pay. And I'm going to tell you, I know how that is. As a young Marine, remember I was up in during the Carter administration and Reagan, but during the Carter administration, Marines and their families qualified for food stamp and WIC if they had it then, but they didn't. And so instead, what you do is you worry from payday to payday for young Marines with a spouse and with children. And those are the ones that we're seeing out there that are going to need the help, and they're going to just be dealing with, when the 15th rolls around, if they're living payday to payday, how do you go back to your creditors? Not everybody's got a parent that they can go back and reach to and say, hey, I'd really like you to send me money until I get through this. That's not how that works. Unfortunately, no pay due is a very, very bad thing for those people who make sure our freedoms are taken care of.
If you're paycheck to paycheck, this is the biggest deal there is. Congressman, I'm really glad you could join us. Mike Bost is chair of the House Veterans Affairs Committee, Congressman Republican from Illinois' 12th District. And great to have your insights with us. We'll assemble our panel next for their take on this. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are with us here on the fastest show in politics. I'm Joe Matthew in Washington. Thanks for being with us here on the Tuesday edition as we work our way toward the next round of voting on a continuing resolution to keep the government or reopen on Bloomberg.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. After several days of records, we've got stocks showing signs of exhaustion with the Dow, the S&P, NASDAQ, all retreating right now. We'll throw on the Russell 2000 index as well. That is perhaps hardest hit right now, down by 1%. Keeping it all in context, S&P trading lower by 26 points, down 0.4%, with the S&P at 67.14. The Dow down 122 right now, down 0.3%. NASDAQ lower by 0.7%. 10-year, 4.11%. The 2-year, 3.56%. Spot gold up $23 the ounce. $39.83 on the precious metal, a record, up by about 0.6%. A retreat for crude oil with West Texas Intermediate down 0.5%, $61.40 a barrel. And Bitcoin is now tumbling 3.1% at 121,427 on Bitcoin. The U.S. government says it'll be taking a 10% stake in the Canadian minerals explorer Trilogy Metals, all part of a $35.6 million investment to secure critical energy and mining projects in Alaska. Right now, Trilogy shares, they are ripping higher, up 235%. Recapping, S&P down 25 right now, down by about 0.4%. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And back we go to Washington. Once again, your host, here he is, Joe Matthew.
Charlie Pellet, many thanks on the markets, and he'll have more in about 20 minutes live from World Headquarters in New York. The great Charlie Pellet, the voice of Wall Street and the New York subway. Really interesting conversation on this day 7 of the government shutdown with Congressman Mike Boss, the Republican from Illinois, bringing his point of view here. He chairs the VA committee and has obviously his own specific concerns, but the broader view from the Republican side of the aisle. We'll be hearing from Democrat Congresswoman Melanie Stansbury of New Mexico coming up a little bit later on this hour to balance the conversation as we prepare for the next round of voting in the U.S. Senate. It is October 7th, 2 years to the day since the attacks by Hamas against Israel that killed nearly 1,200 people and kicked off 2 years now of raging conflict. Negotiations are continuing today in Cairo. They are meeting again, even on this solemn occasion in Israel, October 7th. And at 3 p.m. today, it will ricochet back to the White House as President Trump meets in the Oval Office with Eden Alexander. You may have heard about this, the American-Israeli hostage released by Hamas in May. He will be with the president about an hour and a half from now. We mention all of this, of course, because the possibility of peace following so much destruction and death appears to be at hand, with talks underway here following the president's 20-point plan hammered out with Benjamin Netanyahu, or according to some, the arm twisting that convinced Netanyahu to accept this deal, and one that we have, I guess, conditional acceptance of, if we can call it that, from Hamas. But they are obviously continuing to talk about the release of hostages and the withdrawal of Israeli forces in Gaza. More than 60,000 people are been reported to have been killed in Gaza since October 7, 2023. And we start with our panel on this today. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us. Jeannie is Democracy Visiting Fellow at Harvard Kennedy School's Ash Center, our Democratic analyst, and Rick is Republican strategist and partner at Stone Court Capital. Jeannie, it's difficult to imagine what the conversation is like today in Cairo, knowing that this is the 7th of October. Does it heighten the urgency or make it more difficult to move closer to a ceasefire?
I think we all hope it heightens the urgency. And you mentioned Eden Alexander. He is, by some reports, the last living U.S.-Israeli hostage. And I think that's going to be quite a moving moment when Donald Trump meets with him at the White House today. Another, as you mentioned, in a long line of reminders of what has happened since that horrific assault 2 years ago. I hope that it does lend a sense of urgency. The problem is we have these two phases in this deal, and by all accounts, these are still indirect talks, which is problematic, but it's also problematic that we haven't had yet out of Hamas an acceptance of both of these phases of the deal. If you just look at phase one, for instance, the release of the hostages and then a movement back of Israel, still within 4 miles in Gaza, that yellow line of the Trump administration's map. The problem is Hamas has never wanted to agree to that. They've wanted total withdrawal by Israel. So we have some ways to go, but I think there is some reason to hope because the entire world seems to be pushing Hamas to accept this deal.
What is your thought today, Rick? It's a reminder, of course, about how this started, but also it tells us how long this has been going on and how important it is for us to find resolution here. Will this group meeting in Cairo manage to get this done?
Well, it's certainly the closest step we've seen since the attacks of October 7th 2 years ago. And, and it really has ushered in a profound change in the Middle East. You look at this right now in a vacuum as a negotiation between the Israelis and Hamas. But the reality is it incorporated a region-wide war that has been perpetrated with Israel taking out Hezbollah, fighting actively to weaken the Yemeni groups that have been supportive of Iran. An attack actually on the country of Iran. I mean, like when you think about, Syria changing leadership, I mean, we are in a different world than we were 2 years ago when this attack took place. And I think that's the reason that you might actually see peace here, because there's no retreat. Iran's its weakest point. There's not really active support for Hamas. Hamas has taken on enormous losses, and there's no future for the people of Palestine without a resolution of this conflict. And so pressure is on. And I have to give credit to Donald Trump for keeping Netanyahu in the game, right? To forcing him to a negotiation that otherwise he probably would not be actively involved in. And the U.S. is Israel's last significant ally. And without us, there would be no peace.
You wonder what's next here, Jeannie. We're obviously marking October 7th today. But I just saw Marco Rubio on the couch in the Oval Office with the president. We know that Steve Witkoff and indeed Jared Kushner have both also been instrumental in getting us to this point. Who's leading the charge on this White House diplomacy?
Yeah, I mean, I think Witkoff and Kushner have been paramount. Obviously, you mentioned Marco Rubio, Secretary of State. So, I think Witkoff, who has had an awful lot on his plate, and Kushner are really been able to deal, to Rick's point, with Netanyahu. But let's remember what these talks are being described as right now, yesterday and today, as technocratic talks. Really talks about this first phase, like things as basic as the sequencing. Does Hamas have access to the hostages, both living and deceased, in order to fulfill, if they decide to, their end of this deal? And yet again, Hamas has still not agreed to any of that. And so we do have a ways to go. And speaking of Netanyahu, he is feeling pressure both internally and externally. We have these really striking polls from Israel in the last day or so showing that about 2/3 of Israelis are saying that Netanyahu should take responsibility for the attacks and resign. We're seeing that a good substantial portion believe that Israel has committed genocide. Those numbers are reflected by Israelis or Jews who live in the United States. And of course, the White House is seeing those polls as well. So there is a lot of pressure on Netanyahu. But of course, there's a lot of pressure on the Hamas political wing as well, because what are they going to have to do? They are going to have to sign their death warrant. And that is going to be very hard for any individual or group to do. But that's essentially what would have to happen for this deal to go through.
Do you mean political death warrant, Jeannie?
Sorry about that. Absolutely, political death warrant, because this says that they are disarmed, that there may be amnesty for fighters who denounce violence, but that the group itself will be disbanded and have no role in a potential future Palestinian state. And that is, as you can imagine, just like individuals, states act the same way. Very, very hard to imagine that the political and military end come to an agreement on that. They may, but they would be signing their own political death warrant there.
It does certainly sound like it. Rick, I'm assuming you look at it this way as well as obviously Benjamin Netanyahu does. He's calling for the elimination of Hamas. To what extent does that lead to a potential rebranding, however, with political leaders in Gaza assuming the role of leadership in some other group?
Yeah, look, I mean, I think it goes without saying that Prime Minister Netanyahu said at the time, 2 years ago, that the operation that he will overtake is the complete and total destruction of Hamas. And that has not happened to today. There are still people who would be considered leaders there, and they are the ones currently negotiating. Jeannie makes a good point. I'm not sure it's a political point. It actually is a death warrant for these individuals, because we only have to remember the 1972 Munich Olympic massacre, and Israel at that time said the same thing. We will hunt down the people who did this, and we will destroy them. And Operation Wrath of God did just that. It took decades, but at the end of the day, the people who perpetrate this attack 2 years ago on Israel will feel the wrath of Israel. And so this is a heavy negotiation. There'll be efforts to try and get leadership sanctuary in other cities, but they all know what we know, which is that Israel will always look for opportunities to vanquish their enemies who perpetrated these horrible crimes on their people. And that has got to be part of the negotiation that's going on today. And so, yes, there are a lot of technical issues that have to be figured out. The 20-point plan is not even close to being a comprehensive plan. But at the end of the day, all parties are now in one location hashing this out, which we have not seen happen heretofore. And I think the world is keeping pressure on these groups to try and come to an end to this carnage that's been going on now for 2 years.
It's an important moment, Jeannie, in our final minute here in our conversation. Would the political leadership of Hamas then, following the signing of any deal, essentially just go into hiding in Doha? They can never go back to Gaza, right?
Yeah, I think that's an open question, and it's a really important one, because what history shows us is that any time you destabilize a leadership, whether you describe it as evil or tyrannical or democratic or otherwise, another group is going to come in and fill that power gap. And that group can be worse than the group that preceded it. We've seen that repeatedly. And of course, as the leading democracy in the world, we must always remember we do owe to the Palestinians a right of self-determination as to how they live peacefully.
Jeannie Shanzano and Rick Davis tackling some heady issues with us today on Balance of Power, and I thank you both for the insights, and we'll keep you posted on talks in Cairo. We're back to the government shutdown next in our conversation with Congresswoman Melanie Stansbury, only here on Bloomberg.